Hey, good morning. Welcome
Good morning,
everybody
Jeff
to
Tompkins.
day 4 of the Traders
How are you
Conference. We are excited to have you here with us again today.
Hey,
We
good
are
morning.
excited
How are
for
you?
Another great
Good.
day of learning.
Good.
We hope that you've
Let's
been here
see.
for the last 3
Welcome
days,
to
taking
day 4
advantage of all
of
the
the
learning.
conference.
If you have,
Thanks.
fantastic. Let us know
Yep,
that
things
you've
have been
here
going
for the
really
last
well.
few days.
Attendance
I've
has
been here
been
for the
good.
last few days and
Registrations
loving
are
every minute of
good.
it. There's been a lot of great information and a lot of great education.
Yeah, I've been very, very happy with
and
it.
much
So
more to come.
I can hear you.
Before we get into anything here, I'm just going to go do my checks, make sure everything's working okay, and I'll be right back with you.
A little bit of camera problems, but it just requires that I set up the software beforehand. Let's see.
There you are.
Yeah, I think I'm a little bit bright. I'm going to turn that down in a minute.
Okay, everything is looking good. It looks like we are ready to go. Let me just show you where you can go to get today's schedule. So what we're going to do here is we're going to go to metastock.com. So if you just go to metastock.com, you'll see this banner right here on the home page, Traders Conference. You just click on that banner. And there we go. It'll take you right to today's schedule. It's already on Thursday there. And you can see this morning we're going to be starting with Jeff Tompkins. He'll be our first speaker of the day. Then we'll be going with Adrian Manz. If you've been here the last few days, we've been giving away some of Adrian's books. So I think we have a few of those left, so we'll probably be giving those away today and tomorrow. And that is a good note. If you have not registered already for the conference on this page, you'll want to, so you can be eligible to win prizes from the conference. And then we have this handsome guy right here, Mr. Clement. He's always great to listen to. Then we have Fausto. We have John Thomas. We have Tyler Wood talking about the CMT accreditation and organization. Marina Villatoro, and then Jeff Kilian. So we have another great day of learning. We hope you're excited. But go to metastock.com, click on that home banner, and then register for the conference. So that way we can make sure that you get entered in for the prizes. But at least come here to see the schedule. So this is going to be good for you to be able to see that schedule. Okay, looks like we're about 3 minutes out. Let me just go and work my YouTube magic here, and I'll be right back. Okay, hello again everybody. It looks like we're about 2 minutes away from getting started. Well, I look at my watch, but it's right there on my screen, 2.5 minutes away. Again, my name is Clement. I will be your YouTube host today and one of your speakers. I'm looking forward to that. I always enjoyed doing a presentation during these conferences. But as we get started today, come into the room, say hello, tell us where you're coming in from. We're here in beautiful Salt Lake City, Utah, where it's a little snowy today, which is great. We love some snow. We need some water here in Salt Lake, so that's always good for us. So tell us hello, where you're coming in from. We'd love to hear where you're from, where our viewers are coming in from around the world. So one of the things I will mention as we get started is if you have questions during the day, don't hesitate to ask them here in chat, because we pass all of the questions over to the presenters. So if you have questions, you're here to learn. Let's get your questions answered so we can make sure that you're learning what you want to be learning while you're here today. And one of the other things is we have today, we have tomorrow. Those are the last 2 days of the conference. If you've been here and you haven't taken advantage of any of the offers yet, you can go to metastock.com/conf-promo. That is where you can take advantage of the offers, or go to metastock.com/sales-chat. So anyway, let me just go do my last final checks, and I'll be right back to get this started. Okay, looks like we're all set to start it off with Jeff Tompkins. So let's go ahead and get this party started. Have a great day of learning, everybody. Over to you this morning. We are ready to go.
All right, roger that. Good morning, everybody. Still have sun in my face. I'll fix that in a second. I hope you're doing well. Good morning from Salt Lake City, Utah. We had our first little bit of snow today, so not enough to kind of make the commute crazy or anything like that. Kelly's going to fix this banding for me. So thank you, Kelly. Appreciate the assist. We have a great lineup for you today. I hope you've been enjoying the sessions as we've been doing. If you've attended some of the other sessions, you're going to know where we're going to start. And it's going to be probably the best part of the day, this legal disclaimer right here. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and Metastock should have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. A couple of things I want to say as we get going. Common questions. We are recording this event. Actually, we're not recording it. We're streaming it to YouTube. If you're joining this on GoToWebinar, what's going to happen is tomorrow, after the event's over, GoToWebinar is going to kick you the link for the recording. So I'm also going to post it in the chat for you if you want it earlier, like you want to watch more of the sessions afterwards. Totally cool. Second question that we get a lot is, well, actually, this is for YouTube. If you're watching this on YouTube, what I want you to do is, you're going to love today's session. Will you go ahead and like and subscribe for us right now? That'll help us a lot. If you have comments or questions, make sure you ask them. I'll be watching them and we'll be kind of feeding back to you. So if we'll be giving away prizes today. If you want to qualify for a prize and you're watching on YouTube, you need to make sure you register for the event so that you're on my list. I'm going to pull a list after we get started today, and we're going to do our first prize. So now would be a great time. Kelly's going to put the registration link in the YouTube chat box. If you go register, then you'll be on that list. So two more things. I want to say thank you to Stocks and Commodities for sponsoring our events today. They do a great job, and they've been supporting us for a number of years, and we really appreciate that. It's a great magazine. You should check it out. In addition to that, another sponsor that we have, CMT Association. CMT, we're really, really happy to be partnered up with, and they're such a very, very they have a great reputation. They've been working with us for about a year now. And we actually have Tyler Wood coming in to talk about the benefits of having a CMT accreditation behind your name. So that's a little bit later in the day. But thank you both of CMT and TAS for sponsoring our event. And then of course we're Metastock. We'll be talking a lot about Metastock today, but if you want to get a 3-month extended trial, you can pay for a month. We give you a second and third month for free. That means you'll be running it till February. Go to metastock.com/comp promo. If you have questions, let us know at metastock.com/saleschat or give us a call at 800-882-3040. So should we get going? Let's go. Our first presenter today is Jeff Tompkins. Jeff has a very good first name. He started teaching people how to trade on a website called udemy.com. And we've known him for a number of years now. We've helped him. We've helped him kind of create his systems into Metastock. Had a ton of people that were working in Udemy that had learned how to trade the markets through udemy.com. In the time that I've known him, he's become a hedge fund manager. He does a really, really good job with that. And I really like Jeff. He's very, very straightforward. He explains stuff in ways that you can understand him. And I think he's also a very, very good teacher. So let's go ahead and bring him on here. Jeff, how you doing?
Good morning, Jeff. How are you?
Good. I'm going to go ahead and make you the presenter here.
Excellent. Yeah, we got a little snow up here in Boise as well.
I was going to ask you that. We just had a dusting. It was enough that if you parked outside, you had to scrape off the windows, but that's it.
Yeah, same here.
All you, man. I'll get out of your way. Your turn.
Okay, great. Well, thanks for having me. Welcome, everybody. Hey, Neil. Hey, Keith, Richard, Rao. Great to see a lot of people on this morning. Bear with me. I'm a little hoarse. I was on an airplane all day yesterday, breathing the dry airplane air. So I got in late last night, but hopefully we'll be okay here. So we'll talk about a really cool setup that's particularly valuable in today's markets, the Slingshot setup. And we'll go through some examples of how we can use this to help us buy low and sell high, as well as warn us of potential market sell-offs. So it really accomplishes a lot in terms of market analysis and helping us plan our trades. And we'll go through a couple really effective indicators that we can use to identify these market shifts, market sell-offs, market rebounds, etc. And actually in quite a bit of a rebound today, right? We got core CPI from October. That report came in this morning, came in lower than analyst estimates. So we got a big rebound in the markets today. I'm looking at the NQ futures right now, up over 5.5%. So pretty cool. And actually the setup that we're going to talk about this morning applies to these types of rebounds. So I'll show you guys how I kind of spotted the rebound that's taking place today. So first, I'll read you a quick disclaimer. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options, and of course need a broker to trade securities and must meet suitability requirements. Past results are not necessarily indicative of future performance, and the performance figures that we show may be based on actual trades, including real money results, as well as hypothetical results. And of course, due to the time-critical nature of trading, brokerage fees, activity of other subscribers, we don't guarantee that anyone will mirror our performance or any of the performance numbers that we show in the educational events, but they are based on actual trades that maybe I've made or made in my hedge fund, or trade signals that we're going to cover today. All right, so let's start out with something a bit unusual that you may not encounter in a typical educational event, and that's why the markets are so difficult to trade, right? Educators like to come on and tell us how easy things can be, but in reality, the markets aren't easy. Let's just put that out there, get it out of the way, and talk about why they're difficult and how we can overcome that. So there obviously are a lot of potential causes to failure and difficulties in trading and investing. One of those, the significant ones, is psychology, right? So what we all encounter, because we're all human, is basically a roller coaster of emotions that cause us to, unfortunately, make decisions that are counter to what the market might actually be doing or is likely to do in the near term. So this is a psychology curve, and if we start on the left, this is typically when we enter a trade or investment, how we're feeling, right? We're optimistic, enthusiastic, and if things start to work out the way we intended, that can often turn to euphoria, and maybe we have a good trade or a couple good trades, and we're excited and we get confident that we can continue to repeat that process, and then inevitably the markets shift behavior, right? So they're not behaving the same way that they were when we were had a successful trade, and that ultimately can lead to anxiety, fear, despair, panic, and this is what we see actually occur in the markets, even if we're not trading or investing, and we're just monitoring the markets, seeing how they're behaving. This is the roller coaster that they go through, right? So when we see over the past decade or so, this incredible secular bull market reaching all these new all-time highs, and then we get these extreme market sell-offs. And of course, in this year in 2022, we've seen an extreme market sell-off in bear market territory. So this is what occurs. And it makes it difficult because we're all vulnerable to these emotions and how they impact our decision making. So really much of the difficulty in trading can be boiled down to psychology. And we're going to talk a little bit about the psychology of failure and how we can use some tools to overcome that. So anytime we enter a directional trade, our goal is to buy low and sell high, right? Or if you're shorting, you want to sell high and then buy low. But that actually goes against our human instinct. So instead, when a security is going down, we sell it because we're panicking, right? Think back to the curve we just looked at. And when it's already gone up, we buy it because we have fear of missing out. And nobody wants to miss out on the good times, right? But then when things get ugly, we panic because we don't want to lose money. So it's normal human psychology, right? Makes sense. But what we don't want to do is make our decisions based on this, or make our trades that follow this curve, because we end up getting in at the wrong time and out at the wrong time. And then to compound that problem, we're wired to repeatedly make the same mistake. So we buy high and sell low because that's what our emotions tell us to do. And without a solid trading plan, we're vulnerable to our emotions. Even if you do have a solid trading plan, we're vulnerable, right? So if you're lacking a strategy that can help overcome the drawback of the psychology of failure in the markets, in other words, you don't know exactly when to get out or buy low or get in, sorry, and buy low and get out and sell high, it can pose a major problem. Even certainly if you're inexperienced, but even if you've been trading for a long time, we all encounter this on a regular basis. So let's turn the tables on this psychology curve, right? Instead of being greedy at the time that there's a high level of financial risk and fearful when the risk actually appears to be high but is relatively low, we're going to be fearful when there's a high level of financial risk, right? And that's actually when markets are hitting new all-time highs. That's when you should be fearful. When they're selling off and creating new buying opportunities, it's the supply and demand curve. As the supply dries up and the demand increases, that occurs during market dips. And that's actually when we want to be greedy. And it's the best time typically for buying. And it's Warren Buffett adage, right? Be fearful when others are greedy. It's a contrarian approach. And the reason that Warren Buffett and a lot of contrarian investors use that is because they understand the psychology curve. So what I'm going to give you guys today to make it easier and basically automatically, we're going to look at a system and a strategy that automatically overcomes that the drawback of the psychology of failure in the markets. And that's the slingshot. And it's actually forecasted 100% of market rebounds, going back all the way to the dawn of the stock market. And I'm going to show you how to identify the setup, how you can trade the setup, how to profit from the setup, how to get in near the bottom and out near the top. We're not going to be picking exact tops and bottoms here, but we're going to be able to identify with a high degree of accuracy when markets are likely to sell off or rebound. And this can be applied to really any market, any asset class, in any time frame. It plays out in a fractal manner across all time frames and all markets. I'll show you a really great technique for entering your trades using this setup that can help eliminate a lot of your losing trades before you even get into them. In other words, it can help keep you out of a trade that is likely to be a losing trade. We'll look at some examples and then stick with me to the end, and I'll show you guys how you can copy my success and get my trade signals I used to make a living in the markets. So let's start out by imagining if you could buy low and sell high without any guesswork. There is one particular volatility study we're going to take a look at that's made this possible since the beginning of the markets. And I've developed a system around this volatility study that I call the slingshot. And it allows us to forecast market sell-offs and in particular market rebounds historically with 100% accuracy. So again, we'll take a look at that on a chart. But as I mentioned, the beauty is it doesn't just necessarily tell us when the market is oversold and likely to rebound. It also can warn us of a potential market sell-off. It actually did that very accurately at the end of 2021, beginning of 2022, before we shifted from the secular bull market and entered this bear market. So these volatility bands are very valuable. They give us a lot of valuable information. Reason being, they can only be stretched so far before a market has to bounce back, right? So they can't be extended or expanded indefinitely. So they have to eventually bounce back. And that rubber band effect makes it possible to accurately identify tops and bottoms in the markets. So here's an example. This is going back to early 2020 in the Corona crash, right? We all probably remember that, maybe not with fond memories, but in January, February, we're hitting new all-time highs on the S&P 500, right? And remember that psychology curve. This is actually when, and you can verify this by looking at the trading volumes leading up to the Corona crash. There's a lot of buyers coming into the market at all-time highs, right? Because people have a fear of missing out. The market's been going up and they psychologically assume that it's going to keep going up. But if we take a contrarian approach, we actually want to be fearful at that point in time and look at covering long positions, maybe shorting the market. So we want to sell when most traders are buying. And then the market crashes, right? And there's a lot of panic selling. Again, going back to the psychology curve where people are panicking, they're fearful, they're losing money, right? This creates opportunity for us as buyers. We can come in as a buyer when most traders are selling. It's the shift in the supply and demand curve. And then we get the rebound. I mean, that was a very extreme sell-off. The S&P was down, I think, somewhere around 35% in just a couple weeks. And then we get this incredible rebound. I mean, who would have imagined in the midst of a global pandemic that we're going to rebound to previous highs in just a matter of a couple months, right? So that's the slingshot. We're going to look at the mechanics of it here in a second. I'll give you a little quick background on myself before we get into the system. Again, my name is Jeff Tompkins. I have 23 years of experience trading the stock, options, and futures markets. I received my professional training at the trade desk at Morgan Stanley as an intern. I'm also the founder and chief investment strategist of Altos Trading. We currently have over 50,000 members in over 100 countries across the globe. I'm also a hedge fund manager, so I manage money for my clients at Altus Capital. And a lot of the systems and indicators and strategies that I teach are ones that I actually deploy in my hedge fund. Also the founder and the creator of the Trade Trend Signal software, which we're going to be looking at on the Metastock platform today in our session. So by the end of our session, you'll discover one trade setup that's produced massive returns going back to the beginning of the stock market. In fact, it's so reliable, it's forecasted rebounds in the market 100% of the time historically, going back to the dawn of the stock market. And it's not failed even once, including in the Corona crash, which was prior to the bear market of 2022, the most extreme market sell-off we've seen. And it happens over and over again with really astounding predictability. So whether you're just starting out or you're a seasoned pro, this is really must-have information for today's markets. So on our session today, you'll discover why volatility is one of the only leading indicators of market direction, right? Most other indicators or systems are lagging, right? They in fact, a lot of them are quite lagging. So by the time they give you a signal, the move's already occurred. Well, again, think back to the psychology curve. Is that what we want to do? No, we don't want to buy when there's a high level of financial risk, right? And so unfortunately, a lot of indicators lead us to do that. Volatility is a little bit different because implied volatility is actually forward-looking. It's the anticipated volatility and expected moves in the market moving forward. So we'll look at how to identify when markets might be vulnerable to a sell-off. And this alone really can turn your trading around. If you're an investor, a trader, maybe you have a 401k or an IRA with that's invested in index funds like the SPY or the Qs, and if that's the case, then you're very vulnerable to a market sell-off or a market crash. So wouldn't it make a big difference if you could be ready for that and prepared and know how to identify when the market is not just likely to sell off, but when it's likely to go back up? And one of the really great features of this setup is it helps us determine how far the market is likely to go up. And that is valuable information because if we don't know, even if we get into a successful trade, where to get out, that can quickly evaporate, right? And we can lose our profits in the trade very quickly. I'm going to show you guys how you can get your hands on a tool that will change your trading forever. And it has for me. And so I'm here to help you guys and strive to help you become better traders and investors. So let's look at the Slingshot, right? Now, the reason I call this setup the Slingshot, you'll see very quickly here, is that as we pull back the bands on a Slingshot, right, the muscle energy is transferred to elastic energy in the bands of the Slingshot. Now, they can only be stretched back so far. We're going to eventually have to release it once we don't have the ability to pull the bands back any further. And after we release it, the elastic energy is then transferred to the stone as energy of motion. And this is actually in physics called kinetic energy. So although we're not going to get into a deep physics lesson here, we need to understand kinetic energy because it actually applies to markets in the form of supply and demand. So demand would be buying pressure, right? Once the bands of the Slingshot become overstretched, that's when it gives us a buy signal, and we can enter the market with high confidence that prices will go up to the initial resting point of the band in the future. All right, and this is kind of what it looks like. So as I mentioned, volatility is a forward-looking predictive indicator. And the bands tell us when prices move too far from the mean or the average and is likely to reverse direction. All markets mean revert. Mean reversion is, occurs in all markets on all time frames. And what we're going to use to identify this are the Bollinger Bands. Now, there are a lot of ways to use the Bollinger Bands. We'll look at a few different ways to use them, particularly the more common ones. And then I'll show you why the technique that I'm going to demonstrate is much more effective and valuable as it relates to overcoming the psychology of trading and the drawbacks that imposes. So the Bollinger Bands is really an incredible indicator. If we use it in a certain way, it's not necessarily lagging, right? So it's actually giving us pretty accurate real-time information, and it can help us pinpoint turning points in a security with really astounding accuracy if we use it correctly, right? So this is a bit of what the Slingshot looks like. You'll notice that prices hit the lower Bollinger Band, and then there's a sell-off. right? And eventually, the bands become overstretched, supply dries up, fear and panic start to subside, and buyers come in. So there's demand. And then the markets rebound up to the initial resting point, or the initial volatility expansion level. We'll go through that again, the mechanics of that. But first, let's understand the Bollinger Bands. If you're not real familiar with them, or maybe haven't used them in the way I'm going to demonstrate, let's talk about what they are. So they consist of 3 bands, and the center band is the moving average, right, of the security's price. And by the way, I'm going to give you the settings that I use, because like most indicators, you can manipulate the inputs, the settings. Now, for the 2 outer bands, those are our volatility bands. So basically, to get those bands, we take a standard deviation of the security's price. And standard deviation is simply a mathematical measurement of average variance. So how far is price varying from the center band, or the mean? And that measures how spread out the numbers are from the average. And we don't need to run the calculation, because the softwares do that for us, right? Metastock runs that calculation for us. But basically, you're taking the square root of the variance, and that's the average of the square difference of the mean. So we multiply that standard deviation by 2, and then you add and subtract it from the middle band. Okay, and that produces the upper and lower bands. So just to get a background of what it is and understand why we're using it. So it measures volatility. Now there's other similar looking indicators out there, right, that have bands and things like Keltner channels, but they use different inputs. They're not a measure of volatility, so to speak. So because standard deviation is a measure of volatility, when the market becomes more volatile, we see the bands widen, the outer bands. And when the market's less volatile, they contract. So that's an important concept to understand, because we're going to get into what that looks like. Now, here are the settings that I use. And these are typically the default settings. Like if you go into Metastock, these are going to be the default settings when you plot the Bollinger Bands on your chart. A 20-period simple moving average for your center band, and a 2 standard deviation setting for your outer bands. And we use a 2 standard deviation setting because markets can only sustain a 2 standard deviation move from the mean for so long before they mean revert. So that's the rationale behind that. Now, I mentioned there's a lot of ways to use the Bollinger Bands. So let's look at a few of those. One is to buy at the bottom band, sell at the top band. Now, that can work in certain circumstances, typically in low volatility market environments. But what happens when we get a volatility expansion? The problem is price can hug the upper or lower band for extended periods of time. So often what ends up happening is somebody will use a strategy successfully for a few trades, and then it gets blown up, right? So for that reason, I don't use the buy at the bottom band, sell at the top band. Another method is band contraction and expansion. Now, this is very valuable information, and we're going to use it with the Slingshot, but we're not going to use it for actual decision-making in our trades or investments. Now, it can be a good indicator of an impending big move in a security. The problem is we don't know in which direction the move is going to occur. So we don't want to just take a 50-50 guess on a directional move based on a band contraction or expansion. So for that reason, we're not going to use that as our decision-making tool. Another common method is buy or sell at the middle band. So like if the market's in an uptrend and we get a mean reversion of the center band, that can often be a good place to enter the market to the long side. And it works well in strong trending markets. But we all know that markets don't trend strongly all the time. So it fails miserably in sideways ranging markets. And for that reason, I don't use this as part of the Slingshot setup. What do I use as the Slingshot? This is a unique way to use the volatility bands or the Bollinger Bands. What we do is we wait for the lower band to break, and I'll explain that, and we'll visualize it on a chart. But basically, price is going to hug the lower band and ultimately rebound to where the breach initially occurred, where the volatility expansion initiated. That's the Slingshot. It's highly effective for identifying market sell-offs and rebounds. So we're going to look at using the Bollinger Bands to buy low and sell high. So again, a really valuable indicator and tool that really separates itself from other indicators out there in terms of being a lagging indicator and not providing valuable future forecasted information. It's been around for a long time, developed by John Bollinger, and again, has been used like most indicators in lots of different ways, most of them ineffective, unfortunately. Now, the Slingshot, I believe, is the most effective way to use the Bollinger Bands. So as I mentioned, price can exceed or hug a band envelope for prolonged periods during strong trends. So what we do is we wait for the lower band to break, and then we wait for a buy signal. And then we exit when price returns to the breaking point. So that's when price touches the lower band and starts to trail it. And again, we'll visualize this on a chart. And it occurs with really astounding predictability. In terms of forecasting market rebounds on the major indices, it's forecasted these with 100% accuracy. So 100% of the time, going back to the dawn of the market has rebounded to the initial breaking point or the volatility expansion. Okay, so that means when there's a market sell-off, we've rebounded to where that began. That includes all four major corrections of 2018, flash crash of 2015, flash crash of 2010, the crash following the 2008 mortgage crisis. The market lost over 50% of its value in the second half of the year that year. The 2000 .com bubble, even the recent Corona crash, which is again, at today's date and time, the most recent extreme crash we've had. Every black swan event, market correction, major crash, bear market, you name it. We're in a bear market, right? So we're looking out for opportunities to buy back in at lower prices. All right, so let's start to get into the mechanics of the Slingshot. How to identify it? We'll look at actual real chart examples here. The Corona crash is a great example to use because it's kind of a picture perfect display of how the Slingshot works. So you'll notice on the left side of the chart, and again, I mentioned a moment ago that this is when markets were hitting new all-time highs in early 2020. We're in this, decade-long secular bull market, and people are coming in and buying, right? Without any awareness of a black swan event, right? The COVID pandemic. We didn't know that was coming. But once we realized the potential impact it was having globally, markets crashed in February. And by mid-March, the S&P was down around 35%, over 30% in a very short period of time. That's a significant crash. Okay. So you'll notice on the left side of the chart, the outer bands are relatively close together. They're horizontal. What does that mean? We're in a period of low volatility. Now you'll notice around the third week of February, that changes. So we gap down, we start to get a sell-off. Price comes down, hits the lower 2 standard deviation band. And this is where we should become fearful. And particularly on the next day, as we see price continue to trail the lower band and we see the outer bands, the upper and the lower band, start to diverge and expand and widen, that's the beginning of the Slingshot. This is where we become fearful as traders and investors. If we're, have a long portfolio or retirement account, if we're trading with long positions, we become fearful. It could also create opportunity for us because, again, when we see diverging outer bands and price trailing the lower band, there's a high likelihood of a market sell-off. So we could short the market, right? In fact, I did that in the Corona crash. I'll share with you some of my results using the Slingshot method with real money. All right, so big crash down into mid-March, right? But eventually the bands can only be stretched so far, right? The market can only sell off so much before it attracts buyers. And this is usually where institutional buyers come in, hedge funds, large money managers, retail traders aren't going to drive the price back from a 35% market crash back up to the initial volatility expansion level. Okay, so we got a lot of institutional buying coming in here, right around the 2200 level on the S&P at the time. And what happens? We go back into an uptrending market, and price returns right back to the initial volatility breakout or expansion. That's the slingshot. Here's another example. This is on Apple. So what's happening on the left side of the chart? Apple's in a strong uptrend, right? Probably attracting a lot of retail buying. Strong uptrend, all three bands pointing upward. Price naturally retraces, as it does in, again, under normal circumstances in an uptrend, comes down to the lower band, actually even get a couple of bullish reversal candles off that lower band. Looks like a great opportunity to come in and take part in this uptrend. It's about to resume back to the upside, right? Well, not so fast. What's happening here? We went from a period of relative low volatility and an uptrend to a volatility expansion. See how when price touches the lower band, the two outer bands diverge, and price trails the lower band. We get a significant sell-off in Apple. The time the volatility expansion occurred, trading over just under $200 a share, sold off all the way down to the 168 level in just a few weeks. But that created a buying opportunity, because look what happened. It attracted buyers and returned price right back up to that level. Again, that's the slingshot. This is an example on the Qs, the NASDAQ 100 daily chart. You'll see on the left side of the chart, this is in 2018. We're in a period of low volatility. The bands are horizontal and close together. What should we be? We should be fearful. As price comes down to that lower band and the outer bands start to diverge, that is our warning sign of a pending market sell-off. And sure enough, in the latter part of 2018, we get a big tech sell-off. Actually, almost put us into bear market territory that year. But it attracted buyers who came back in, and price rebounds right back up to the initial volatility expansion level. As you get more experience with identifying this, there's actually a lot of mini slingshots within this big slingshot. You may be able to spot those by now. Always get asked, does this work on intraday timeframes? Yes, absolutely. It's fractal. It can be applied to any time frame. Because why is that? Because it's based on fear and greed. It's what drives movement in the market, right? It's human emotion. So this is a 5-minute chart of advanced micro devices, AMD. You'll notice on the left section of the chart, we're in low volatility, horizontal bands relatively close together. Price, if you're using that method of buying at the lower band, selling at the top band, that worked pretty well a few times. Until right here, where we get the volatility expansion and price starts to trail the lower band and we get a big sell-off in the stock intraday. But eventually, it attracted buyers who drove price right back up to the initial breakout point. So the trick here is identifying the buy zone, right? So we've talked about how to spot the potential sell-off using the volatility bands. So again, we're looking for diverging bands as price hits the lower band and then begins to trail it to the downside. So we need to identify how to know when to buy, right? We can't pick the exact bottom. Okay, so there's a lot of methods we can use. We can use scaling in methods. We can use bullish candlestick patterns. We can look for major levels of support. So there's a lot of different ways, but the trick is to identify when the band is overextended and ready to snap back. And I've spent more than a decade looking at different methodologies for how to do this. And I spent thousands of hours trying to determine when momentum is shifting and a new trend is starting. And I finally got a really effective formula dialed in that I eventually approached Metastock with to develop an algorithm, an indicator around to help identify these buying points. And I'm going to show you the tool here on the Metastock platform. because not only even without using the Bollinger Bands, provides really incredible buy and sell signals in advance of an anticipated move. In fact, up to 3 candles in advance. It works great with other indicators like the Bollinger Bands. And when you formulate the right combination of momentum indicators and volatility studies, again, volatility is key because it's implied volatility is one of the few forward-looking predictive tools we can use in the markets. It really can help us accurately identify buy and sell signals at the outer bands. And by the way, this works in the opposite direction. You can get volatility expansions to the upside as well. So that's what we've developed into a signal software with Metastock called Trade Trend. And it can help us accurately identify buy signals at the bottom of the Slingshot using a proprietary blend of momentum indicators that can also warn us of market sell-offs with a sell signal and help us predict short-term and long-term trends with quite astounding accuracy across all markets. So whether it's stocks, ETFs, futures, FOREX, Metastock has an incredible screening tool also that helps us identify these opportunities very quickly. They pop up all over the place, especially if you're looking at intraday timeframes. So we need a really good tool to help us scan for these types of setups and these signals. So it can be used on any time frame. You can also run backtests if you're looking at using the Slingshot and the trade trend buy and sell indicators in particular on a certain symbol. You can run the backtest on the buy and sell signal, see how it does. We have a lot of members who use it with option strategies. I personally use it with my option strategies. I do a lot of options trading, and these signals help me accurately identify shifts in the market. All right, we're going to take a look at a chart here real quick so I can kind of show you what it looks like. But I want you to understand one more thing. So the trade trend indicator gives us up to 3 candles advance warning of an anticipated move or a forecasted move. So if it's a buy signal, it's going to give us a buy entry price that's higher than the current market price. And that's built into the algorithm to help us keep us out of bad trades. So if there's no follow through in the anticipated direction, then we would cancel our order out and not get into a trade. And we do that with a buy stop order. And the Metastock platform actually gives you the exact order type and entry price for each signal. Conversely, for a short trade, we would use a sell stop order below the current market price. And again, the Metastock platform and the trade trend algorithm provide that to you, which is really, really incredible. So there's no guesswork, but that helps keep us out of trades that don't follow through. So let's go over to the platform real quick and take a look at a chart. This is I just have a chart of the NASDAQ 100 ETF, the QQQ pulled up with the Bollinger Bands and with the trade trend signals. So I'll explain what the trade trend signals do, what they tell us, and then we'll look at kind of how to apply that to the Slingshot. So hopefully you guys can see the chart. Let me know if you can in the chat. But again, daily chart of the Qs. So we have two types of forecasting signals. And again, these are not where we would enter short or long. These are simply a forecasted direction from the algorithm. So a red diamond tells us that the algorithm is forecasting a move down. And I'll show you in the expert commentary. It's going to give us an entry price. But on a sell signal, that's going to be below the low of the candle where the prediction occurred. So in this case, the prediction of the forecasted move to the downside occurred 2 days before we came down and triggered the entry price, which happened again 2 days later here. Okay, then we get a big move down. Now, interestingly, this sell signal moved down into a Slingshot setup. And this is just August, September this year, just a couple of months ago. So this is our Slingshot. See price trailing the lower band, outer bands diverging, volatility expansion, right? So what we're looking for in the volatility expansion is then a buy signal. And there it came in right at the start of September. So our buy entry is where? Just above the high of the candle. This one triggered the next day. Pretty incredible. This sell-off was in full steam, right? This thing was a strong sell-off, but trade trend, the algorithm, put in a prediction here that was going to reverse, and it did the very next day. And there's the slingshot. So there's the rebound, the entry, right? Could have picked up a good 25 points on this move, right back up to the initial volatility expansion. Then we get a resumption of the sell-off. There's our sell prediction. There's our trigger. There's a move down. Now here we got a anticipated buy, a reversal back up. It came in a little early. It happened, right? There's another slingshot. It happened, but happened a little bit early. But that's okay. It didn't actually result in any, it wouldn't have resulted in a trade. Why? Because our buy entry's up here, and it gives us an anticipated move up to 3 candles in advance. And that didn't happen quickly enough here, right? So the next 3 candles, we never came up and hit the suggested entry price. It actually took till the 4th candle. So that's why we don't see a green arrow for a confirmed entry after the diamond. We did get one here though. Okay, and there was a move up. And then more recently, we got a sell signal with a trigger, and there's the move down. This is within relatively low standard deviation moves. We're staying within a 2 standard deviation move to the upside and downside. Big gap up today. There's another buy warning that's coming in today. Now it's not confirmed. We need to wait for the market to close. But this doesn't repaint. Once the candle is finished printing in the time frame, it's set in stone. It does not repaint. All right, so that's how we can use the trade trend indicator, the predictive buy and sell forecasts with the slingshot setup. And there's some really nice slingshots in here. Again, there's one all during this market sell-off. There's one. This was kind of a mini one. I wouldn't really count it. And now we're looking for another one to occur, right? So for price to trail the upper band. And by the way, mentioned you can use this in the opposite direction. Here was a reverse slingshot. QQ is in a strong uptrend, and it actually occurred. There was our sell signal, triggered sell signal. We got one back here, but no follow through. Entry was down here, didn't come through. This one finally did, but there's a reverse slingshot. Price comes back down into the initial volatility expansion. So a reverse slingshot looks like a regular triangle, or in other words, a bearish slingshot. A bullish slingshot looks like an upside down triangle. Very effective at helping us identify potential market sell-offs and rebounds. But again, we need a good algorithm or tool to give us buy signals during these sell-offs. And that's what we've developed in partnership with Metastop. All right. In the interest of time, I'd love to go through tons of these examples, but we don't have time to go through a ton of them. But they're fun to look at, and they're fun to trade. I trade these all the time. So let me share some actual real money results of my trades using the slingshot and the trade trend algorithm. So this is going back to the crash of 2020. I was using the slingshot, so I was identifying the sell-off, and I was using the sell signal from the trade trend algorithm. And I wasn't predicting what was going to happen with COVID. You know, I'm not a genie. I don't have a crystal ball. I was simply using these 2 tools. Okay, and I was fearful when a lot of other people were greedy. For that reason, in February, as the market started to crash, and I'm usually more conservative on the slingshots setup as it's expanding. I went pretty light on my positions, but I was shorting the market. You know, 1, 2, 3, 4 contracts, and very conservatively made over $13,000 by the end of February using these 2 tools. As the market rebounds, I took that buy signal in March I saw the slingshot. I waited for the trade trend buy signal, and I knew there was a high potential for a significant rebound in the indices. So I started buying index futures. Again, only 1, 2, 3 contracts. By the end of March, I had netted over $27,000. Okay, just trading 1, 2, or 3 contracts of the index futures. So between February and March, when there was all this panic selling and then finally institutional buying that caused the rebound, I booked a total profits of over $40,000 using trade trend and the slingshot setup. So again, this can be applied to any market, any time frame, any size account, and it provides predictive forecasted buy and sell signals before the move occurs, up to 3 candles in advance. So if you're using this on an intraday time frame, let's say a 5-minute chart, it's going to give you up to 15 minutes of warning of an anticipated or forecasted move, whether it's to the upside or to the downside with a buy or a sell signal. One thing I forgot to show you, let me go back real quick, the expert commentary. All right, so how do you know where to get in on these signals? Well, like if we look at today's signal, right, there's a, again, this one's not set in stone, so please do not trade this. We have to wait for the market to close today. But it's going to give us, because we're looking at a daily chart, it's going to give us, it's telling us a buy setup is occurred and pending. But it's going to give us the suggested entry price. And again, that won't be set in stone until the close of the candle. This is a daily chart, so at the end of the day today. But it tells us the entry price and the buy stop limit if we wanted to take a trade off that signal. And then once that occurs, like if we look back at this previous sell signal, it also tells us how to manage the position. So it gives us a trailing stop price after each candle prints. So sorry, I forgot to show you that. Wanted to point that out. So you get all that in the expert commentary as well. And if you look back historically, our trade trend algorithm has forecasted every market crash and rebound in the history of the market. So every major sell-off we've had, every bear market, and every rebound after one of these events, there's been a buy or a sell signal in those areas. And these are just past examples: the flash crash of 2015, 2008 mortgage crisis. We got the sell signal in May, the buy signal later in the year as markets were bottoming out and eventually rebound, 2000 .com bubble. And you'll notice these are all slingshots as well. That was a beautiful slingshot right around the second week of September on the 2000 .com bubble crash, where trade trend provided a buy signal on the rebound. So I think the key takeaway here is there are probably, we have hundreds of people on the session today that probably use hundreds of different systems or indicators or methodologies, right? And probably they're all going to produce winning trades at some point, and they're all going to produce losing trades. Every system does. But I think the key thing to consider is, do they keep you out of the market when conditions are not favorable? Because we don't want to end up giving our profits back on the losing trades. That's our biggest overhead that we face, is our losing trades. So we need to minimize those as much as possible. And that's what we've designed trade trend to help us do, to let the successful signals, because they're not all going to be profitable, but when they are, we need to let them run and maximize profits. And when they're not successful, we need to get out and free up capital and wait for the next trade. So again, I used the trade trend algorithm myself to make these decisions. And these are real money, not hypothetical, not simulated trading, real money results from my personal TD Ameritrade Thinkorswim account using the indicator. These are real money slingshot results. So I used what I just taught you today to trade the index and volatility futures to generate over $28,000 in profit in a single day, with over $122,000 in open profit, over $13,800 in a single day with over $152,000 in open profit on 3 positions, because I'm using the slingshot and the trade trend buy and sell indicator to pinpoint these major shifts in the market, right? So I'm not buying at a market top where there's less potential for a continuation of the move. I'm buying after there's already been an extreme move. And these 2 tools help me do that. This is from my hedge fund. I use the slingshot in my hedge fund. helped me generate a 6.46% return in 1 month for my investors using the Slingshot. So I'm here today, guys, to help you have days like these, and I'm going to give you access to a tool that lets you basically copy what I'm doing, right? So you get access to the trade trend signals, the same ones that I use to make these decisions. And so this is a one-time opportunity that we only do on the Metastock summits to get access to trade trend on the Metastock platform and all the great tools that come with it. And I've taught you one of my strategies that I use, the Slingshot, in combination with the trade trend indicator. So you get everything without anything held back. All of my indicators, my tools, I don't hold anything back from you. I don't try to sell you something later, say, this is just the start, now you need this. This is everything that I use. So what you get at the summit today is 12 months of trade trend for stocks, futures, and Forex, whatever market you like to trade. You get 3 months of Metastock with Zenith data. You get exact entry and exit signals. You get live interactive trade sessions. So we actually hold educational events just like the one we're doing right now every Tuesday at 7 p.m. Eastern with Altos Trading. So you can join those. We record them. If you're not able to join, you get access to those in our members area for all the replays and recorded training sessions. I'm the one that hosts those sessions, so you get full support and coaching from me on the sessions. You can have access to me and you can ask questions, and I can help you out. We also teach trade adjustments to fix losing trades. We all have them, right? Altos Trading, we're one of our core methodologies is adjusting losing trades. So we teach a lot of that as well. I go through some of the more successful or profitable symbols that I'm currently trading in the sessions. You guys, again, have full access to ask me those questions. If you want to know what I'm doing, I'm happy to tell you. So again, to recap, trade trend gives you the accurate buy and sell signals at the bottom of the Slingshot using the proprietary blend of momentum indicators. You can use it for short-term intraday trades, long-term investments. You can use it on a 1-minute chart, a weekly chart, a daily chart, a monthly chart, any market, any time frame. You can back test. We didn't have really enough time today to go through back tests. You can back test it. You can use it to make your options strategy decisions. It's a really great tool to help cut the learning curve because it is so steep as it relates to trading and investing. All right, so I'm going to run through everything that comes with the package, and then hopefully we'll have a couple of minutes left to see if there are any questions. All right, so you get 12 months of trade trend on Metastock. That normally retails for $1,499, but we're gonna, please don't go buy it for that price on the website right now because we're gonna give you a really special deal. You get our weekly live trade sessions. Those normally retail for $550. So again, you get those for life. You can join us every Tuesday, 7 p.m. Eastern. You get personal coaching from me on those. That's a $1,997 retail value. You get access to our exclusive Facebook only members group. We have close to 900 members who use trade trend and other strategies and indicators that we have developed. And we're also going to throw in special training on adjusting losing trades, particularly with option strategies. That course normally retails for $900. And you get to continue on with us, learn to trade stocks, futures, Forex, options, whatever market you like to trade. And that's really priceless. Then we're going to throw in a couple bonuses. So you're going to get our professional trading series online course. That's over 10 hours of content. So we spent about an hour together today, and I taught you one of my strategies, but I have dozens more and a lot of really cool things to teach. So you're going to get access to all of that online, which you can watch at your leisure. That course normally sells for $595, but we're throwing in a special bonus. You're also going to get bonus number 2, which is my latest ebook, How to Create Risk-Free Trades, which is a great supplemental information for the Slingshot and the trade trend indicator. It goes through money management techniques for entries and exits to help mitigate risk and even eliminate it in some of our trades. That normally sells for $97, but we're throwing it in as bonus number 2. So the total retail value on the package is over $5,000. But again, please do not go pay that right now. I mean, if you want to, that would be great, but I don't want you to. So we're actually going to take 80% off. You get it for $997 for the entire year. of trade trend on Metastock. Everything else you see on here, you get for life. You never, even if you decide it's not for you or you don't want to continue, you get to keep everything that you see. You would just lose access to the trade trend algorithm. So really great deal. Breaks down to less than $3 a day, only $9.97. We are going to limit this to 25 seats because it takes Metastock time and work to provide their white glove treatment to get you guys set up with the indicator on the platform and all of these great things, and as well as for us to provide everything that we're promising here. So we don't take unlimited people. We do limit these offers. You can still go buy this once the 25 seats are up at the retail price of $5,145. But if you want it at the $9.87 discount, that's only good for 25 seats. Here's the link to continue on with Altos and Trade Trend on the Metastock platform. altostrading.com/Metastock. Jeff has been kind enough to put that in the chat for you. I've got just a couple minutes left, so I will pass it back to Jeff and see if there are any questions that we want to address or anything before I sign off. And by the way, I want to thank everybody so much for paying attention, and hope you guys got a lot out of it.
I'm correcting the link. I actually put tradetrend.com/Metastock. So let me put in the correct link there. There you go. Let's see. We do have a question. Steve wants to know if this would work on short time frames like 5 or 2 minute charts.
Yeah. So I don't know if you're referring to the Slingshot or the trade trend indicator or both, but certainly both can be used on intraday timeframes as well, because the trade trend algorithm is designed to be fractal. So it should give signals on, good signals on all time frames. The big difference you're going to see, the shorter the time frame you go, is you're just going to see more signals. Okay, so you're going to see fewer signals on a daily chart than you're going to see on a 5-minute chart. And same thing with the Slingshot. You're going to see more slingshots on an intraday chart, let's say on a 2-minute chart, than you're going to see on a daily chart. So it's really just the frequency of signals.
Tavanda says, good morning, everyone. Good morning, Tavanda. It's good to have you back again today. Let me go ahead and do that. Let's see. One more comment in that Lon says, I always thought the Slingshot was a rev div. And I'm not familiar with that, but I thought maybe you might be.
No, I know.
Yet another way to use Bollinger Bands. So thank you for showing us another way to look at Bollinger Bands.
Of course.
Such a great indicator, right?
It really is. But like all others, it can be misused. So that's why I'm here to help. And the way I found it to be most, I've tried every way, trust me. So yeah, great indicator. Yeah, thanks for the great questions and comments.
All right. Cool. Well, thank you for coming, spending a little bit of time with us. Stay warm up there. And
right. You too.
We look forward to seeing you again soon.
Thanks so much. Thanks, everybody.
Thanks, Jeff. Okay, let me do this real quick. Let's just go ahead and change a few. The reason I love offers like the Trade Trend offer, the offers that come with kind of a little bit of some hand holding, and all the stuff that Trade Trend is throwing on is the markets have kind of been a little bit different this year. And so if you kind of have all of this stuff that's available from somebody that can kind of help you, guide you in the right direction, it can really, really help you. So Jeff does a really good job. He showed the add-on. It does have the real-time signals, the setups, the triggers, the entries, the exits. You get the commentary breakdown. So things that I absolutely love about Metastock, as well as the scanning. You guys know I love scanning. The system testing, you get the user's manual. And with this particular package, it is fully designed into Metastock. And you're not just going to get the Metastock add-on. It is 12 months of access to the add-on, but you're also going to get the 12 months of the trade trend signals, the live trading sessions. That's probably going to be really, really helpful for you as we kind of navigate these markets, the personal coaching, the Facebook group access, the professional trading series online course, the bonuses on learn how to trade, the bonus course on trend picks and how to fit risk-free trades. All that stuff is included. And I think right now might be the best time for you to really get involved with somebody that knows what they're talking about. And, obviously with Jeff, he's managing his hedge fund. And he comes highly recommended from this Jeff. Anyway, the package price is $9.97. You can do that at altostrading.com/Metastock. You can also call us. We can help you get set up for that, 800-882-3040. You can also chat online at metastock.com/saleschat. So more than happy. If you don't have Metastock, we will give you a trial to Metastock. This package does not include Metastock, but we'll give you a trial to Metastock, so you can also try out our software to see why it's been rated #1 for 29 years in a row. So there you go. Thank you again, Jeff. altostrading.com/metastock, 800-882-3040, and metastock.com/saleschat. So moving along, I want to say just to spend a minute talking about Stocks and Commodities magazine. We'll talk. You're probably sick of hearing about them, but they're great partners of ours. If you do that membership for Altos Trading, they're going to give you 2-year subscription as part of them. Again, I can't say enough about how much we appreciate Stocks and Commodities. I love it just to getting the magazine every month and reading through the articles and seeing what everybody has to say and kind of learning something new every month. And so, yeah, thank you, Stocks and Commodities, for sponsoring today's event. I think it's time that we give away a prize. Are you ready?
It's the best time of my day, Jeff. I'm ready for this. I love giving away prizes.
Let's go. All right. So I think the first prize we're going to give away, you might be familiar with. Like, have you heard of a product called Metastock?
Ooh, Metastock. I love giving away Metastock.
Okay, so we're gonna give 3 months away of Metastock real time. We're also going to give our institutional quality data feed. We call it Zenith. It has probably some of the industry's best news information. In my humble opinion, it's the best news that you can get. In addition to that, we're not going to stop there. We're going to help you install it. We have our white glove installation support where we'll have somebody give you a phone call, make sure everything's installed properly. We'll also give you our home study course called Unleash the Power of Metastock. We're also going to give you an additional service. This is actually, there's a website called learnmetastock.com that trains how to use Metastock. It's $100 a month, and they have hundreds of videos. We're going to give you 3 months of that as well. So it's a really, really cool package. We're going to give it away to somebody right now. And let me go ahead and go in here. And
is my math wrong? Is that $1,000 worth of stuff?
You're probably correct. Yes.
It's a pretty good value.
All right. So the number I need from you is a number between 1 and 10,426.
Let's go with the 627.
Ooh, you're rewarding somebody that registered early.
Yes.
Okay, let's do that. So that is a Laura O. Look, I didn't say a last name. I have not doxed anybody yet. Laura O in the USA has a Gmail account, and that's as much as we're going to say about it. So, Laura, congratulations. Within the next 7 to 10 days, probably early next week, I'll send you an email, and we'll kind of get all the information, make sure we have everything we need to get you set up for that. Thank you for signing up for the class. Now, I did have a question earlier. Steve, that's a good question. I'm going to answer in a second. I did have a question earlier from somebody in GoToWebinar about how to make sure that they're on the prize list. So if you're watching us on GoToWebinar, you're on the prize list. You've already registered. If you're watching us on YouTube, well, Kelly's going to put a link in the chat so you can actually come register, and that way you can be on the list for prizes. It doesn't mean you have to go to GoToWebinar. You can win either way, but we do need to have you register so that we can have you on the prize list. So, Kelly, if you could put that link on there. Steve wants to know when the link to the recordings are going to be available. As soon as I get our next presenter started, I'll actually put that link up there for you, Steve. It's we're streaming everything to YouTube, so we already know what all the links are for all week. And so I'll just send it over to you. Yeah, congratulations to Laura. Thanks to Vonda. Also, if you want to get your own extended trial, what we're doing for everybody as a prize is if you want to pay for a month, we'll give you a second and third month for free for Metastock. It has been rated #1 in its price category 29 years in a row. After our next speaker, we're going to talk a lot about system testing and how you can use Metastock to evaluate the best trades and that kind of stuff. But there's a reason it's been rated #1 for so many years, and I want you to try it. If you buy a month, we'll give you the second and third month for free. The pricing on that starts as low as $69 per month. You can go to metastock.com/conf promo. You can call us at 800-882-3040. And you can visit us at metastock.com/saleschat. So let's move along. Our next presenter is Adrian Manz. Adrian, we've given away a few of his books, but I really like his analogy. He has a baseball analogy to a lot of the patterns that he's defined, and he does a really, really good job in terms of having visual patterns that we've actually created into Metastock that he likes to talk about. And we love Adrian. We've been partners with him for a number of years, and we're going to go ahead and get him started so that I can get out of the way and get to the good stuff. Adrian, how are you doing today?
I'm good. I'm hoping the technology is all going to work here. We're in Playa del Carmen, so we are.
Oh, nice. We had somebody present from the airport yesterday, and no problems. So, I should not have said that out loud though, because But I can see your screen already. I can hear you really well. So
let's see. Are we on the right screen?
You were, but now you're on the presenter view.
All right, hang on a second.
So if you could go just undo what you just did. Perfect.
Yes. Okay.
I think that's all you need from me. The floor is yours, Adrian. Let's go.
All right. So thank you for having us again. And Julie and I have been Metastock partners for a long, long time. We've got a long history of working with these guys on the patterns, some of the stuff that I'm going to talk about today, and some of the stuff that I'm not going to talk about today. So Metastock did a great job of taking things that we worked out when we've been around for a long time. Obviously, we've been trading our own account since 1997. And we've been working through sort of a variety of venues, if you will. So when we started trading, we were all New York Stock Exchange. Like we knew our friends on the floor at the exchange. We'd spent a lot of time on the floor of the exchange. We both did our doctorates based on lots and lots of data, right? We were crunching numbers all through graduate school. We both went to Clement and got our PhDs. It's organizational behavior, so we're psychologists, but we're sort of business psychologists, right? Psychologists focusing on industry, and also got an MBA in international business and finance. And that was just like a really good groove to work with the exchange, and there was a lot of great data there. And the psychology that we focused on was the psychology of the people in those booths, right? The guys who run the trades at that time, the specialists, now they're designated market makers. We still get down there quite a bit. But what we found out was that the market has a definite psychology, and the market has a definite way that it's going to behave based on the players who are behaving, and that's where all these patterns and things came from that we developed in terms of how we look at the market. Now, I'm going to throw in a shameless plug here and just tell you that in addition to all the stuff that we've done in the past, coming in 2023, we are the hosts of Trader Nation, which will be a television program that's going to go and take a look at traders in terms of a psychology deep dive. So the first episode that we have, it's already in the can, right? We filmed it. We're working at Orbital Studios. It's the same place they shoot Star Wars, so it's a very odd kind of a set to be shooting a financial show. But the very first one is about the gamblers. So each episode is going to be different. Each episode is going to feature a different type of trader personality. We're going to interview top traders, probably a lot of the guys you've seen here at these Metastock summits. There's a lot of, good names floating through here who've been around a long time like we have and have been trading the markets for a long time. But we're also going to talk about alternative investments, Bitcoin and, insurance purchases, right? The repurchases of insurance policies. And, we've got a lot of interesting people who have, come up with different ways that they're approaching different markets. And that's just going to give everybody an idea of what's going on out there in terms of what people are doing to make some money. And then, of course, we're going to talk about our market strategy. We've been traders. We've been professional traders. We trade almost entirely intraday. So Julie and I don't hold anything overnight. The strategies that you'll see in the Around the Horn plugin that Metastock has work beautifully in any time frame. So you can go and just change the time compression on a chart, and those patterns are going to be valid whether you're looking at dailies, at weeklies, at monthlies, or if you're looking intraday. It's all the same thing. It's all based on market cyclicality, and it all goes through and tries to find you the best opportunities that you can possibly get in front of. And we've got guys who have been making a living trading with that plugin, just finding those patterns, going on 10 or 11 years now. So it's exciting. The show's gonna be exciting. It's fun. It's the studio bought it. So we don't know which network is gonna wind up running it, but it's gonna be a lot of fun. And then finally, there's gonna be an America Asks segment. And if you want, you can just hold your cell phone sideways in like landscape mode, and you can ask a question, do a little video and shoot it to me at adrian@traderinsight.com, and we'll get that email up again a little bit. So it's just Adrian, ADRIAN, @traderinsight, TRADERINSIGHT.com. And if we use it on the show, you get some cool show paraphernalia. But swag. So you'll enjoy the show, I promise. As I said, we both, we publish a lot. So we've done a lot of stuff over the years with the major publications out there, just keeping our ideas in front of people and showing people, what you can do in the markets and how you can trade this stuff. And what's really great about the strategies is they've all been very durable. So we've been trading all of this stuff ourselves for over 25 years now. And the thing that I did with Metastock all goes back to the book on the left side there. It's out of print right now. There will be a new version that's about twice as heavy on the trader psychology stuff as Around the Horn was, coming out in 2023, so mid 2023. But that book is all about market cyclicality, all about the cycles that markets move through. And it works by looking at every single time compression and then analyzing whether we're in a, it starts with, are we consolidating? Are we in a markup? Are we in a markdown? What particular phase is the market in? And then it goes through and it looks for 9 very specific things that happen typically in a market cycle. And what Metastock has done, and I licensed that material to a lot of sort of scanning companies early on. The only one that works the way that it should is Metastock. So that's the only scanner that if I sit down and I flip through the charts and I find the trades myself, and then I look at a list of suitable trades that were identified by the various scanners out there, Metastock's the only one that finds the same setups that I do. So I'm going to say it's great, and I know they've got a money-back guarantee and everything. So I'm really not. I'm not here to plug a plug-in, but if you want to try it, I think it's the best thing out there. And as a matter of fact, we've severed our licensing agreements with some of the other players out there because they just don't support the software. They don't. When people call and say something's not scanning right anymore. They just say, well, that function's no longer supported. And Metastock, I'm going to say this thing has been without a hitch since day one. People love it. So I'm going to take it back to basics today. Okay. I'm going to say we do this income trading boot camp with clients. And the thing that we've noticed over the years of doing this is even though we teach them how to do everything that we do, there are always 2 or 3 things that they latch on to because they're sort of the sexy trades. And the nice thing about the trades that they see that they want to play with, right? Because everything that Metastock does, like all those scans and all that stuff, that's all stuff you can automate. And then they also want to go and they want to get their fingers into the market. They want to work that first hour of the trading session the way that Julie and I always have. And the key to this working for them is as you go around that room, you're going to see, right, I'm looking at a Texas rancher. I'm looking at a guy who owned a chemical company. I'm looking at a guy who was an accountant. I've got a guy there who's an attorney, right? I know all these guys. We only do 2 of these events a year, and they're just 20 people each. And, you know, in the back row, I see a cop and I see an architect, and all of them come into this with very different psychology. And that's the challenge. Anybody can run a plugin, and anybody can go and say, okay, here's the list of things that I found for tomorrow. It's how do you go in tomorrow with the courage of your convictions and say, this is the way that I'm going to run these trades, and not go in and start tinkering with things and start, changing the dynamic of what it is that you're looking for. That's the thing that winds up hurting traders. So traders will get slammed because, well, yeah, I had the trade set up, but I didn't take them. Why didn't you take them? Well, because, I thought I saw something in the morning, or I thought, here we go again, or the futures are moving, or whatever. And really, it's about overcoming that kind of stuff. That, the long-term relationships with these people, that's really been the focus of working with them, has been, let's go back to basics, and let's just take a look at what it is you're really looking at, what it is you're really trying to accomplish when you're doing these trades. So today I'm going to go super basic. And I'm going to, we're not offering anything for sale. I am going to offer you a couple of weeks just to look over our shoulder and get our trading plans and stuff every day. There's no credit card or anything involved. I want you to take a look at what we're doing. If you're interested in it, I want you to look at it and then see, gee, how does this fit my psychology? How does this work with the way that I think, with the way that I feel about volatility? So volatility has been the big game lately, right? 700 points again this morning on the Dow futures. The market opened. We immediately had trades in Apple that went for exactly the profit moves and then exactly the profit extensions that we were looking for, because we were able to isolate the volatility and determine what our bias was. So this is going to be a no indicator kind of a presentation on this trade. This is just about, let's go back to basics. Can you go and look at a 5-minute chart, isolate where the volatility is, determine what your bias is going to be? Am I looking at a long trade? Am I looking at a short trade? And then limit your decision making. And what I mean by that is limit your discretion once you've identified the opportunities. So you want to be able to look at the market and say, here's my game plan. I'm waiting for the market to do X, Y, and Z. And when it does it, here's where I'm going to have my order resting, and I'm going to let the market come to me. I'm going to trap the opportunity. So I've done it all over these years, right? I've been involved 2 hedge funds. I started, worked professionally trading order flow. I've done all this stuff over the years, traded our own account. That's our primary income, done the education stuff. And what I can tell you for sure is your biggest enemy on any given trading day resides right between your ears. So there's a war going on where you're going to make decisions, or you're going to think you're making decisions, and then what you really wind up doing is second guessing yourself. And that's always going to be poison when you're trading. So when I look at these charts, right, I'm going to tell you, I've got more going on the chart than what you're looking at right here. You don't need to have more on the chart. What I refer to everything else as is a decision support tool. So I will do, the 2 SD bands. I do them a little bit differently. I do them on average true range. So I'm looking at, or on true range, I'm looking at, so the same thing Bollinger Bands are, except I'm trying to isolate volatility. And then I'm going through and I'm doing a very simple exercise every day of my life where I am going to go and highlight on a chart the places that I think something important's happening. So here we're looking at a 5-minute chart of Netflix. This was on November 7th. And I'm going to go and take my most basic tools and tell my software that what I want is I want to identify where the support and resistance is. So to me, support and resistance represents, the most important factor in my trading, because what I see when I look at this chart is that I've got some areas where price has made an inflection, and that inflection, right, whether it's happening early in the session or late in the session, right, or in the previous session, what we see happening over and over again is that price is bouncing right off of a level, right? So I can't get my pen to draw on the screen here, but it goes and right under that support line. So the pen's not important. Right under the support line there, what we see is price has had significant inflections right at that level. And then if I go a level up on Netflix, going into the close, right? This is the important time of day for me because this represents where sort of the final trend of the day is established. Going to the close, we have another level of support and resistance right there. And again, right, what this is all telling me, this area right here, is when price got there, it stopped dead in its tracks. And it did it on November the 4th. So if you look back on your chart, you'll see on November 4th, price stopped there when it was coming from above. Price paused there when it was coming from below. And right now, I don't even need any other indicator of what's going on to tell me that right there is where we've got pockets of order flow. And what I typically do on the individual stocks, you know, Netflix and Tesla, Nvidia, I do Microsoft quite a bit. So I've got sort of 3 of these that I set up, and I just go through and I isolate again for the session. Where did I see that significant support and resistance? And now for tomorrow, what I'm looking at is going into the closing bell. So from about 1420 here until 1500 on the chart, you see price come back down again, and we get an inflection right on that 256.91 line. So right at that 256.91 area, if price were to come there from above again, my best expectation is that price is going to do the same thing tomorrow as it did today. So how do I take this information and put it together in a form that allows me to avoid second guessing myself tomorrow? So this is where I've got these trading plans that I've been putting these out for 22, 23 years for ourselves. You can go through and look at the ones that the Metastock plugin generates. You can actually go to that trading plan. You'll have access to all that stuff when I give you the link at the end for 2 weeks. If you want it longer, you just call us and say, hey, you know what, I want it for 4 weeks. I want to take another 2 weeks to look at this stuff, and that's not a problem. You can go back on the Metastock stuff and look at the results, the actual blotters of all those trades going back to 2006. So all the way back to 2006, we've got every single one of the trades that was planned and then exactly what happened. That plan is actually a little bit more structured than this one. It's got an entry, it's got a stop, it's got a target, and it's got some rules about how you adjust things over the course of the day. This one takes those dynamics that I had on that chart and just lines them out so that tomorrow, what you're doing is you're taking today's price action and you're looking at it and you're saying, all right, well, he's got 256.91. That's isolated as an area of significant order flow. That level up to 257.87 is where he's expecting price to move relatively easily. There's a void there. When I went through the data, when I went through and I was looking at the order flow data, it's very little volume between 6.91 and 7.87. And 7.87 is where we started to see order flow sort of pushing back a little bit. Then the next level is 257.87 up to 258.70. And then the next level is 258.70 up to 259.43. And you can just see, I've got those lines drawn. I know why I'm looking at those areas. And then what I'm going to do in my trading software, right, when I go and set my trades up for the day, is I'm just going to say, if last price is less than or equal to 256.91, then buy stop limit 256.91 stop and 256.95 limit, right? I'll give it about 4 cents a slippage or so. And what I'm looking to have happen is just if price either starts below these bands or price comes in from above and then dips below that bottom band, then I'm looking for a reversal that will allow me to move back up through the bands over the course of the day. And typically what happens is when we get into those zones, we get the same kind. If you look at the move going into the closing bell yesterday on November 7th here, and then you look at what happened on November 8th, what you see is the dynamic of the move was relatively similar. So when it got down to that 6.91 level, it had a relatively easy range of motion up to that top band. So these trades, I'll set up 3 of them, plus I set up Apple. I set up tons of levels for Apple because Apple has sort of price persistency. You can go, and it's a separate page in the trading plan, and it goes through and it identifies all the different travel ranges that Apple's been working through in the past probably 3 weeks. So that list is very long, but once you plot them on your chart, you just save them there. And then the next morning, you just look at, okay, well, which set of the bands is Apple opening in? And then your handicap on that is just that you're looking at it and saying, okay, I've got a very high probability that if I start moving through these bands, it's going to move the way that it has in the past. But these ones with the three levels, what I do is I just set these up. And if Microsoft goes, if Netflix goes, if NVIDIA goes, right, if they do the right thing, if they go and they're starting below that lower band, and then they're going to move up through all the bands for a long or down through all the bands for a short, they're just going to go and automatically trigger for me. And then my only job is to go and ratchet stops up as I hit multiple levels of profitability. So by the time it's up into that 258.70 level, right, then you're moving your stop up to protect some profits. You're up to 257.86. So at that point, you've locked in $1. And over the day, right, most days, this thing puts up some pretty impressive numbers. $2.52 per share on this particular trading day. Today, if you were looking at the trading plans, huge gap, right? And what happened when the market went and gapped the way that it did? Well, if you had the levels saved from previous sessions, then you were ready for it, because Netflix today went and gapped higher and then dipped below the set of bands from 2 days ago. So just by leaving these things sort of stationary on the screen over the course of a week, you can always be ready for those areas that you've got order flow, that you've got price persistency, that you've got very strong support and resistance. And then all you're trying to do, you're going to work with the market instead of trying to beat it. You're never going to beat the market. So I don't care what anybody tells you, you're not going to beat the market. You can do this with stocks, you can do this with options, you can do this with futures on the triple Qs. We've got a number of different ways that we approach these markets. If you're going to do it with options, then what you're going to find out is when it's coming up on that 256.91 level, you're going to need a little bit more time to get in front of it, especially if you're doing the day trade, because when it hits 6.91, what's going to happen is the implied volatility is just going to open up, and that's where your profitability is coming from, right? It's the shift in the volatility, and the move in the options tends to happen very, very quickly. And what you want to do is you want to start anticipating whether it's going to get into those bands, because of course, as volatility increases, volatility becomes expensive, the spreads are going to widen, and then sometimes it's hard to get the fills. But if you're ready for it before it happens, it's not so bad, right? It's doable. We've got plenty of guys who are doing it, and if you want to talk to some of them, I can put you in touch with pretty much any of our students over the years who are trading this stuff with options, are very willing to. You options guys are a very tenacious bunch who love to talk options, so they're always willing to talk to people. And then futures, right? If you're trading the futures, it's going to be against like the spiders, the diamonds, and Qs. You're going to be trading the NASDAQ 100 futures. It's the same thing. I isolate the volatility on the triple Qs and then trade the volatility on the future. And what that does is gives you, for about $12,000 of trading capital, you can capture some very nice gains in a futures account. The key is don't over leverage. Always assess where would the stop be on the stock trade, on the equity trade, and then figure it out in dollars and say, if that's what I would be willing to lose in a stock account, trading the triple Qs, then I'm not willing to lose more than that in a futures account just because I can have more leverage, right? So it's all about managing your risk. So that's one of our core trades. That's an opening trade for us. Like I said, there's other dynamics that I use on these. So I do, if you join us in our trading room for the next couple of weeks or the next month or however long you need to look at it, what you're going to see is I've got an RSI on the screen. I've got one of the screens that has 2 SD bands on it, and a lot of what I'm doing over the course of the day is using anchored VWAPs and just going through and assessing, where the value line is going to be as it shifts over the course of the day. But the core of this trade, the core of this method is really just this simple. Go through, isolate the price levels that represent support, resistance, and order flow, and then just look tomorrow to capitalize on what happened today, and you should be okay going forward. It's a relatively simple trade, and it's one that's really been a bread and butter kind of a thing for us for the last 15 years or so. So the next thing I want to look at, I know Jeff had said I do a lot of stuff around a baseball metaphor, and that's because when I originally wrote Around the Horn, A Trader's Guide to Consistently Scoring in the Markets, it was called a multivariate analysis of variance in the United States equities market, multivariate analysis of covariance in the US equities markets. And that was not going to be a book that was going to fly off the shelves, or at least my publisher had those thoughts. So we went and converted things more into an analogy that I thought was easy to follow. I'm a big baseball fan. And, I think baseball has a lot of things in common with trading in general. It's, every time you step up to the plate, you've got to have a new outlook, right? You can't think about the time you struck out. You can't think about the time you hit the home run. You can't step up there and start swinging for the fences. You have to know where your head's at every second of the day. And you need to be very in touch with your psychology. And this next setup that I'm going to show you, this is not resident in the scanner that we've built for Metastock, but I think it probably can be. I'm going to talk to Jeff about getting these 2 SD gaps coded up, because it's a relatively simple thing to find in the morning. And once you have found your list of candidates, it's a great trade that you can capitalize on relatively easily. So I'll just tell you, this week, we've had a ton of gaps, and today and yesterday, those days were not days that this thing worked at all. It just didn't give us any triggers whatsoever, and that's because we had a bunch of geopolitical stuff going on, and then we had this giant gap in the morning. So, instead of having the normal list of gaps that we would get, which is, 5 or 10, we wound up with so many that it was practically impossible to sift through them. But most days, this is a very manageable thing. I call it Baltimore chop because the Baltimore Orioles of yesteryear, not the new Baltimore Orioles, the old guys, they had a trick when they had a runner who, let's say, wasn't necessarily particularly speedy getting to first base. So the pitcher would throw the ball, and the runner, the batter at this point, would spike the ball down into the ground. It would pop over the pitcher's head, and by the time they could field the ball, the runner was at first base. This looks a lot to me like this particular trade. So when Julie and I set this up in terms of the pattern, right, I'm very visual. I'm very much about, as Jeff said, if you look at the patterns of the book, or if you buy the module and then you look at the patterns that Metastock has on the site, so that you can see how they work, you will see that everything that I do keys off of just visually represented information, stuff that's very easy to see. When Julie and I first came up with this strategy, we used the implied volatility of the front month contract for every single stock in the S&P 500 and S&P 400. And what would happen was, when we would have a day where we couldn't import the data, it messed everything up, and then we would not have a good analysis to perform. So we figured out that true range actually was a very good proxy for volatility. And if you don't know the difference, range is just today's high minus the low. So when you're looking at a bar chart, and I've just got regular bar charts, I know some of you guys love candles. Julie trades from candlesticks. There's nothing, I don't care what you're trading on. I just find bar charts very easy to follow. And on a bar chart, it's just today's high minus today's low is range. Everybody knows this, right? So if the price had a high of $50.10 and today's low was $49.40, 70 cents of range for the day. Problem is with statistics, and these are all statistical patterns. Remember, we've gone and converted them into visual things, but they're still statistical patterns at heart. In statistics, it's very, very important that what you are measuring is actually the thing you're interested in. And if you're looking at gaps, you need volatility. You need to have the propensity of something, or the, on average, how much does it gap, right? And then how much can we expect it to move away from that average? The only way you can do that is with true range, and not average true range. So if your software, if you've got things set up where you're looking at average true range, you're going to want to set the look back period to 1, so that it only looks at 1 day of average true range. That gives you true range, then not average true range. So the true range today is either it's the greater value of the high minus the low, or the absolute value of the high minus the previous close, or the absolute value of the low minus the previous close. And what that does is it goes and factors in gaps. So here's that same bar. If that's the high, and then yesterday closed here, then what this tells us is the true range for that day, a 50.10 high and a $49 close the previous day. The true range was $1.10. So now you're going to use that as a proxy for volatility. And the assumptions then are that data is normally distributed, because all statistical analyses are going to require that you're working with a normal distribution, normally distributed data. And I can tell you volatility is normally distributed. It's been proven 1,000,000 times. True range is a proxy for volatility. Julie and I have done a bunch of work with this, and we've had terrific luck trading this particular strategy. I can tell you true range is a great proxy for volatility. And then volatility is mean reverting. And there's a ton of information out there that shows you that over time, volatility is mean reverting. You guys who are options traders, if you're selling volatility when it's expensive and covering the sale when volatility comes back into the normal range, you know what I'm talking about. You're looking for volatility to revert to the mean, because what the mean is the average of the standard normal curve, right? This curve of data here, this is how data is normally distributed. When you move out 1 standard deviation from your average, you've accounted for 68.2% of the volatility that you're going to expect. When you go out 2 standard deviations, you've got a 95% probability at this point that volatility is going to revert toward that mean. And mean reversion, if you guys don't know what it is, very simple concept. In the middle of this data, that black line, that's the mean. The red balloons are high volatility. The blue balloons are reversions. And it does not assume that we're going to go back and hit the mean again, right? We're not assuming that we're going to go all the way back where you're going to have a gap this morning that opens and then winds up at yesterday's close. What it says is we're going to move back toward that central tendency. We're going to move back toward yesterday's close, and we're just going to try to capture it based on the pattern, based on the visual thing that we see. The formula input, so if you're going to do this in Excel, you can just take your data, you can take your Metastock data, take your true range data for the past 10 days. And what you're going to do is you're going to, for each day of true range, you're going to subtract the average true range for the past 10 days. And then you're going to sum those up. You're going to square that number to get rid of each one of the negative numbers that results, right? You're going to want these to be squared. And then you divide it by n, the number of samples, so 10 in this case, you're looking back 10 periods. You take the square root, that gets rid of that square, that gives you 1 standard deviation. So you've got this very, very simple formula. If you guys are statisticians, it's not n-1 in this case. We're adjusting for sample size. We're just using n, so we're just putting a 10 in the denominator. And then what that does is if these are 10 days worth of data, right? Here's your true range data for days 1 through 10. We plug this in right there. We take for each one of those, for 1.03, we subtract 1.15 or 1.25. Right, and we're right down the line, so we get to 1.97. Each one of those gets squared. We're taking that sum. What that gives us when we divide it by the 10 is it gives us 1 standard deviation. So the square root of that equation there provides 1 standard deviation. 2 standard deviations is just 2 times that number, so 98 cents. So what we know is $1.25 is the average. We take 98 and add it to the 125. So now $2.23 is what we need to see in the morning in terms of a gap to say we're expecting a reversal. And let's say we get that gap lower. So here we go. These are 5-minute bars, right, on an idealized sort of a chart here. These are 5-minute bars going into yesterday's close. We get a gap down. And then what we do is we follow that gap lower. You guys are all familiar with a 1, 2, 3 pullback or 1, 2, 3, 4 pullback. You're just following those highs down. So the first bar, the high of that bar is your first threshold level. Your second bar, the high of that bar is your threshold level. The third bar, same thing. And for each one of these bars, what you're doing in bar 2 is saying, if bar 3 opens and trades up through the high, I'm going to have my long trade. I'm looking for the reversion to the mean. If it happens in bar 3, great. If it doesn't happen in bar 3, maybe it'll happen in bar 4. And I follow these until 7 a.m. Pacific time, because we live in out in Malibu, California, Pacific Palisades, California. And we're going to look at these for that first half hour, 7 a.m. Pacific, 10 a.m. Eastern time. After that, you're assuming the statistic is starting to wobble a little bit. Maybe it's a shifted distribution, but you see that high right there. If it gets up through that high in the next bar, then what we're doing is looking to go long, and what we're going to target is something significant in the first bar of trading. So it's usually the open, the close, right? The high, the low. What you're going to do is look at where did things start moving lower in this case. So this is a long trade we're looking to enter. This is after a gap down. We see that after the open, it barely ticked up, started careening lower. And once it gets to that price level, we don't care what it's going to do the rest of the day, because what we're assuming is that that level is going to represent where something's going to happen again, where we're going to see another sell-off. And we want to take our profit when we get there and then just let the stock do what it's going to do. My son, Connor, he's 14 now, for those of you who remember him, but you remember when he was 5 or 6 years old, Daddy, they go where they go, he would say. And the reason I say this is looks like a Baltimore chop to me is, right, if the batter hit the ball, he spiked it down into the ground, and then it popped out over the pitcher's head, and you had time to book the profit. So I'm going to show you what one of these looks like in an actual recent trade. So this one's from last week. When we go through and look for the opportunities, so I actually have this ported to Excel. I would love it if Jeff would say we're going to put a scanner together and lump this into the package, because I think it'd be great. Like if Metastock can just go through and peel these off, it would make life easy for everybody. Here's our scanner. So what I'm doing is I'm just feeding this thing data, and it's going through, and it's Excel in the background is doing my calculations for me, and I share this with our guys. So when you're in our trading group for the next couple of weeks or month or whatever it's going to take you to evaluate what's going on, you're going to see this scanner every morning. And what this thing does is I've just got them separated into, I've got a list of S&P 500 candidates, S&P 400 candidates, and then whether or not those stocks are popping on the news wires. So we got a little algorithm that goes through and just sort of scrubs the internet, scrubs the news wires to see how many times is something being talked about. And if you have a lot of data like we did this particular day, what's nice is it shifts it over into this far right column. The ones that are in the news are ones you can expect a lot of people are going to be paying attention to. There's also an asterisk. The asterisk on some of these, or in this case on most of them, refers to earnings. So these gaps are on earnings. Earnings are very normalized data, and normalized data does what? It reverts to the mean. So if there's no star, if there's no asterisk next to one of the symbols, then the best thing to do, especially if it showed up in that news column, is to go find out what the news was. So this past week, we had a CEO who woke up in the wrong house, and that made for a very big news event, and that made for a shift in a distribution, and that made for a gap that was not really tradable this way, because these gaps are tradable because they're normal data and they tend to revert to the mean. You know, CEO, COO steals all the money, you know, winds up down here in Mexico somewhere. That's not normal data. That's a shifted distribution. That's something has changed the fundamental nature of what's going on with the company. There might be a change in management coming. That's not the thing you want to fade. What you want to fade, normally distributed data, typically on earnings, and almost always when there's a bunch of them on the spreadsheet like this, you just shift over and you look at the news column. Are they in the news? So what I do on any given morning with the spreadsheet, the way that we sort of pop this out for our guys, is we've got these lists on the side, and I just take a look through the list and I identify which ones I think are going to be the best candidates, which ones Julie and I are actually going to go ahead and trade. And what I'll do is I highlight them on our end. So this one is not going to show the highlights, but when we're live, when the data's live, it'll go and light up the stocks that I'm interested in trading on the long side, on the short side. And then based on the fact that, you know, you've watched, I've got a little short course that you can watch on this. I've got a big course that you're more than welcome to buy. It's like a 20-hour commitment of your time to go through and really learn every little iteration of how this stuff works. But the little short course will show you exactly what I just showed you before. Look for those 1, 2, 3 setups. Those are the easiest ones to trade. And if you only get 3 or 4 of them a week, you're still going to be a happy person. You're going to be a happy trader because you've got 4 really good opportunities to get in front of. You know exactly what the risk profile on the thing is. You know exactly where to place your entry, exactly where to place your target, exactly where to place your stop. So in this case, ABBV. So this was the trade that made the most sense here. And if you look at the setup, you can see in that first bar on the left here, right? And again, I don't know why this thing won't let me draw. I think it's got something to do with the presentation software, right? But this first bar represents the point at which you've had a gap down. So you had a gap lower here, and now you start counting. So now you're going to look at this and you're going to figure out, is the high of that bar going to be the lowest high? If it is, then for now, what I'm going to say is just, you know, you guys ignore it, because what I want you to do is focus on the 1, 2, 3s. After the first bar is in, we right away get this big move to the downside. And now we start seeing there's a picture forming here of what's going on. If the next bar were to open and then trade higher through that line that I just drew there, then you'd be looking for a tick back up into the 149.20 area, where something major happened, right? You got up to 149.20, had a major reversal stop, you know, dropped way back down again. And that would be where I'd be looking to take a profit on that. The next move down, same thing. If bar number 4 were to open and trade up through that threshold, then what we would assume is we're starting to get an opportunity to trade maybe into the close of bar 1, maybe into the high of bar 2 as a profit objective. And the deeper we get into this, the safer these trades start to become. And what you're seeing here is the threshold level. So we get this last bar that forms. And this is your favorite way to see this happen. The bar opened low. It traveled up into the upper end of its range. It closed in sort of the top 25% of its range. And then the next bar opened right in line. It was an inline open with the previous 5-minute close. It tracks right through that entry price. And it gives us the opportunity then to have a very, very precise profit objective. So we see that we don't have to worry about all that volatility in the top of bar 1. We have a nice travel range from the top of bar number 6 there up to the close of bar number 1. And the stop loss in this case initially is going to be, for us, typically what we'll do is I would probably use the low of bar 6 in this case, just because of the way that it's supported there. But as I'm telling my guys what I'm doing, I'm saying, okay, we're going to go short, we're going to go long here. above bar 6 high. Then once we start traveling higher in bar 7, very, very rapidly, we're going to move the stop up. We just drag our line, right? Whatever software you're using to trade, turn on chart trading, make sure that it pops the line on the screen showing where your stop is and your target and all that good stuff. And then you're just going to grab that bottom line and pull it up to the low of bar number 7. If it comes back down, once it's up halfway into that range, let's say if it comes back down and starts tracking down through that low, what you've done very, very quickly is got the stop on the trade and the trade itself to just about risk-free. And then over the course of the next 5 minutes, 10 minutes, you're not worried about what price might do after it reaches your target, because it doesn't matter that it got all the way up into the high of bar 1. That doesn't matter at all, because it could very well be the case that it just gets to the close of R1 and reverses. It could be, there's a lot of things can happen here. There's a lot of dynamics that'll happen here. Exactly what we thought was going to happen did happen. When it got up to that high of bar 1, it started traveling lower again, but you had no way of knowing when you put this trade on that it was going to progress that slowly up to that high, that you were going to have that much sort of thinking time about this. And trust me, a lot of mornings we're putting on 4 of these. And our whole trick is just, we want to get a bracket order out there on trade number 1, bracket order out there on trade number 2, bracket order out there on all the trades that we've identified that are sort of the picture perfect setup. And then our only job is to go and adjust the brackets as the trade starts moving in our favor or as the bars keep moving lower. So in bar number 2, you had a buy order, didn't trigger. Bar number 3, you move the buy order down to the top of bar number 3. Bar number 4, you did the same thing. You move it down so that you just keep following that down lower. That's the only thing you have to think about, is every 5 minutes, you look at all your orders and see if they haven't triggered, I need to adjust them. I need to adjust where I've got the order placed. So on my particular trading platform, I'm just setting up a bracket order. You might be using OCOs, you might be using, you've got all sorts of conditional orders with brackets embedded in some trading software. No matter what the trading software is that you're using to actually present your order to the exchange, you're going to go through and identify. So in this case, my software still uses the old floor trader term. So buy 144 stop, 144.05 limit. So that's my entry. That's how I'm going to get into the trade first thing in the morning. Then it also goes and says, okay, well, I want to get out of this trade. I'm going to issue an order to exit 100% of the trade for a profit, 100% of the trade for a loss. And I put in my initial parameters, right? 146.50 was that initial target. 143 was the initial stop loss. I can see there, based on the share size, what the potential profitability, what the potential loss is going to be. And what you don't want to do is adjust your stop loss based on how much you're willing to lose. So I've been beating this drum for 20 years. The market does not care how much you would like to make or what you're willing to lose. The important thing to focus on is, if that number is too big, the potential P&L, right, the L is too big, adjust the share size. You just adjust the number of shares that you're going to trade going into the thing until that's an acceptable resolution one way or the other. And then what you have is a trade that doesn't involve your psychology anymore, your risk aversion, your ability to handle loss, your ability to not treat trading as if it's a game, or your inability to deal with the stress, right? People get neurotic when they start losing money. They go crazy because they have these things sized incorrectly. And whatever your position sizing is, that's going to make an acceptable outcome, that's going to be something you can live with, doesn't keep you up at night, that's what you ought to be doing when you do these trades. Okay, so as I said, I'm going to give you a very simple special offer, and it's just free. You can join us. You can take a look. If you like what you see, then maybe you'll decide to join us going forward, or that this will be something that you'd like to do. It's traderinsight.com/morning. And when you fill that out, fill out all the fields including a text phone number, a phone number where you can receive a text message. So what I do is every morning around this time, actually around 11 a.m., I send out a video to your cell phone, an updated video telling you what all the levels are that I'm looking at going into the next part of the trading day. And then I'll send those kind of updates out a couple times over the day. I used to try to do it just with the email. It doesn't work because people don't get the email, or the email, you know, if it goes out a little bit late, then they think I wasn't going to send it. If it goes out a little bit early, then they say they missed it. This is just real simple. You get a text message, and the text message says, hey, it's Adrian. I've got my game plan for the afternoon set up. Click on, or you know, touch the link, and then it's just going to give you the Vimeo video to look at. There's no advertising in it. There's no, you know, links to a million other videos. It's just that video for that day. And it says, here's how I'm handling the triple Qs for the rest of the session. Here's what I'm doing with Apple for the rest of the session. These are the levels that I'm looking at. And these are the places that I think we should all focus our attention. And it's going to be like a really, really simple way for you to get a toe in the water and a feel for what it is we're doing. Again, you can do this with stocks. You can do it with options. You can do it with futures. The stocks and options, the equities and the options trades are going to be, you know, the ones that you're going to focus on with the individual symbols. The futures traders out there, QQQ is a big part of what we do every day. So you'll be plenty busy too. So there's lots and lots of opportunity. You'll get really clear instructions on how to log into the site. There's a nice explainer video, shows you how to navigate things and how to find your way around and get into all that good stuff that I showed you. You can find the results of what your last 10 years, 15 years would have looked like where you're using that Metastock plugin and sifting through that information and setting those trades up. Those are automated. Those are set them and forget them trades. I've got guys who work for a living who, you know, just set those trades up and they leave. And then they come back to find out what's going on. You just have to make sure that you have an order in that says, oh, by the way, if the market's about to close, I want to be flat, just in case you didn't hit a stop, you didn't hit a target, you're sort of floating around in the middle. Those are all there. These are all there. And, you know, hopefully it can get you to a point where things like the volatility that we've been experiencing for the past couple of months don't strike you as a threat, but instead you see them as a big opportunity. All right, I think I got some time for questions. I hope I have a little bit of time for questions. Hope that made sense.
Hey, yeah, we have a couple. We have two total.
Okay.
So, but first, Alfonso says he looks forward to seeing you in the room. He signed up at traderinsight.com/morning.
Okay.
So, thank you, Alfonso. Well, I'm sure Adrian will see you in the room. Tavanda had a question, though. How does major layoffs such as Facebook, Google, and Twitter affect the stock market, especially the technology side?
So when you get, you know, when we get these major moves, you know, get these, like, you know, yesterday, these layoff announcements, the push and pull with Elon, with Twitter, and then again, you know, the layoff announcement. The thing you want to focus on is that you're not, you know, sort of on the wrong side of the volatility. So when we see a big gap, you know, I'm a big fan of these, you know, sort of market heat maps where you can go through and see what is the entire market doing and then have it broken down by sector. So if you see that the sector that you're looking at is entirely lit up in red, with the exception of one, you know, Meta, which all of a sudden has gone green because they laid off a ton of people and now they're going to save a bunch of money supposedly. Then what you want to make sure of is that you're not pulled into a trade that's sort of counter to the overall direction of the sector. And then the same thing applies for a day where a single stock actually manages to pull the entire sector, right? So you get up in the morning and you're looking at the news and you see that, yeah, Meta's had this, you know, major kind of a game-changing announcement that they're making, and all the tech stocks are following suit. And then you've got a short sale set up for that day where the whole market's going long. Then if you're trading the markets, a lot of times it's just a good idea. I told my guys this morning, I just said, you know, we're gapping 700 points. Game plan changed. We're not looking at the short side on pretty much anything. What we're going to do is we're going to focus on triple Qs and Apple on the long side of the market. We're going to skip the gaps because hundreds of stocks gapped this morning. We're going to focus on QQQ. We're going to focus on Apple. Wait, and then we go through and we do the same exercise I showed you. We go through, we identify the support and resistance levels. If you guys have Icon, if you guys have access to the news that Metastock provides, it's like a super tool, right? It's the cleanest news app I think I've ever seen in my life. You can go in and drill down really, really quickly and figure out, okay, well, where's all the movement in the market coming from? And if you see that it's driven by economic numbers, and you see that it's something major like today, you get this, everybody's afraid of what? Inflation. And then you get the news that finally it looks like inflation is starting to soften, then you know that the psychology of the market is going to be, maybe we're looking at a slowdown in these interest rate hikes, and that's going to be good for the market. So you look at the long side. So you draw those, very simple exercise, just go through and find the places that a stock like Apple has had a lot of major support over the past few days, past few weeks. Same thing on the triple Qs. And then just wait for price to come back to you. If it looks like it's running away, you think you're going to jump on a runaway train, and as the thing's leaving the station, you're going to jump on this thing and everything's going to work out in your favor. It's not, because what happens most of the time is if the threshold level for an entry is $1 below where you're getting in, then you wind up getting in the middle of a run, and then the next thing you know, the stock's back at that threshold entry. You wind up stopping out because that's all you're willing to lose. And then what happens? It turns around and it does exactly what you expected it to do when it hits that level, and you've gone and defeated your own psychology. So you draw the lines, you wait, and if the market gets away from you, you don't worry about it. You just let it go, and you find something else. There's always, like I said, we've got 4 stocks, 5 stocks that we focus on for the volatility. It's usually Microsoft, Netflix, Nvidia, maybe Tesla, Apple, and the triple Qs. And in that mix, we're going to find an opportunity. If we force the opportunity, I guarantee you that story's got a beginning and it's got an end, and a bunch of stuff in the middle you're going to hate, right? So that's how we handle those surprise opens.
Larry wants to know if you would recommend your book for being relevant for today's markets.
Yeah, absolutely. It's a I don't know how easy. Actually, it is easy to get. You can get Around the Horn. Possibly, you can find right now. You can definitely get Beat the Street, which is the international version of it that Harriman House published in Europe, in England. It's in English. It just doesn't have the baseball analogies. But it goes through and identifies market cyclicality that you can pinpoint on your charts, and market cycles are always going to be the thing that drives markets, right? So it's always going to be about, where's the order flow? How can I get in front of those order flow thresholds and be part of the order flow when it happens? And that's going to keep you on the right side of the market.
All right. And then last question real quick, because we're out of time, but when I actually downloaded your book, I don't know if you noticed, but I was showing it to people. Last question, GR wants to know if this is applicable for equity options.
Yes, so you can do all of this with options. The trick with the options is going to be on the it's easier on the super cap stocks, like the Microsoft, the Netflix, the Tesla, those don't tend to have, well, Tesla has some pretty big spreads, but Apple, those are going to be stocks that have manageable spreads, and the spread is going to be your enemy with equity options, generally speaking, because when it gets into the threshold level, what tends to happen is implied volatility spikes. And when that volatility spikes, it gets expensive, right? So that's where you wind up getting the spreads. But on most of the stuff that we trade, I'll say probably at least 40 to 50% of the people we've trained over the years, and that's hundreds of people who have worked with us at those boot camps. At least half of them are trading the stuff with options.
All right. Okay. So sign up, guys. Traderinsight.com/morning. And get your 2 free weeks. Thank you again, Adrian. I really appreciate it. I'm going to talk real quickly about the add-on and all the work we did with it, but I always appreciate your coming in.
All right. Always appreciate you having me. Nice being with you, Jeff.
All right. See you again soon.
Okay.
Okay. Let me do that. Okay. And let's go ahead and turn on the screen too. As Adrian had mentioned, and I really appreciate all the kind words about all the work we put into his add-on and that kind of stuff. Of course, we've developed and designed this for Metastock. You can do all the scanning for the patterns. We include all of the patterns that are in the book here around the horn. And it's a really, really good compliment to Adrian, what he's doing. So, and this add-on, generally, we've had it around for, and we've had it for a while. People really, really like it. It's going to include these patterns: the fastball, the line drive, the backdoor slider, the double hitter, the infield fly, the 3-2 pitcher, and the switch hitter. So this add-on is actually relatively underpriced. Really, it is. Normally, it's $399 as a one-time cost. We are going to give a discount on that here at the conference. It's only going to be $299. It does include scanning and testing and commentaries for all of those patterns. And if you need to if you want to get a Metastock trial as part of it, if you don't have Metastock already, we'll include even a trial of Metastock, which by itself, for the real-time version, is almost worth the price of the add-on. So we'll also give you a 30-day money-back guarantee. You can call us at 800-882-3040. You can visit us online at metastock.com/saleschat. And you can also go to metastock.com/conf promo. So those are, and all of those websites are working. We did have to take it down, the website, just to fix a small issue that we had a little bit earlier, but it's all working now. So there you go. I want to say thank you to CMT, the CMT Association, for sponsoring this week's event. We really do appreciate it hugely. A company or an organization, a nonprofit organization with a great reputation, and does accreditation around technical analysis, risk management, systems development, portfolio management, and behavioral finance. If you are looking to trade other people's money for a living, or if you currently do that, it's pretty impressive of how a CMT designation after your name can help. You can find out more about that at cmtassociation.org. Also, if you come in just a little, if you stay here for a little bit longer, we're going to have Tyler actually come and actually talk to you about CMT Association here in just a few hours. So look forward to seeing him and having him on a little bit later. And we appreciate the sponsorship. Kelly, we're going to give away a prize, and then you're going to come talk. So the prize that we're going to give away is this book right here, this Around the Horn book. We just listened to Adrian Manz. It seems like a perfect time.
It is. That is a good time to give that book away, I think.
All right, let's go ahead and do it. This is just let's not undersell it. It's a book. Adrian just talked about it. It's a $95 book. It's hardcover. It's got a lot of really nice, pretty charts that were made in Metastock in it. And it's going to be a random winner between 1 and 11,425.
Oh, okay, sorry. I was trying to think of a number and I went blank for a second. Let's see. Let's go with 4,785.
That is Chalapathy G in Canada with a Gmail account. So I'm going to make a real quick note of that, and then we're going to get on with our next presenter. Do you know we have a really exciting presenter next?
I hear he's handsome.
All right, here we go. All right. Also, we're Metastock. We're going to talk about Metastock now. Tamuni says we should go with number 5 next time. Hey, maybe we will. Maybe we will for the next prize. You're welcome, Tamuni. Thanks for coming. All right. We're Metastock. If you want to get an extended trial, you want to take advantage of any of the super offers that we have today, go to metastock.com/conf promo. If you want to chat with us, ask about Metastock, give us a call at 800-882-3040. You can also visit we're like 35 hours in. How am I going to go for another like to 40? Anyway, give us a call at 800-882-3040. Our next presenter is actually Kelly. Kelly's been doing a great job of running the control room for the last 3 days, but he's also the president, CEO of the company. He's also my boss, so if you have good comments for me, now is, never mind, just kidding. In any case, he's going to talk about system testing. He does a really good job about it, and I'm just going to stand up, grab my laptop. He's going to sit down, put down his laptop, and we're just going to change positions for a minute. So give us 2 seconds while we play musical chairs. And Kelly, I do have your PowerPoint ready to go right here too.
Great, thank you.
Oh, I didn't read your legal disclaimer. Sorry, you have to.
I'll have to read it.
All right, it's all yours.
Thank you, Jeff. You guys did not know that you were going to actually watch a game of musical chairs today. That was pretty exciting. I'm going to just switch headsets there, and welcome again, everybody. It's actually good to be out of the control room and here in the studio. So I'm excited to be able to talk to you today. Again, thanks to Jeff for all the hard work he's been putting in over the last few days to make sure that this conference goes off smoothly. It's gone off, I think, without a hitch this time, Jeff. I think we're doing pretty well. I shouldn't have said that because now we're going to be jinxed. Anyway, so let's go ahead and get started. The very first thing I actually need to do, again, is go ahead and talk about our disclaimer. So I'm going to go ahead and read the disclaimer, and then we'll get right into the presentation. This demonstration is designed to instruct you on using Metastock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines for interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. The good news is I don't have to read the second half of that, but know that there is risk inherent in trading. We all know that if we've been trading, there's always risk. Don't trade with money that you can't afford to lose, as you've been hearing from our presenters over the last few days. It's always good advice. And Jeff, if you wouldn't mind coming over for a second and closing the door to the studio, that would be great, if you wouldn't mind. We've been kind of going through the history of Metastock, but Metastock's been around since 1982. I mean, think about those old computers that Metastock ran on, going back into the days, into the DOS days. That's how long Metastock's been around. And we've been providing the best technical analysis tools over that whole period of time. It's pretty amazing, our story. And as Jeff's been talking about, we've won the Reader's Choice Award for the last 29 years from Stocks and Commodities. So we're very proud of that. And again, that's the readers voting. That's not part of the sponsorship of this conference or anything. That's just them voting over the last 29 years that they love Metastock. So I'm going to hopefully show you some reasons why people love Metastock and some ways that you can use Metastock to actually help improve your trading. So let's go ahead and jump in here. So here's some of the tools in Metastock. We're not going to be talking about all of these tools, but obviously charting, you've been seeing that a lot over the last few days of the conference. Scanning, you've been seeing a lot over in the conference. Back testing. So scanning you've been seeing, you haven't been seeing back testing yet. And we're going to go into back testing and show you kind of some of the reasons why you should back test. Forecasting is what Scott talked about on Monday. Options data, the global data, and the powerful news. So you just heard Adrian talk about how much he loves our news and the cleanest news that it is. You know, when you hear that from somebody like Adrian, it definitely lends a lot of credibility to it. So here's where I like to start in a cockpit of a plane. Well, why would I want to talk about a cockpit of a plane? Well, you know, for somebody like myself, I travel a lot for Metastock. I go all over the world, talk to people about Metastock and what it does. And I travel a lot, so I'm on planes a lot. So I think about planes and kind of the way that they work and what goes on with them. But think about that cockpit, what happens before you leave. You have two pilots up there. You have a pilot and a co-pilot, and they need to sit down and they need to go through a checklist before that plane leaves. So they have to go through and step by step, every time, look at every detail before that plane backs away from the gate. If they don't, well, that's what we don't like to think about, is what happens if they don't. And well, let's talk about what happens if they don't. So, you know, being somebody who travels, you know, I do watch TV shows, and one of the TV shows that I enjoy is a show called Airplane Disasters. And why would somebody who travels like a show called Airplane Disasters? Well, that's a different story. But the reason why I like it is when an accident happens, they go back and they dissect what happened to lead to that accident. And if it's not a mechanical issue, it leads back to these pilots not doing something on their checklist. Something went wrong in their checklist, and when they didn't follow it, things went awry. And that can happen in our trading as well. So if we don't follow our checklist, we can end up with a problem and leading to disaster, right? So that's kind of why I like to talk about the cockpit a little bit. So it's important to follow our checklist. And I would say over the last 3.5 days, one of the things that you have heard consistently from the other speakers is discipline is key. Everybody has talked about it in some form or another, that discipline is one of the most important part of trading. And that's a little bit about what we're going to talk about today. And identifying this is trade identification and following a checklist, okay? And definitely, if you have any questions as I go through this presentation, be sure to ask them. I'm happy to stop and answer anything. But what we're going to talk about is, one, how to find the best stocks to trade, because that's always the biggest question, right? What do I want to trade today? How do I sit down? How do I find what I want to trade today? When you should get in and out of a trade, how to test your system before you spend your first trading dollar, and finally, how to add clarity to your trading decisions. Okay, so if I think about indicators or trading systems, really they're kind of broken out in 4 different aspects. So we look at this and we say, okay, well, we've got trending indicators, we've got momentum indicators, volatility indicators, and volume. So if we kind of look at the main core of the different technical analysis buckets of indicators, these are our 4 main categories. Okay, so if we think about some specific examples, as you see on the screen, so if I'm talking about trend, things like moving average are trending indicators. MACD is a trending indicator. If I think about momentum, stochastic or the RSI, or maybe the stochastic RSI combined. Volatility, so the Bollinger Bands or average true range. Volume, on-balance volume, and shaken money flow. Okay, so these are some good examples of different types of indicators. So if I look at a chart, so this is a chart of Alphabet, Google, and I look at it and I'm thinking, okay, well, what types of indicators should I use on this chart? Or should I use trend? Should I use momentum? Should I use volatility? Should I use volume? What is going to be the best indicator to trade when I trade Google? And that's what we're going to talk about, how to find the best trading system and the best indicators for yourself. So we're going to talk about using your preferred indicators or finding the best indicators. So we're going to start with using your preferred indicators. Okay, so where we'll start, let's go over to Metastock here. And what we're going to do is we're going to start in the Explorer, which again is, you know, when you talk to the presenters and everybody, well, I think it's kind of a resounding, everybody kind of feels the same way. The scanner is one of the best places to start Metastock because it gets you to where you want to go quickly. It's funny, you know, it's my favorite tool in Metastock, but it's where I spend the least amount of time because it gets me to where I want to go quickly. So that's one of the kind of the great things about this. So actually first, let's just look at a clean chart here. And let's just put on an indicator here. So we're going to put on the MACD as an example here. So the MACD is a trending indicator. Okay, so we just talked about that. And what we're looking for with the MACD, if you're not familiar with it, is we're looking for what's called signal line crossovers. So this would be an exit signal because we have a signal line crossover. This would be an entry. This would be an exit, right next to it, okay? So we have, you can see a lot of different signals here. So you can see these. Another place we could look at this is with our expert advisor, of course. Let's just put on the MACD expert here, because we're going to use the MACD as our first example. And the reason why I like to use the MACD as our first example is because a lot of people are familiar with the MACD and what it does. But if you're not familiar with it, you can see here the buy and sell signals generated by the signal line crossovers as they go through here. So this particular stock, our last signal was back here. But if I was going to trade Pentair, how do I know that the MACD works? And that's our big question as traders is, hey, I'm going to sit down, I'm going to trade this. Man, it got me in back here. If I had bought back here, did it work out very well? So those are some of the things we're going to explore. So let's go back here and go back to our Explorer. And what we're going to look for is we're going to look for these signal line crossovers across the vast universe of stocks. So I'm just going to come up here and search MACD. And what we're going to do is choose this expert system right here. And we're going to scan through the Dow 30. Let's do the Dow 30, the NASDAQ 100, and the S&P 500. It's a good 630 stocks. Let's go ahead and start our exploration here. So it's going to turn through those 630 stocks for me. Well, there's duplicates across them, so only 526. And it's going to tell me stocks that are matching my criteria today. So today's the day we had the CPI. Again, we're having a big run up on the market. So we may see a lot of buy signals today because of that. We may also see some sell signals. We may see some overbought, oversold. So we'll see what results we get here as we go. Mohawk is saying that he can't hear. If you're not hearing, what I recommend, well, maybe, let's see, let me just put in here, refresh your browser. Sorry about that. I realize that's a really loud keyboard, probably in the microphone. Okay, there we go. Okay, so we have now found, let's look at our list here. So of our 526, we have some kind of results across a vast universe here. So it looks like we have 519. Let's see that. Okay. So what happened there was, that was probably too many here. There's this option in the Explorer that says use filter. That was turned off. So the filter usually means that it's going to search through and find things that are true. So we want to redo that scan with the filter on. Otherwise, it just gives us a list of everything. So now you can see that it's rejecting out 80% of them. So that's a little bit more what we'd expect when we're running a scan is quite a bit of a rejection. So when you're running your scanner, make sure you have the filter on. It usually just make sure that you get the results of things that are true. Okay, you can see we're 81% there. And we are good to go. Okay, so now we can see that we have 97 results. That's a little bit more what I'd expect. And if I come down here and choose buy, I can see that I have a lot of buy opportunities today. Even though it's an up day, I have quite a few sell opportunities today. So there's a lot of questions here. I have 97 results. Okay, well, I could go through and I could look at 97 charts individually. And, so I've taken it from 530 down to 97, but 97 is still a lot to look at. If I'm trading the MACD on this list of stocks, how do I know which one is going to be the best opportunity for me, or at least give me the best odds of success? And that's what we want to do here. I want to go ahead and take now this list and put it into the system tester. So the system tester is a way for us to say, well, let's think about it this way. If you think about a website called Match.com or eHarmony or something like that, what are they designed to do? They're designed to match personalities of people with each other. And that's kind of what the system tester does. It's designed to help us match whatever it is you're trading. It may be a stock, a future, Forex, Bitcoin, whatever. The personality of your instrument, we'll call it, against the personality of the system. And if we can find a good match, it's going to give us a better odd of success on our trade. It's no guarantee of success, but it can help us improve our odds. So let's go through it and let's try this personality test and see how it performs. So we have MACD buy signals, so I'm going to search for MACD here, and I'm going to choose the MACD expert system. And then down here in my instrument list, I'm just going to scroll down to the very bottom and find this last exploration result. Okay, so if I choose that, it's those 97 stocks we just found, so I can put the MACD against these 97 stocks to see which one performs best. Okay, so what we're going to do now is we want to tell the system tester how we trade. Because if I were to ask each of you, how do you trade? How much money do you have in your trading account? Those types of things. Every one of you would say a different answer. Now, don't put how much you have in your trading account into chat or anything like that. That's private. We don't need to know that information. But what I'm trying to do here is tell the system tester, for my individual purpose, how I trade and what I'm looking at. So I can tell the system tester, well, hey, I only take long trades. I go long only. Or I go long and I go short. Or I go both. I may go both. So I'm going to select both here since I'm looking at both longs and shorts. Okay, I'm going to test over the last 5 years of data. That's the reason why I like to look at 5 years, is because it gives me a good basis of how it's performed in different markets. So we had the Corona crash, we've had this recent market volatility. This helps me see how it's performed over time, so I can see if it's resilient in its trading as well. Okay, and then I'm going to go with the daily, since that's the time frame I scanned on. And then I just need to give it a few bits of more information to help me in my actual analysis. So if I come in here and I go to account, now this question is, how much do you have in your trading account? And again, everybody's going to have something different, and you're going to put in different risk tolerances. So I can actually tell the system tester how I trade. So I can say, I only trade an X number of units. So if I'm trading 10,000 shares at a time, or if I'm trading on transaction cost, say I'm willing to risk $5,000 every time I trade, you can do that kind of thing. Or we could say percentage of available equity. So up in here in the initial equity field, it has $100,000. Okay. So you may have $500, you may have $10 million. Whatever it is, you can put that amount in here. And then you can tell it what you're willing to risk. Now, if I have $100,000 in there, am I going to risk 50% of that? Probably not. That's not good risk management. But what I'm going to do is I'm just going to leave that for the moment, because it's some easy math to tell you. So if I have 100,000 and I'm willing to risk 50% of that, I'm risking $50,000. Okay, so if my account doubles and it's 200,000, well, now I'm risking 100,000. Okay, so I'm always risking 50% of my money. You can set that to 2%, 1%, 3%, whatever your risk is. I'm just going to leave this as an example. Okay, if you're doing futures or Forex, you'd put in points only. Broker, you could put in what you pay your broker, and if you trade on margin. Obviously, here in the US, most brokers now are $0, so that's set to 0. But if you do pay commission, you can put that in there. And then finally, trade execution. So we're not going into a lot of depth on these things. We have some great training videos that show you all of this in depth. But what I want to give you is some high-level overviews of how you can get from point A to point B very, very quickly. Okay, so if I look at slippage, which again is, if I say get in the trade at the open, I may get in just a little bit from the open, so you can put in a little bit of slippage if you want to. And then there's this tab, realistic market prices. Realistic market prices is what that is, for the most part, typically if I'm scanning on a daily bar, I'm not going to get in on the current bar, I'll get in on the next bar. Or if I'm scanning on a 5-minute chart, I don't get in on the entry of the signal. It's typically the next bar to allow the bar to close and confirm. So, you know, if you're scanning at the end of the day and I had all these opportunities pop up, these would be trades for the next morning. So that's what realistic market prices is. Okay, so that's all the settings stuff. Let's get into the fun stuff. Let's actually run a test and see what we're looking at. So again, MACD, those 97 stocks. Let's run our test and let's see what kind of results we get. So this only takes just a minute for it to go ahead and churn through. So you can see so basically what it's doing to give us this personality result is it's going through and it's taking every trade across every stock for the last 5 years to see how it's performed, to see if it's something that gives us a good trade. So let's see what happens here. All right. Oh, well, there you go. That's always a good thing when you do something and you get an error. Let's actually just try that again and just see if that was just a glitch. If not, I might need to do a quick restart. So that's always fun. So we'll see what happens here. Okay, so again, we're almost done here. We'll see what kind of results we get. And hopefully this time it just pops right up for us. Okay. It's actually an error I've never seen before. All right, so what we're going to do is typically right here at the top, there's going to be a graphical representation. You have an idea what that is there, Jeff?
That's the HTML file not actually populating. And the only way I've fixed that is by restarting.
Okay.
But it only affects the HTML file. So I just explained what it would look like.
Yeah, that's what I was just going to do. Yeah, so as Jeff was just saying here, it's just this part right here, which would usually give us a graphical representation of how well all the stocks have performed, would be right here. Now, I don't want to take the time to restart because I'm short on time, so we're just going to imagine that there's this map right here showing you what this would look like. But down here is the critical information, okay? So this is how these individual stocks have performed, giving me a view. So I have my symbol, instrument, date range, net profit, my percent gain, my number of trades, how many trades were winners, how many were losers, and my average profit, average loss. So we'll get into all that. Okay, so let's rank by net profit here. And it's just going to give me an error every time I rank because it's not changing this up here. So you can see our top rated one here was Nucor. Okay, now just because it's the top ranked one doesn't mean that it's going to be the one that I want to trade. There's definitely some analysis we need to do to kind of see. So let's take a look here. So over that 5-year period, I had a 98% gain, 198 trades, and then I had 99 winners, 99 losers, okay? So my win-loss ratio is about 50-50 there, okay? So a little flip of the coin. Okay, so a 50-50 win-loss ratio, and then this average profit, average loss. And so what this is, so 1.56, what this means is for every dollar that I put into the trade, I got back 1.56, so $1.56 back out of the trade. Okay, so it looks like it's pretty high on our list of return. So let's do a little bit more analysis on it to kind of see what we're getting back. Oh, well, nope, we're definitely gonna have to do a restart here. Jeff, is it just restarting Metastock?
Your guess is good.
All right, we're just gonna do a quick restart here of Metastock so we can test it, make sure, see that we're working. You know, and it's always great to see when somebody's doing something and things happen. You know, it's technology in the world we live in. Let's go back here. Let's get this launched. But you know, as this is coming back up, so the thing that I really like about system testing and the way that it does this is it takes a lot of the guesswork out of making sure that we're working top to bottom. It's not so I can quickly see that, hey, I've got a basket of maybe 50% of these stocks that I can throw out, but what I want to focus on is maybe the top 1 or 2 to help me really hone in on this. Okay, so restarted Metastock. Let's just, I think everything should be still selected and should be set the way that we had it. Yep, so let's go ahead and run that test again. And we'll fingers crossed that it's not a full computer reboot because we can't do that right now. So we'll go ahead and run the test again and see if, make sure that we're getting results to show you here. Was Jeff talking to me in the, Jeff, were you talking to me? Oh, okay, all right, sorry, I thought I heard you through the wall. All right, well, we're gonna see if we're gonna party here or not. Hey, look at that. All right, we're back. Okay, so this is what we should have been seeing from the get-go. All right, so let's go ahead and do our ranking there again. So you can see here, I have this basket here that I just would throw out. They didn't perform well, they didn't trade well over the last 5 years, so I can just get rid of that bottom group. And then I can just focus in on this top group. So let's go back again here and talk a little bit more about Nucor and what we're seeing here. So if I expand Nucor and go into it, what you're seeing here is just kind of a quick overview. And I'm not going to dive into all these details because I want to go through a few different things that would make this a lot easier. And then in a minute, I want you to give me some stock symbols that you would like me to test. So go ahead, if you want to put those in the chat now, we'll get to those in just a minute. But let's talk about this for just a moment. So here, this gives me an overview of my profitable trades. So I had 99 profitables, 75 were long trades, 25 were short. My average profit was 27. My highest profit was 19,000. And then you can see here, my average loss was 1,700 and my highest loss was 14,000. Now, are you going to allow a drawdown of 14,000? Typically not. Now, the way that I tested this is I said, hey, when the MACD says buy, buy. When the MACD says sell, sell. Now, that's not the way most of us trade, nor is it the way that we really should trade. We should be trading with stops and ways to protect our profits and our money. So this is just a straight personality test. You can go in and put stops into this and account for stops as part of that. And our great training videos take you through that. Okay, but this is just a great representation here. A few things I like to look at when I system test is, one is this reward risk index. And there's a lot of information here. So you may think, well, what does reward risk index mean? Well, I can just click help. And what it'll do is it'll give me an overview of what everything means on this page. And I can see here that this index compares risk to reward. In this index, risk is defined as the system open drawdown, the lowest point of the equity line below the initial investment. Reward is defined as the total net profits, the final point on the equity line. So you can see we have a really high one here, so we don't have a lot of drawdown below our initial equity. And that's an important thing, is it doesn't really ever go down below our initial equity. So here we have orders. We're not going to look at all the orders. We're not going to look at all the positions. If you want to look at it, it's all there. It's great. Okay, but let's look at our equity line here. And this is the biggest thing for me in system testing, is just this equity line. And this is a lot of times where I'll just jump right to once I've done my system test, because I just want to see how the system performs. Okay, so here's my initial investment, 100,000, and this is how my money has performed over time. So this isn't trades, this isn't anything like that. This is actually what my money has done over time if I had been trading Nucor using the MACD. And you can see we've stayed above our initial equity most of the time. And what this equity line is doing is we have periods of run up, we have drawdown, we have run up, we have drawdown. But what stage is Nucor in right now if I'm looking at this? My equity line has been going fairly consistently up. It's had little drawdowns, but fairly consistently, it tells me that the MACD, along with Nucor, seem to actually be working fairly well. Okay, so I could actually open up Nucor here. Let's actually open up this chart here. Let's just plot on the chart. And what we can see is I'm just going to move the system tester over here for just a moment and close the Power Console. So what it's showing here is all the trades that it took. Well, I need to close the system tester so I can look at this. Okay, so I'm going to zoom in here. So the top line up here is my equity line. Everything down here was all the trades that were executed by the system test. Oh, I keep clicking on the wrong line there. Now let's go ahead and zoom in. So you can see here's my last stage for Nucor, and this is my equity line. Now, just looking at this, it feels like, hey, look at this. It does tend to trend. It is a trending stock. So it seems like the personality of the system and the strategy and the stock seem to actually match pretty well. Okay, now I'm not recommending that you buy Nucor or anything like that, but think about system testing as a way of saying, okay, again, does the personality of the system work with the personality of this stock? And in this case, it seems to. They seem to kind of gel together. Okay, so we do definitely have some good personality matching going on. Let's just put the MACD indicator on here just to take a look at it. Okay, so there's our MACD indicator. There's our crossing. Now again, this bar isn't closed either. We're still in market. This may change throughout the day. There's a lot of trading day left. So now if you're an intraday trader, you could be doing this on a 5-minute, you could be doing it on 10-minute, 30, 60. If you're daily, you'd be doing this at the end of the day and looking forward to the next day. Okay, let's go back to our system test result here. Now the way I could do that is I can go back and I can find my MACD. And anytime there's an R next to something here, I can just right click on it, click report. And let's look at our most recent one. Okay, and let's just rank on net profit again. And Tesla always seems to come up with the MACD. That seems to come up quite a bit. Okay, where's our reward risk index? 78%, quite a bit lower than Nucor. Okay, so maybe not as good. Okay, so if I look at this equity line now, what's it doing? Well, I mean, it's had some good pops over time, so it's traded well in the MACD historically. But what's it doing these days? That equity line of mine is just kind of flat. It's not doing anything. So am I as excited about this one as I was about Nucor? Not really. Let's look at Valero Energy here. Reward risk index, 86%. And my equity line? Okay, well, here, what's my equity line doing again? In recent market, it seems to be trending very, very well. Have energy stocks been trending well lately? Think about that. All right, and let's just look at one or two more here. Okay, again, 86%, flat equity line. So it's not really doing much right now. There's not really a lot of action in those movements. And this is why I like the equity line again. So this one is risk reward 95%, so higher. Okay, so this one seems to be popping up a little bit. So there's some good things that you can look at here. Now again, none of this is a recommendation to buy or sell, but it's showing you how you can use these personality tests to match up. Oh, Jeff's phone's buzzing. All right, so that's one example here. Now, just another quick example I'd like to just take you through. Now, yesterday we had Vince Bora talking about Victory. So let's say I wanted to do the same kind of workflow with Victory. So I could just come up here and let's just do the S&P 500 with Victory. Yeah, we'll do filtered. Okay. Well, actually, let's explore first, and then we'll do the same workflow. So this time we're going to do Victory. You can do this with Trade Trend that Jeff Tompkins just presented a little bit ago. So you could do this with these. Let's look at filter here, and let's do that same scan. Because I mean, I just want to show you now that we have everything set, how quickly this workflow can go. There's a lot of traders have talked about, our presenters have talked about, well, it's really easy to just come in, sit down, identify your trades within a few minutes, and then move on to your trading. Let's see. Hassan's asking, good morning. I need some links on how to actually use all these different tools. There's actually some great training videos up on our YouTube page. And there's actually the Unleash the Power of Metastock that you get when you get Metastock. that have some great workbook and videos to show you about how to do all of this as well, which I'll talk about in just a few minutes. Okay, so with Victory, we had 30 trade setups today. So again, how can I tell which ones are the best? Well, okay, now I can just close the Explorer, go right to the system tester. We're going to test Victory filtered. I'll do my last 30 exploration results. I'll leave everything else the same. Okay, so it's running through this now to tell me which one I should do. So we'll give it just a second, let it run through its test. And you can see how well that workflow works, because I found 30 stocks in about 10 seconds. I've now run my test, and I can see which one is performing the best. So the first one that pops up is End Phase Energy. So over that 5-year period, it had 24 trades, 11 winners, 13 losers. For every dollar I put in, I got $4.59 back. So let's just go into that. Okay, 95% reward risk index. And how's my equity line look? Okay, so now we have fewer trades here, so it's going to look a little different. So we have these pop-ups every time we win. When it's flat, that means it's not in a trade. It's kind of flat. So you can see when it trades, it gets us in, kind of gives us these equity bump ups, and boom. Okay, so I can quickly see, okay, does that match my trading style? Do I want to trade more? Do I want to trade less? So Halliburton has even fewer trades, 99% on the reward risk index. Okay, now this one, it probably had one good trade back here, and it hasn't really been in a trade since. So you can kind of see it's kind of a little flatter. But you can actually just quickly look at these and identify whether they're quickly trading well. So good trade, good trade, good trade, good trade, out of the market. Okay, so some great ways that you can actually use it to quickly identify a trade. So I've kind of narrowed out a group that I don't want to look at. I've looked at my top 5 and I said, okay, I like one, I don't like one, I can move on. And then I can pull up the Victory template, make sure that the slope is all there, and see if I want to take that trade opportunity. Okay, so that's one workflow. And as Jeff said, if you have any questions, type them in the chat. I'm happy to answer anything. But now I want to kind of take a different approach to it. Some of us will trade anything that has a good signal on it. You don't care what it is. So, in that case, I was just scanning the S&P 500, the NASDAQ 100, and the Dow 30, picking a stock and saying, oh, I like that one, I don't like that one, and I'm ready to move on. There are traders who do like to just trade certain stocks. So maybe you like to trade just Tesla, or maybe you like to trade just the E-mini, or you like to trade just Bitcoin. So if you have something specific that you like to trade, you may want to find out what system performs best on that particular tradable instrument that you're on. So we're going to take a little bit of a different approach to system testing now. And it looks like I did get Pan W. Let's just pull that up here just to. Oh, Palo Alto, yeah, okay. So we had a request for Palo Alto to kind of take a look at it. So this is Palo Alto. So we want to know what trading system might be best for Palo Alto. Let's run a scenario to do a personality test just on this stock. So what we're going to do is we are going to come over here and we're going to go to system test. And what we're going to do is, instead of coming down here and looking for a group of instruments, we're just going to put Palo Alto up here. So we're going to put panw.o. And for my system, what I'm going to do is I'm going to use what we call the performance systems inside of Metastock. Inside version 17 and older, we had 26 performance systems included inside Metastock. And then we sold an add-on that was called Performance Systems Plus that gave you an additional 54 systems and strategies. And these are great, well-defined strategies that were available as partly in Metastock, partly as an add-on. But we took, in version 18, we took all of these performance systems, these additional 54, and included them inside of Metastock 18. So now you have all 80 performance systems built right in. You don't have to buy the additional add-on for it. So I want to test these performance systems against Palo Alto. So I just search up here PS, and that gives me all the performance systems. You can see there's 80 here. So I'll just go ahead and select all. I'm going to use all my default parameters that I'd set up here. And I'm just going to go ahead and start this test. So now what it's doing is it's taking Palo Alto and saying, okay, does this strategy work? Does this strategy work? Does this strategy work? Does this strategy work? And kind of going through it and going through. So let's go ahead and see our results here. Okay, so now our results show what system has worked on this. Now, you can see we have our list of systems. I can see back here at the end, I've got a group of strategies that did not perform well. Well, and some people may say, well, it didn't work. Your system tester didn't work. Well, again, that's not the point of the system tester. The system tester is to see what works, because not every trading strategy is going to work with every stock. So that's what we're trying to put together here, is this merging of personality and personality. Remember, we have those 4 different groups that we have. We have trending, momentum, volatility, and volume. So we're trying to break into what works here. So here in this case, we have the bull power, bear power 2 system. It had 122% gain, 379 trades, 189 winners, 190 losers. Well, we're getting a lot of like 50-50. Now remember, if I have a lot of trades and a lot of winners and a lot of losers, this tells me that my winners were big and my losers were probably small. Okay, so for every dollar I put in, I got $1.53 back. And let's drill into it. Reward risk index, 92%, so not a lot of drawdown below my initial equity. Okay, and that is a pretty equity line. I actually like that equity line a lot. So a lot of times what we're looking for is kind of smooth, consistent equity lines. So we may say, okay, that looks good. And it does look good because it's pretty smooth, pretty consistent. We have a little bit of drawdown back here. Right here, though, it's been trending very, very well. So this system and this strategy, let's see, we're actually getting a question over here. Kenneth is asking, I've just run a similar exercise using the MACD on the FTSE 100 and looking back over 5 years. It appears that the successes and failures are grouped large groupings with no random success and failure. Presumably there's some sort of correlation to other factors. Is that something you have looked at or have a view on? Only one trial, of course. Kenneth, I'm trying to understand, just to clarify the question, what you mean by large groupings with no random success or failure. Could you just clarify that? I'll also give you my email address. If you have a specific question about it, I can also answer that as well via email. So I'm actually starting to get short on time here, but this is a solid equity line. Let's just look at the next one down here just to take a look at it. Okay, this equity line, yeah, it was smooth, but it's been flat for a long time. So if I was doing that one, I'd be like, eh. So let's look at Palo Alto with the bull power, bear power 2 expert on it. So if I come back here, I saw Palo Alto open. I can open up this expert advisor, go down to performance systems and look for my bull power, bear power 2, attach it. Now my difference here in this scenario is I may not have a current signal because I was just testing to see if the strategy works. But you can see here that it actually did give a signal a few days ago, which actually would have turned out fairly well. Again, these aren't recommendations to buy or sell. Let's see, another question. Please, what are the best and accurate leading indicators from your experience? Well, okay, so his question is, what are the best and accurate leading indicators from your experience? Well, in my experience, you remember, that's why I'm kind of talking to you about system testing, because when I'm looking at testing, Palo Alto may not work with a volume-based indicator. It may not work with a momentum-based indicator, but it may work with a trending indicator, or it may work with volatility. So that's what's great about system testing, is you can see which indicators work with the system. And if you think about it, again, system testing is not a crystal ball. It's not going to say, oh, this is going to work tomorrow. What it's doing is it's giving me a better odds of success, because if I look at it and say, this has worked historically, odds are that it may work on the next trade. It doesn't mean that it's going to work in 6 months, because this stock may be trading differently. And that's why regular system testing is very important to understand if it continues to work moving forward. Okay, so great questions. Let me jump back to my PowerPoint here. I can, okay, there's my PowerPoint. Oh, okay. Okay, so we've talked about using your preferred indicators. So that was the first workflow we did, where we scanned for the MACD or Victory or Trade Trend or whatever system that you're using. And then we identified a list of opportunities we tested to see which one looked the best for our current trade. Second workflow was taking, say, something like Palo Alto and then trading it and seeing what worked best there. Oh, okay. So Kenneth is asking, so there's a series of profits over a number of trades, or a series of losses, not profit, then loss, then profit, so on. So in other words, it works for a period of time and then it doesn't. Okay. So yeah, because let's say if you're using something with the MACD, you're going to have periods of time where the particular stock you're looking at is trending, but then it may become volatile and it may not work anymore. So the series of losses kind of gets bigger, and then it may go back to trending. So you may have something that's trends, then is volatile, then trends, then is volatile. So you'll have these kind of seemingly changing periods of time. And that's why it's really important to look kind of at the current market to kind of see what it's doing toward the end of that equity line. It's a great question, Kenneth. Actually, that's a really solid question. So what I recommend for you to do is actually try Metastock. If you don't have it, it sounds like we have a few people who are doing what I'm doing, trying to emulate it as we go through. But what you can do here is you can actually go through, you can try Metastock for yourself, try these tools. Again, we have great training to take you through it. We'll post, those are available right on our YouTube page. When you get Metastock, you also get the Unleash the Power of Metastock, which is a great combination to help you learn how to use Metastock. And then also I recommend that Learn Metastock website for $99 for 3 months to help you really get started and learn Metastock very, very deep down. Kevin's going to be talking from learnmetastock.com tomorrow. Really recommend his presentation as well. So again, scan the markets, test, forecast. End of day starts at 269. Real time starts at 265 plus exchange fees. So you can get your extended trial at metastock.com/conf promo, or call 1-800-882-3040, or go to metastock.com/sales chat. So Jeff's going to be coming back in now. But again, with your Metastock trial, you get free unlimited support, free unlimited access to recorded training, and our free white glove installation. And if you don't have Metastock 18, highly recommend that you update and get some of the new features along with it as well. Jeff's hovering over me, going to boot me out so we can move along.
All right.
Thanks, everybody. Appreciate it.
Good job, Kelly.
Musical chairs. Here we go.
I think I've been. Let's see. All right.
I can switch the headsets. So.
Yeah, you're totally fine. I wouldn't have used that one either. Awesome. Okay. Give me just a second. We're going to go ahead and transition over here for a second. Yeah, you should try it out. I love, and as Kelly was saying, 18 is great. It's one of my favorite upgrades by far. So I just love the new charting. I think it's awesome. It's responsive. It's pretty. I love kind of all the work that they put into it, and it was a lot of work. So again, just to kind of give you that information again, if you want to do that extended trial, you can go to metastock.com/conf promo. You can give us a call, 800-882-3040. And you can also call business online at metastock.com/sales-chat. So Hassan asked a question, can I get volume weighted average price from Metastock? If you have Metastock real time, you can. We can help you do that. Volume weighted average price is a kind of something that you get from the real-time exchange. If you don't have real-time and you want to use it in DC, we do have a formula that you can apply, and just get in touch with our support desk at metastock.com/support chat. And I'll put that link in there as well. I want to say thank you to our sponsors, Stocks and Commodities, for sponsoring today's event. We do appreciate all the work they've done with us over the years. It's a great magazine. And hey, if you do that extended trial that Kelly just told you about, you get a 5-month subscription as part of that. So that's pretty cool. If you spend $300 or more, you'll actually get 2 years. They provide those prizes. We don't pay for them. And we do appreciate all the help that they've done with us over the years. So definitely have done a great job for us. Fausto, I'm going to go ahead and make you an organizer so you can see the questions. And I'm going to introduce you. Now, I'm kind of curious if I should talk, how I should introduce you, because you're definitely one of the most dedicated trainers or webinar givers we've ever got done. But then on the other hand, you were rated the best looking person on that one cruise. So I'm torn here.
What's going on?
Or I could also talk about the one time you got kicked out of Traders Expo because you were giving away cheese. Like, there's all kinds of really good stories that we could talk about.
It's never a dull moment.
But I've been actually I talked about it a little bit earlier. Fausto loves to look at level 3 data, and he's going to talk a lot about level 3 data. And the way that he looks at this data is very, very unique. So let's go ahead and make you the presenter, and I won't introduce you with the cruise story or the other story.
I know you love talking about that story. That's a good story, though. Oh, well,
that is, yeah. I'm going to say it anyway. Fausto's the only person that came in. I think, gosh, this would have, his wife has having a baby, and he came in and did a webinar right before it happened. Do you remember that? I bet your wife does.
And I mean, listen, how far we go back over, like, what, 20 years now? I can't believe it's been like 30 years I've been in. So yeah, I mean, it was my second born. So he's 19.
Wow.
Yeah.
Dude, we're getting old.
We are getting old. We are getting old. I'm gonna have to change that other picture of me because, like, look, I'm starting to get gray and everything. Like,
yeah, you look great though. You look distinguished.
Yeah, it's I just turned 51, so it's pretty good. We're like dinosaurs when it comes to this stuff.
Heck yeah. All right, that's all you. I'm gonna get out of the way and stop talking about like all the stories I have.
No problem. Yeah, let's get right into it because I know you got, I mean, listen, there has been so many great presenters here. Got great content coming on, but today I'm going to do something a little bit different. I'm actually going to talk about level 3 and level 4, which I never really done before here on Metastock. I think you guys are going to be really impressed about it. It's a little bit more, seeing the orders on something on more of a heat map type of thing. And these are things that's going to kind of give you that game plan. What's going on. I mean, listen, let's not, hopefully everybody's getting all giggly today. We're having a nice little rally in the market. So that everybody's like, oh, maybe I don't need training. Because you know what? People think like, oh, when things are good, obviously, let me back off. But then when things are bad, everybody's like, I freak out. And you want to start like, what can I do? Am I doing something wrong and doing different? So let's get off the Kool-Aid and let's still keep focused because this is not going to be every day that you see what's going on. And you got to learn how to trade these markets. So I'm going to talk about basically these tools and how they work and how to spot these breakouts and everything else. Before I get started, just really quick, I'm not going to make any guarantees or promises. This is, it varies student to student. So please just be very, very smart and wise before you make your first trades out there on what you invest. All right. So with that said, just so, Jeff just told you, my name is Fausto Pugliese. I'm the president and founder of CyberTrade University. I've been doing this for over 30 years. And one of the original day traders that started back in the early 90s. I live here in New York, the financial capital of the world. Basically, I've learned from some of the best traders in the world, in the industry. This is what they do. And before I got started, I was a very big failure. You know, if you read my book, I kind of go into detail about that because I was a 22-year-old kid. I don't know what the hell I was doing, you know, but I saw people still making money. I didn't want to give up. And I realized what made me make a big mistake is who really trained me? Like, what am I? Who do I know more about the institutions, the hedge funds, and all that? And let me tell you, what I'm about to show you today, you're going to realize that, you know, it's all about following the orders. You know, I didn't have the right tools and everything else. So, you know what? By being here with Metastock, you understand how important it is having the right technology, the right tools. Things do cost money. And that's what kind of separates people, you know, from successful and non-successful. If you're looking for free stuff, you're wasting your time being here. But if you're looking, you want to know exactly what's moving in the market, how these things are moving in the market. Like I'll show you a couple of stocks that we just traded right now. Yeah, you know, I'll show you like what was NVD, was NVTA. Probably never heard of this stock before. But if you look at this stock right here, back in August, this stock in one day ran from $2 to $9. These are what day traders do. Look what the stock did today. It's up 30%. Look how beautiful this thing is moving. Since 9 o'clock this morning, it ran from $2.40 to almost $3. You had a 50 cents on that stock, 1,000 shares, $500. Why not? I mean, these are little cheap, inexpensive stocks. Open. You know, let me bring up this one. Very inexpensive stock, really cheap. It was a $16 stock. You could see how this thing came all the way back down, and you could see now what a nice little move it had over the course of the day. Right at the open, $1.60 to $2.10. And you know, that's just to name some cheapies out there. You know, Carvana, which I know a lot of you are very familiar with. CVNA. Carvana, this stock was, and this is pretty scary. This stock was almost $350. Okay, look at that, $380, and look where we're down. We're down into the single digits. And so now look at it today. Great trading day. Started with the news that came out. Started around 8:40, shot up to 10:20. So there are a lot of stocks out there. So if you want to start talking about, you know, Costco, if you want to talk about Home Depot, you want to get into $300 stocks, that's not really what we do. Us traders, what we look for is to risk the least amount of money with the high amount of reward, but also to follow these orders. So how do I know that? That's what I'm going to talk about today. So let's talk about a couple of things that happened. Basically, NASDAQ 100 approached about over 10,000, just literally got crushed from like 16,000 down to 10,000. And you see what's happening with the market right now. We're getting a huge, huge rally. So you question, is this the bottom? Should I average down? Is this short squeezing? These are the things you got to look at. Well, will the market continue to sell off, or did we hit bottom like we saw what happened today with the inflation numbers? You know, they did come back down a lot. Now, I just did an event this past week, how to trade the elections. And I mean, obviously, we're almost there, but this has a lot to do with the inflation. Looks like we're up 7.7. We're still up pretty high. The reason why a lot of people are saying, you know, the market rallied is maybe they're going to stop raising interest rates because the inflation did come down. But you need to follow the money. I mean, at the end of the day, why did it go up? How did I not know? And you don't want to be lucky. You want to be smart. So just this week alone, let me talk about some stocks that we traded. Here's a stock, GRWG. Look what happened to this stock right here. This stock literally ran from $4.30, and by 11 o'clock was at $5.24. We probably never heard of it. You probably never heard of this stock, FNKO. Stock goes from $8 all the way to $11 in 2 days. You probably, well, maybe you did hear about this stock, DWAC. This is a previous President Trump stock. He basically, you know everything about Twitter, and he got off Twitter. He opened his own new social media company, and that stock, I mean, went from $20 to $30. So once again, not to get political, if you love them, you hate them, whatever it is, has nothing to do with it. All I know is that stock moved today, and that's what traders look at. And let me just bring up DWAC. When he first originally tried to go public back a while ago, that thing was at $20. This is one day. The thing ran to $70. It actually ran all the way up to $130. I think it was even higher than that. I think it was like $180 in about 2 days. This is actually just in the morning. It ran at 9:30 in the morning. It ran from 85 to 130. So, you have to understand something. There are stocks that are moving every single day. And what's nice about the meta stock, I'll show you how to find it on the meta stock, but also just because you found it doesn't mean you can trade it, okay? So where do we find these movers? Basically on the scanner. Now, I don't have a crystal ball. I just work off the big percentage gainers. And if there's a stock, if there's a certain industry that's moving, if it's EV stocks, if it's oils, whatever, the market's moving today, they're all going to show up on the percentage gainers and losers. So I'm not a fan of finding, you know, a stock that is, you know, like, oh, I like trading the stock all day. Like, let's say it's Tesla. I mean, Tesla doesn't move every day. You know, it doesn't move every day. And just because it moved good today, or Amazon, doesn't mean it's going to trade good tomorrow. There are a lot of other stocks out there that are moving, like I just pointed out to you, and that's why we trade these things. But it all starts by scanning. Now, for some of you, just to let you know, the way I teach my traders and what I was taught from my mentors is we teach things that are called the 3 T's: tradable, trend, and trap. The first T, tradable, kind of tells us, does it have a good spread? Does it have good volatility? You know, you got to make sure that just because you see the stock moving doesn't mean you can get out of it. So that's really where that comes into play. Now, how do we know which one to trade? Because when you looked at that list, there are a lot of stocks moving. It's like, okay, well, yeah, this stock's up 80%, this one's up 10%, 50%. What separates me to go from the 20% one then not to trade the 50% one? Well, it's all about following the money. And it's all about following order flow. And for some of you that might think, am I chasing it? Is it too late to jump in? These are things that we're going to look at. So I want to talk about the different levels. Now, you can get this on a Metastock. You know, you can get it on Bloomberg. You can get any. You can get it on any site. You get it on Yahoo Finance. You get your broker. But you have to understand something. You can't go out there and trade a specific strategy if you just don't understand how the market works first. That's really where it all starts. So let me just just post out some data, okay? So let's remember this is not, and once again, it's not the Fausto method. This is what you trade on. There's level 1 quotes, level 2 quotes, level 3 quotes, and level 4 quotes. I want to start off with level 1. Now, level 1, basically, it is a screenshot of right on Yahoo Finance. And, you know, it gives you a lot of, you know, information here. Let me get my little pointer right here so you guys can follow along. It tells you like previous close, where it opened, the bid, the ask, 52-week high, volume, earnings, P ratio. But when you look at that, how does that make you money? I mean, like, okay, so yeah, the stock's up $8. It was up today. How does that make you money other than, you know, when I started about 20 years ago, the only way you can get real live quotes is you had to call your brokerage firm and get them on the phone, and then, or watch the financial stations and watch that ticker on the bottom. Well, then we evolved, and there was something called level 2. Now, I'm just curious in the chat room under questions, and I'm going to ask some questions to keep you guys engaged, because remember, if you're not talking, then you're not listening, okay? Does anybody here have level 2 quotes? Just out of curiosity. I mean, we have over, you know, several hundred people in here. Just want to know who has it, who doesn't. Mike, do you have it? Bill, do you have it? John, do you have it? Don't be shy. Just put in the chat room. Just get under questions. Do you have it? Yes or no? All right. So nobody has level 2 quotes. One person has it. Michael? Okay. Ro, you have it? You don't have it. Okay. Now remember, fellow traders, if you want to be a good trader, you have to answer the questions. Because if I'm going to invite all of you to come into my trading room, if you can't talk, that means you're not listening. That means you're distracted. You're doing something else. Turn the TV off. Stop looking at the market and focus right here, because what I'm about to show you, I take this very, very seriously, because I have trained hundreds of thousands of people over the years, and I don't want you to be that next face that when I go in front of an audience and you're sitting there like a deer in the headlights. And that's why we're taking the time here, fellow traders, to kind of educate you guys. So please just answer the question. Do you have it or not? So most of you don't have it. So let me explain to you what it is. And for the ones that think, oh, this is pretty cool, maybe I can get it. And we'll go, and then all of a sudden you realize the difference. So let me get my crayons out here. Let me draw a couple of lines. Okay. So right here, these are your buyers. Okay. Oops, let me change the color here because I hate blue. Red looks better. So these are your buyers. These are your sellers. You got 3 columns. 1, 2, 3. 1, 2, 3. So the first column is giving you a 4-letter abbreviation of an exchange or a brokerage firm. The second column is telling you the price, and the third column is telling you how many shares. Everything is multiplied by 100 there. So 2 is 200, 1 is 100. And whoever wants to buy the stock for the most amount of money is up on top. Whoever wants to buy for less money is down at the bottom. So it's basically a big negotiation room. People are chatting and advertising what they want to buy and sell the stock for. That's basically what that is. Now, how does that work for us? How do we make money on that? Well, the problem with this is that you're not seeing all the data. Brokerage firms offer it. It's free. That's all it's worth. Okay? So it's worthless. Now, what do we need to trade? The next question I have for you, does anybody here have something called NASDAQ Book Viewer, or what I would like to call it, Level 3? Does anybody have Level 3 or NASDAQ Book Viewer? Some brokerage firms call it Total View, NASDAQ Total View. All right. Now, just to let you know, tomorrow, NASDAQ actually has me as an expert to come on their show, and I will be on their show tomorrow. I'm on regularly at NASDAQ. I actually even teach their own employees there. I just did a class in China and in Singapore, also teaching them how to use NASDAQ Total View. Now, listen, the reason why they have me on their show is not because whatever I'm this big guru, is because they know how important it is, and they like the idea that they have somebody that could explain it and deals with it every day, because this is why people fail. Now, listen to me carefully, because what I'm about to show you, you're going to realize you're all going to want this. This is a seat on the exchange, okay? This is letting you see where the buyers are, all the sellers are, or completely around the world. It's going to show you where all the buyers are and all the sellers are, because it's the buyers and sellers that make support and resistance. So if you're still looking for support and resistance, your problem is you're looking what's going on in the past. What I'm about to show you, what's going on in the future. And I'll give you an example right here. Looking at a stock right here, TDOC, it doesn't matter what it is. But here's a stock that started right around $27.40. Now, you'll notice how the stock went all the way down to a price right down here, and then it finally hit a bottom, and the stock went right back up to 27. Now, right around there is around $26. Why did it pick 26? Why not 27? Why not 26.50? Why not 24? Why 26? Why did it go down there from 26 and bounce? There's only one reason, and it's not what you think. It's not because it was support levels. It was because of this 1.2 million share buyer out there, okay, for 69 different orders around the entire world. That's the only reason why. You have to understand something. Support levels are made by buyers. If you don't have the buyers, you could think of all the support levels in the past. It's not indicative of the future. And that's what we look at. And here's another example. Let me clear this out. Let me change the point right here. Look at this stock where we're looking CTIC, major resistance level. Stock goes from 570 in a matter of, 15 minutes, goes all the way to $6. And you could see it hits there several minutes, and it comes right back down to 570. Why did it stop at that 6? Well, if you look over here on the sell side, you'll notice there's a 249,000 share seller on the exchange. Now, there are sellers at 587. There are sellers, there's sellers everywhere. You can see it right here. There are sellers at 588, 590. But right there, right around $6, is a huge iceberg order, what we call here at CyberTrade University. So I don't care what you think or what you read about or the news or I don't know how you get your data, but there's no other person that I was taught that is more valuable is that when someone is showing you several hundred, 100 times more than the average order out there. So if you want to question him, good luck. Let me know how that works out for you. So let's go on, look at this example. Let's look at the stock called Lyft, which we all know Lyft, the company Lyft, the car share. Here's a stock that goes from $12.85 all the way down to $11. Now, You ever like freak out, like, oh my God, I'm losing money. What am I going to do? I mean, like, is this the bottom? I'm like, and then you're scrambling, you're reading news, this and that. What did we just talked about? Got to follow the orders. All right. So let's go hop over here and see what's going on the book viewer. Let's go on the exchange. We're on the exchange and we're like, okay, I got to look for buyers because that's really going to be the support. So I'm working my way in the bottom, and then I'm seeing 10,000, 14,000. I'm like, oh wow, you know what? There's 300 orders out there that make up 64,011 bucks. So listen, we could have support 1110, whatever it is. I mean, you got 10,000, but like 64,000 is an awful lot. That's even 6 times more. So now when I go back and I look what we got here, and then you're like, oh wow, look at that. Boom, stock hit 11, went right up to 12. You bought 1,000 shares of that stock in less than 2 hours. You made $1,000. Do that every day, $250,000 salary. Who doesn't want that job? Okay. That's how you trade today's markets. And you know what? Boom, you're done for the day. Now, let's eliminate all the charts. Let's go right to the data. Let's go right to the exchange. Let's look at eBay, for example. Okay. Now, let's just say you're hearing about eBay. It's going up. You got some nice movers going on. And all of a sudden, okay, what's eBay doing? All right. So if I want to trade eBay, the first thing I look at is where's everybody else? Okay. I don't go just trade blind. Like, oh, news came out. No. I want to see where everybody else is. And right now I could see as a 58,000 share seller at $40.58. Okay. Well, when you look at the chart, it tells me a different story. It tells me stock is going up. But does the chart tell you that there's 58,000 share seller out there? No, it doesn't. So you could think all you want. You could pretend whatever you want. Unless that seller goes out there, boom, you're going right back down to that 39. So there goes that winner, and now it becomes a loser. How many times do you feel that you do a trade and you're like, damn, I feel like someone's watching me? It's like every time I buy it, the damn thing goes down. Every time I sell it, it goes up. Let me just give you some advice. No one's watching you. Your problem is you're not watching them. And you keep looking at your rearview mirror. It's time to look forward and look in front of the mirror, not always looking back. Now, history does have a funny way of repeating itself in the past, but anybody can come out there any moment of time and says, you know what, I want out. And these are what we call iceberg orders. The reason why I come up with the word iceberg, I came up with that word, after watching the movie Titanic. I guess we all know the story about the Titanic. Obviously, it worked out too well from them. They were more concerned about the ship and the beauty and all this fancy stuff. They didn't want to care about the safety. And sure enough, it's not what's on top of the water. It's what's on the bottom of the water. And if you didn't have the right tools, guess what? You could blow up your account because you don't want to be like the people on the Titanic. Now, my next question to everyone is this. Have you ever heard of level 4? This is something that I started teaching not too long ago because new technology came out. Things made a little bit better. But does anyone have level 4? I know I got a lot of no's on level 3, very few on level 2. Everyone's got level 1. No one here. Okay, so listen to me carefully. This is going to blow your mind, okay? Because now I know a lot of people, like what happens with the numbers, people look at the numbers and they're like, it moves so fast and stuff like that. Well, now I'm going to put it on a chart. So you heard about it, Ro? Okay. Brian, you don't have it. Okay. All right. So let me show you what we got here. Right here on the right-hand side, this is, just envision that this is your level 3. These are all those numbers and those orders. Now, I know a lot of us might get a little lazy and like, these numbers move pretty quickly and it's kind of hard to keep track of them. And I think that's, and that's one of the reasons why people they might not trade a stock because it's moving too volatile. They just don't get it. Well, we're going to put it flat on a map, okay, on a heat map. Now, level 4, now listen to me carefully. There are other exchanges out there other than NASDAQ. There's the New York Stock Exchange. There's the CBOE. There's, other ECNs out there, EDGX, ICHI, I'll just bring it up and show you. You see right here on level 2, Look at all these different orders out there. Look at all these brokerage firms and all these exchanges, Archipelago. Look at all of them out there. The problem with this is you don't, like right here, XNet, XNAS, that's NASDAQ. But you're only seeing one order. You're not seeing all of them. You're not seeing every single order out there. So the way this thing works is that it's aggregating all those orders from all the exchanges, and it's also showing you every order that's out there, which is really, really cool. And it actually gives you that much more confidence of making smarter and better trading decisions. So here we have an example of a stock right around $9, and you'll see that there is a 115,000 share seller. And you could see he just posted his order out there. When he posted his order out there, if you notice very carefully here, is that as soon as he came up, the stock started going up. You notice that? Now, what do we call that? Oh, demand. Now, looking at $9, you'll notice here that he couldn't get it at 9, so he bidded it up. And then he bid it up again. Then he bid it up again. Then he bid it up again. He went from $9.10, $9.20, $9.60. He went all the way to $10. Now look at the stock from 9:30 this morning to 11 o'clock. We went all the way from $9, and we're already almost at 11. And he's still a buyer. Do you know what that's called? Demand. Okay. Think about this for a second. Let me just remind you all, everyone here again. How much better and smarter trading decisions would you make if you were able to know where that 115,000, it's actually more now, it's 117,000 share buyer is at? How many shares are you trading? A couple hundred? You know, I don't know, maybe 1,000? Seriously? Come on. You think you know more than that guy? You think you that trader? You want to go up against him? Great. Because if you short that stock, you would have got crushed. And guess what? You know, until he pulls his order, it keeps going higher and higher and higher. So what do? We follow the orders. That's all you need to do. It's just keeping it simple. Here's another example. All right. Here's a stock that's going down. Now you notice, see this big red line right here? That is a 970,000 share seller at $13. Now let's do the math for a second. That is literally, I'm sorry, that's a wrong number. It's not a 100K iceberg order. That's a 970. You're talking about over $13 million of stock that's looking to be sold. And then when you work your way down, you got 2,000, 1,400, 10,000, 1 million shares, 1 million shares. Okay? Well, guess what? If you didn't see that 1 million share order, and you stuck it out and like, oh, but I love this company. It's a great stock. Yeah, great. How's that working out for you? Because now we went from 13 and he's still a seller, and now he dropped down to 12. So if you didn't see him first and didn't want to take the loss, guess what? From 14 down to 13, $1 loss is a lot better than now taking a $2 loss. And guess what? He's still a seller. And guess what? Not only did he sell it, but it dropped all the way down to 1060. Is that what you want? Because if I had a choice, I definitely want to know what he's doing than being against him. Well, you know, and that's a good question. Someone's out there and without including psychology. And you know what? You're going to make mistakes. You know, there's going to be times you're going to be like, I don't think it's real. Listen, first of all, these are real trades. Okay? The exchanges will not let you put fake trades out there. And if you find one, please tell me, because I'll be a multi-gazillionaire. All right? I'll be the next person that hit the $2 billion lotto when it comes down to that. But you got to follow the orders. I mean, it's all about preparing. And it's not, you know what the other big thing is? It's not about making money. Okay? Let's be honest. The winners take care of themselves. You know what the issue is? Controlling your losses. Because in this situation, if you don't want to take a loss and you're like, oh, it's too much money, I don't want to get out, that's okay. I get it. But you know what? If you didn't get out and you didn't see that, guess how much more money you would save? How many of you here say you stuck in a trade? And they're like, oh, damn, I should have sold it last week. But I can't sell it now. Now I'm really down. So what do? You average down. Okay. Now you make a day trade into a swing trade. And now all of a sudden, now you're an investor. I mean, we've all been there. I mean, but I learned pretty quickly not to make that mistake again. A couple of questions coming across here. 200% better than probability than lead indicators. We're going to talk about indicators in a minute, okay? Is there a way to scan for those orders? Carlos, no, you don't have to scan it because they're already there for you. Once you type in the symbol, they come right out. You know, I mean, I'll give you an example, and we'll bring it up here. Did I shut it down? Hold on. I'm going to bring up a couple examples, and you know what's going to be amazing? What I like to do is tell me a stock that you want to look at. Give me a stock, and I'll look it up, and I'll tell you where the big orders are. Make sense? You know what I mean? Michael says you're totally right. The big money is the gospel. Well. That's basically what it comes down to it. So how do stocks go past resistance? Let's talk about that before we start going through some stocks. QQQs, by the way, I will not trade QQQs. First of all, I'll tell you why. Like, here, I'll bring it up and I'll show you. Here's the QQQ, all right? So the QQQ right now is trading at $276, all right? Would you rather trade the QQQs at $276, okay, or would you rather trade this stock that we're trading in our trading room right now, GFI? Stock's up 17%. It's a $12 stock, and look at that chart, how much easier and pretty it is. So would you rather go trade a $300 stock or a $12 stock? Because at the end of the day, if your goal is to make, you know, $1, I'd rather risk, you know, 30 times less than trade something else, all right? And not only that, but if we go to the QQQs, I'm just going to show you level 4. Here's a stock that we were looking at, GFI. Okay. When you look at the QQQs, first of all, there's a lot of data that's coming across here. I'll show you what's going on. Look at this. Does that look easy for you to read? Look at that. Or does that look easier to read? Does, you know, these are things that you got to look at. And I'll go into detail and show you a little bit more about how they work. GFI gets more data. I'm only at 3 hours. Okay. So as it's loading up, we got a few more slides, and I'm going to show you how to get this stuff. We'll come back. But let me talk about another example here. All right. BBBY, testing resistance. Okay, so you ever see a stock hit a resistance level? It's like, oh, this is it. This is the resistance. I own it at 450, 490, whatever it is. It's at 530. Boom, I'm going to get out of it. Okay, well, how do stocks break resistance? All right, well, people buy it. Listen, someone went out there wanted to buy it, right? And what happens is you had a buyer out there, and guess what? He becomes from a buyer, now, from being a seller, now he becomes a buyer. So listen, sellers get executed. Stocks do break resistance levels, all right? But without seeing them there and without confirming them they're there, that's what ends up happening. Like, I'll give you an example. Let me show you. Let me see if I can find a good one for you. I'll find a good one for you. Give me a second. Right here. You can see, like, we traded stock Virtue. The stock got really crushed today. But you can see how the stock came right to resistance levels. Look at that $8 seller. So he's been out there since 9:30 this morning. And look what ended up happening. If you didn't have a game plan, look at that stock. It literally ran from $6 to almost $8 a share. But it didn't break 8, if you notice that. Why? Because it got really close to that seller. And not only that, but when it came back down, guess what it ended up doing? Seller came back there again at 750. Look, you notice it didn't go back down? You notice that? Big, big seller. You got some buyers right here around 7, around 650, but I see them out there. Do you see them out there? I don't think so. So by seeing those sellers and buyers out there, you could see how the stock, like here, getting back to Bed Bath & Beyond, you could see how that seller went out there right here, and then all of a sudden became a buyer, and you see how he bid it up again, the 62,000 share buyer. So Maybe he's like, oh crap, maybe he went short. And now he's trying to cover his short. We don't know. We don't really care. But when you look at it, it makes it a lot cleaner. Yeah, well, thank you very much. The stock does look cleaner. And you know what? You give me any stock, there are orders in every single stock out there. Okay? And the more volume it trades, the more orders we could see, the better of the reds and the yellow lines we could see people planting their orders out there. Now, let's think about this for a second. Did I lose anybody, by the way? Is anyone confused? Because that's confusing. Okay, that is confusing. MACD, Bollinger Band, Chankin, RSIs, stochastics, volume, that is what's confusing. So, you know, listen, it works for swing trading, works for investing, but for me, it doesn't work for day trading. I'd rather just follow the orders, okay? I'd rather follow the orders. Does this work? It does work for futures. It does work for crypto. It does work for options. So yes, but I'm a stock trader, so I'm here to just to me, some things a little bit more riskier, and I just stick what I know, and that's really just stocks. So what do? Everybody, let me repeat it again, follow the orders. That's all we need to do. Now, like I said, I got about a little less than 20 minutes. I mean, a little bit less than that. So I want to give you some time for you guys to register, because what I want to do is this. I want to invite you all to come in my trading room, and I want you to see this live, okay? I started a trading room over 30 years ago. I started the first professional trading room in the industry. Actually, I'm one of the very first people who started an educational school in the industry. And the reason why I got into it is because when I was a market maker, I didn't like splitting the profits. You know what I mean? And I think a lot of people probably wouldn't like that. But you know what? Splitting it is better than losing your own money. But eventually I became very good at it. And when I left as a market maker, you know, because they were friends of mine, the fellow traders told me, said, listen, Fausto, you're a nice guy, I like you and all, but you know, unless you open up a brokerage firm, you're going to lose all this camaraderie. You're going to miss Jack. You're going to miss Karen. You're going to miss Chris. You're going to miss Tina. Because you learn from them. And I came with this idea that I don't want to open up a brokerage firm, a trading firm. So I says, well, you know what? If I could teach people how to trade like me, and if I can get them without coming into New York in an office, do it online, that'll be great. So I pioneered the webinar technology, and you know what? And I'm going to show you. You're going to be part of this team right here. You're going to be part of all these people. Like right now, they're trading plug. You're going to meet my instructors. You're going to meet my traders. You're going to meet all of them. And the goal is I want you to see, not to judge us on our winners, I want you to judge us on our losers and how few we have and how we get out of them. But this is how I'm going to basically teach you. So what I want you to do is I want you to join my trading room, okay? And I want you to see the other traders that they make money doing it, you know, and see how they think for themselves, how they trade for themselves, all that stuff. Now, we start trading right around 8 a.m. in the morning. So depending on where you are in the world, you know, like I said, if you're West Coast, East Coast, if you're different parts of the world, there's always going to be a perfect time for you to jump in. And we don't want you there all day. First of all, you don't want to be there all day, and you don't want to do this all day. That's why I'm here talking, because after an hour, I lose my patience. You know what I mean? Or I'm just, you know, churning trades and all that stuff. Not what you want to do. So we start live broadcasting, live audio broadcasting from 9 a.m. to 10:30, and then we do a second part from 2:30 to 4 o'clock. So that's realistically what we do at those time frames. So, you know, and so you get a feel of it. So if you only missed the morning commentary, great. If you're watching this recording and, you know, let's say you're West Coast and you want to be around, you want to come in the afternoon, great, no problem. You can do that too. Now, we also do a live every Tuesday, a Traders Talk, where we're going to email everybody. You're going to email us. We're going to go through your questions. We like to review people's journals. I would say about 80% of what we talk about in the trading room is not about the winners. We like to focus on losers, because it's the losers that really hurt everyone. It's the losers are the people that get in trouble. So, you know, we want to make sure that you learn from other person of a mistake that he made, so you don't make the same mistake. That's really what it comes down to. Now, this is all I'm asking for. There's a lot of people in here, and I don't know where you're from, but all we're asking for is a $9, you know, application fee. That's it. I mean, now you're looking at like, wait a minute, why does that sound so cheap? Well, we're giving you 1 week access in there. The $9, listen, I don't make any money $9. I don't care about the $9. I just want to know if you're a real person. So I'll try to put this in the chat. So you got to go to www.ctu.co/trial. So hopefully that works. That's the link right there. So click on that link and you'll be able to get in there. Now, this is what you're going to get with this trial. We're also going to include 1 week in that live trading room. I'm going to show you how to read level 3 and level 4. You're going to get live trading, weekly commentary. You're also going to get a couple of workshops about, trading with level 3, level 4, much more. We're going to show you how to set up your platform, everything that kind of like just gets your understanding of a concept of what is a life of a morning trader and an afternoon trader, and just having the right tools. Listen, the more you know in the beginning, the better it is when you start doing real trades. And I'd rather you learn the mistakes from here than actually going in there in the trading room. And we're also going to give you access to hundreds of hours of Traders Talk videos. So every Tuesday we do those videos, we record them, you'll have access to them. Some are better than others. Maybe something is more geared towards, maybe you don't understand time and sales. Maybe you want to spend more time of pre-market trading, maybe about, maybe psychology. There's always a workshop out there for you that we work on with that. And also as a bonus, I'm going to throw in my book. Now, How to Beat Market Makers in Our Own Game. Now, you could go to Amazon, you could buy it, pay $47. You could pay me there, or I'll give it to you for free for $9. So here's an opportunity. I'm going to throw that as a bonus to all of you to get that. And then once again, it's all for $9. So it's 1 week access. You're going to get all that stuff. Now, like I told you, why are we doing it so cheap? Why am I doing it? Listen, it's basically just an application for you to get into the room to let me know if you're a real person or not. I don't know who you are, where you came from. We want to make sure that you're not no competitor or Eckler or, whatever it may be. And it's really what it's only there for. I would love to invite every one of you in there, but it's kind of how we kind of weed out the riffraff. Especially, you got to understand something. If you can't afford $9, you really can't afford to trade, because when you start getting into certain platforms, like you see the MetaStock, it's not free. It's a great platform. It's probably the best in the industry, but it's not free. Nobody works for free. And I don't think anybody here would want anybody work for you for free, because it's not really a really good employee. Anyway, let's take a couple of questions that I got, that very popular questions I want to cover. So basically, how much money do I need to get started? People always ask. $9. That's it. You don't have to worry about, could I trade this stock? Could I trade that? It's the least of your problems. What you care about is you got to find out if trading's for you or not. You're not going to go, just because you hear people make money in the restaurant business because you went to one and you couldn't even get in the door, took you a month to get in there, like, oh my God, I could do this. I want to open up a restaurant. I got the money. Yeah, okay, great. It's an 80% failure rate, okay, in the restaurant business. Wouldn't you think you should work for somebody first and learn about it before you do it? It's the same thing when it comes to trading. Do I need a brokerage account to get started? No. We do not want you to trade. We just want you to watch and see if other people are making money doing it, how they think for themselves, how they find these things. You got to make sure that what you're getting yourself involved in, that mentally and psychologically you're prepared to do it. Because it's not a bad thing if you just realize trading's not for you. Now, where do we get level 3 and level 4? I'm not going to tell you, because you'll end up making more harm than good. When you go through my trial, I'll give it to you. You'll see it. Let me teach you how it works first, and you have a basic understanding what it is. Listen, you saw the value of it. You saw the stocks that are in there. Now the question is, you going out there and, I got to show you how to use it. Now, once again, like I said, this is all for just $9. Now, that pretty much does it with my presentation. And if anyone has any questions or anything else, feel free to put it in the chat. I'll love to answer it and go through it. I got a couple of, this guy Raju, he loves answering questions. Is he like the only guy here? I mean, he's the only one. I'm shocked. I mean, all these people, think about it. Think of what we talked about. Following the money makes things so much easier if you want to learn from Wall Street market makers, and this is going to be your opportunity. So the question is, do we have to have anything with Forex markets? I can only trade Forex right now. So Raghu, that's a great question. Let me make this point clear. First of all, how long have you been trading Forex? Okay, and are you making money doing it? Because the thing that I was always taught is that if you're not making money 60 to 90 days, you're pretty much wasting your time. It's like hiring an employee. Could you imagine paying someone for 2 to 3 months and they're nice people, they just don't get it? And you keep talking to them, whatever it is, you're going to have to let them go, and it's part of running a business. Or maybe you're an employee somewhere and you basically went out there and you kind of my God, this guy's terrible. I mean, he's a nice guy or a girl. I mean, but I'm worried about I'm going to get myself hurt. So regardless about, if you trade Forex, if you trade options or swing trading, I'm glad that you're here, but if it's not really working for you, you're going to have to try something else. Okay. And for me, I don't trade Forex, so I can't teach you on this. I'm not a, what's that phrase they say, jack of all trades and a master of none. I'm only a master of one. Next question. Less than a year, I have the financial restrictions right now, so I can't make a jump to stocks. Well, I don't know what that means, because you could open up on any brokerage account unless you did something illegal from the SEC. I mean, you definitely have an issue. All right. Any other questions? Listen, Jeff Gibley has some great presenters here, and he spends a lot of time and a lot of work to find some of the greatest value people here to kind of educate all of you here. And we do these events, once in a while. You got to learn from a little bit from everybody. Okay. I know that you can't buy everybody's stuff, but just because you're here learning, you're going to have to make a little bit of investment, and you're going to have to say, okay, I like this guy, I like this trader, I like that. You're going to have to try a little bit of everything. And just like with the MetaStock platform, I mean, go try other ones out and you'll see why that one is the best. Go try eSignal, go try 2C2000, go try Thinkorswim. You'll see why they have great tools and what makes them separate from everyone else. That's why you're here. Now, the reason why we're all here as gurus is that we want Jeff picks out the people he feels that could be the biggest asset to you as a trader using their tools. And that's really what it comes down to it. So try a little bit of everyone's stuff. You don't have to spend $1 gazillion to do it. You might have to spend more down the road, and that's okay. Because listen, there's a reason why college is $70,000 a year. Well, actually, I don't know why it's $70,000. It should be cheaper than that. I got 2 kids that are killing me right now in college. And but you know what? They're having a good time. They're learning, and that's all that matters. But really go out there and learn how to do it, and it really comes down to that. All right. Anything else?
Fausto? Yeah, yes. We have a question coming in from the YouTube. Steve wants to know if options work well with the type of stocks you are trading.
That's a great question. So first of all, let me be clear about options. It's the movement of a stock that makes an option move, right? So wouldn't you think you would need to know how to trade the stock first and before you trade the option? Because there's so many ways of trading options. Options are renting stocks. That's basically what it is. So yes, you can use it, because if you know what stocks are moving, you might actually not need to buy the option. You can just trade the stock. You know what I mean? But this will help you, because if the stock's moving, guess what? The option is going to move a little bit later down the road. So yes, it does. But you got to really learn how to trade stocks first. All right. Was there any other questions?
Yeah, Carlos wants to know, how do you know what stocks you're going to focus on during the day?
Well, if you notice, I brought the MetaStock platform, and I showed you I go through the big percentage gainers and losers. And then when I teach my traders, obviously that list being very long, there's the 3 T's I talked about earlier: tradable, trend, and trap. So you need to see, which is the first T, what is the spreads? Because some stocks have very big spreads. Some of them are very, very fast moving. You don't want to trade those stocks. Even though you might know them and heard about them, it's all about risk to reward. So we'll go through that when you do the trial, and you'll see it. And we'll give you a list in the morning of stocks we call the watch list, and we do that. Any other questions? I think Steve has a question on the bottom. Does this work? Oh, you did it right. That's one from options. All right. Any other questions?
I don't have any. No. It was so clear. Nobody has questions about it.
I hope everybody's overwhelmed. I mean, listen, listen, Jeff, you always do a great job when you host these events and you bring up some really, really great presenters. Sometimes it takes people to hear it a couple of times before they get the hang of it. Unfortunately, I feel that sometimes people have to go out there and learn the hard way, and then they figure it out, and they hear you again, and damn it, you know what? I'm gonna do it this time. So listen, if you don't jump on it now, I get it. Maybe it's not the right time. Maybe you want to do your homework. maybe you want to see if, you know, you want to look us up and stuff.
Okay. It's $9. CTU.co/trial.
Yeah, trial.
Try it now. Yeah.
Yeah, try it out. Is it similar to dark pools? So Steve, I don't know. Yes, it is, but I don't know. I was the one that pioneered dark pools. Listen, I've trained a lot of traders out there. I know there are people that you might see that talk about high frequency trade, algorithms, dark pools. Believe it or not, a lot of them are my students. And we encourage them down the road to go on their own. Because what happens when you find your niche, you know what? You might want to start, you know, listen, we don't want to hold you hostage. Eventually, you're going to figure it out and you're going to outgrow CTU. And you're going to realize the first thing you need to do is you're going to have to start your own little group of traders, your own little, or maybe you want to do something else. But yes, gains on options are greater than stocks only. Yeah, but you know what? Listen, Steve, Sean, that makes sense. But are you, you know, with high risk, with high reward, there's high risk. This is more black and white. You could do well with options, but if you knew how to trade the stock first, it will make you that much easier to trade that option. Or sometimes you might have to do that crazy option. And remember, you don't want to trade options because of the leverage and this and that. You're doing it for strategy. All right. Any other questions?
Oh,
I think that's all of them.
I think that's it. Thank you again, Fausto. I always love having you talk about the level 2. And the
I love coming talking. Yeah, and I gotta see you somewhere. I know COVID like really put us in a, you know, in a box. You know what I mean? But we definitely have to meet up again. We miss those times going at the trade shows and stuff. And you know, you have to bring that nice big bucket of, you know, cheese like last time, and put that slice, get the chef there with the prosciutto.
Yeah, I said if you have the cheese, I'll come. I'm in.
All right. Well, thanks everybody for listening, and thanks MetaStock. Thanks, Jeff, for having me. Look forward to the next one, and enjoy the rest of your presentations, everybody. Listen very carefully. We work very hard to be here to take that time for you all to learn. And you know, like I said, you got to learn before you can earn. So thanks, everyone. Thanks, Jeff. Thanks, everybody.
You bet. Thank you, Fausto. CTU.co.trial, Hassam, is how you sign up for the live trading room. All right. Thank you, Fausto. Appreciate it. All right. Let's go ahead and kind of do this. Okay. I got to turn on this here. And let me go ahead and make me the presenter real quick. Okay. Awesome. Let me go ahead and show my screen. We'll talk about a couple of sponsors and we'll give away a prize. So, I may not be ready. We may not be ready to give away a prize, actually. All right. But we will say thanks. I don't have a list. So, I have to pull the list because I did Windows is updating like crazy lately, and I did another Windows update. So, if you want to get a prize, I'm going to refresh the list. If you're watching on YouTube and you haven't registered yet, make sure to register. You can go to metastock.com/traders-conference, and Kelly's going to put that in there. And you can be on the list to get a prize. So there you go. Dinesh, we just did it. Thank you for your interest in seeing a demo of the real-time program. We just did one, actually, just a few minutes ago with Kelly Clement, and we'll be showing it all week. So everything we've been showing has been in Metastock real-time. So thank you for your interest too. All right, let's see. Hassan, that's how you get it. Okay, let's talk about our sponsor. Let's keep moving. Today's sponsor and this week's sponsor is Stocks and Commodities Magazine. I've said it before. I'm going to say it a few more times before the end of the week. We really appreciate all the work that they've done. I know how important it is, especially in these markets, to make sure they're kind of improving what you're doing and looking at what you're doing. And I don't think there's a better way to do that or make sure you're doing that than come to Metastock seminar. Beyond that, you should subscribe to Stocks and Commodities. They deliver really good information to you every single month. They've been publishing since 1982. If you have a subscription, you get access to the 17,000 articles that they've done over the years. Also, if you do any of our extended trials or if you buy anything from Metastock this week, we're going to give you either a 5-month subscription if it's over 300. Stocks and Commodities is going to give you a 2-year subscription. So we really appreciate all the work that they've done in supporting us. I mean, we've been doing these events for, it'll be a decade in January, if you can believe that. And they've supported us every step of the way. We appreciate that. Also say thanks to Stocks and Commodities Magazine for sponsoring today's event as well, or CMT Association. You can tell you're getting about 20 something hours in when you start to kind of get confused. But I was confused on Monday, so it's all good. CMT Association is a new sponsor, great organization. If you're managing money, if you are looking to manage money, a CMT designation can be very, very helpful. In fact, I think it's 2 speakers from now, right after our next speaker, John Thomas, Tyler was actually going to come in and give a lot of good details about that. But we're really happy that CMT Association is actually sponsoring the events. They've been sponsoring us for about a year now. Very, very well, an organization with a great reputation, and we're proud to have the CMT Association sponsoring all of the events that we do. So thank you to them as well. If you want to find out more about CMT Association, you can go to cmtassociation.org. Of course, we're Metastock. We'll help you. I love how Fausto's like, well, of course, scanning. I love scanning. It's what I do all the time in my Metastock. I think it's one of the most helpful tools, but it also helps you, as Kelly showed, test trading ideas, find out what's profitable. You can actually also use it as a forecaster. On Monday, Scott talked about our forecaster, the patented way that we look at a lot of statistics and kind of give you an idea of where price might go or where price probability exists. Of course, we're going to give you, as part of the program, you can get real-time alerts, commentary, signals, all of that kind of stuff. Metastock's been rated #1 29 years in a row. We have customers literally all over the planet. Prices start at $59 a month. What we're going to do for you is, if you want to try out Metastock, if you pay for this month, we'll give you December and January for free. You'll be running it into February, which means if you're in the US, the minimum price will actually be $69. That means you'll pay $23 per month to get all that training and or to get access to the award-winning software called Metastock. You also get a ton of training. We'll provide you with Unleash the Power Metastock to help you get started. We'll also include a white glove installation support appointment where somebody can sit down with you, make sure you've got everything installed properly, make sure you understand how to run everything. And in addition to that, you'll have unlimited access to our support team. And I said this a lot, but our support team has been is great. We keep more people on our support team. They're right here, right across the office. We get more people in our support team than we have in sales and support put together. There's a lot of times where we'll ask people that come in and get surveys. We always ask people that come in and talk to support how we did. There's a lot of times where Metastock's a great program. You should use it. You should use it to help you identify better trades. You can start out your trial at metastock.com/conf promo. You can go to metastock.com/sales chat, or you can give us a call at 800-882-3040. Rao, thank you for coming. I'm glad you had all those questions. Thank you for all the questions you've had. Let's see. Sean says, thanks, Fausto. It's good to see you again. And Lisa, I'm sorry we didn't get to your question about dark pool buyers, but give us a call. All right, very cool. Let's kind of get on with it right on time. John Thomas is our next presenter. I always like John's presentations. He has generally a lot of stuff that's very, very interesting to talk about it in terms of what's going on in the marketplace and really topical. I remember the first time we had John talk, it was right after President Trump got elected, and he had some really, really good insights about what was coming and what that meant for the markets. And I was really super impressed with that particular talk, and we're going to have him in again. And John, how you doing?
Hey, I'm great. Did you get the link I sent you?
Did you send me a link?
I did a few minutes ago. Check
well,
your
then
email.
It would be over here.
I'm going to go ahead and set up my screen. Yeah, that.
I've got your link. Link.
That presentation was 5 years ago.
Yeah, time flies, huh?
Time flies when you're having fun.
Right.
Let's see. Play from start. All right. Well, I am ready to go. You're in Vegas, aren't you?
What's that? We're in Salt Lake City, Utah.
Salt Lake City. Did you feel that earthquake last week?
I did not. No.
Oh, I was in Zion doing some hiking, and we got hit with a 4.0 earthquake. Really knocked you out of bed if you were not used to those sort of things.
Yeah, interesting. No, I didn't even hear about it, but I love Zion. So,
Hey,
anyway.
one great thing about Utah, it's the cheapest gas in the country right now.
That's awesome. Yeah.
You drive over the
certainly
border
more than in California.
the price drops $1. I don't know what's going on in Utah, but I love it.
All right. Cool. Well, I'll let you get on the way. John, I'm here if you need me.
All right. Can you see my screen?
Yes, I can. It's coming through nice and good.
Well, hello, everyone. This is John Thomas, the Mad Hedge Fund Trader. And I only give presentations when the Dow is up 1,000 points. So today is your lucky day because the Dow is actually up 1,008 points. So anyway, this is John Thomas, the Mad Hedge Fund Trader. I'm going to talk about the big plays for 2023, things you should be buying on every dip or selling short on every rally for the rest of the year. The timing of this presentation is particularly good because all of the major asset classes are about to reverse multi-year trends, and it is a great time to add new trends. And by the way, I'm broadcasting from Silicon Valley, which is basically a giant wake right now because there have been something like 20,000 layoffs this week. So let's get on with the show. Take out your pen and paper to take notes, or start typing into your smartphone. What I'm about to tell you will blow you away and change your life, for I am in the early retirement business. Your early retirement. Why listen to me? Well, I have 50 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, little brief time out as a Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, and now 14 years publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern industry who is still working. So let's go flying for a minute. All right. That was me in a dogfight in a RAF Spitfire over the English Channel. Now, let's see if I can move on to the next page, because this is always tricky. There we go. And let's go here. Let's see. Now, I got to turn this off. All right. Let's see. No, we didn't do this. Nope. Yeah.
There's you have that yellow arrow, then right next to it, there's another arrow. Use the one right there. Try that one. There you go.
There we go. Thank you very much. Yeah, that was me flying. The RAF has 2 Spitfires left over from the Battle of Britain. That was one of them. And I was in a mock dogfight over the English Channel. Turns out the RAF wanted to see if I really was a fighter pilot, and only one way to prove it. The other reason to listen to the presentation is we have a trailing 1-year return of 75.53% versus down 16.76% for the S&P 500. We did a lot of that on the short side this year, especially early in the year, shorting the big tech stocks, and also being short the bond market. The first year ever where being short both bonds and stocks made tons of money. So if you want to see how we did this, listen on. So if you're going to listen to me for the next hour, who is John Thomas? Well, my family origins are very humble. Growing up as the oldest of 7 children on a remote farm in Southern California, I lived the all-American childhood playing Little League baseball and becoming an Eagle Scout. There wasn't much to do in rural California in those days but hunting, so I picked up a job as a paper boy for the Los Angeles Herald-Examiner. I wasn't long before I found the stock pages, bought IBM at 20, sold it at 30, suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I'd visited more than 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see a future in that, so the government sent me to Southeast Asia for a few years of intelligence missions where I learned how to fly and jump out of perfectly good airplanes. There I advised the allies, America's Asian allies. As the war wound down, I became a foreign correspondent for The Economist. When they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. And all I got for 10 years of government service is this box of medals, which I trot out once a year on Veterans Day. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. I figured out very quickly you didn't have to be that smart to make money in the stock market, so I got into the industry joining Morgan Stanley. After 10 years there, I started my own hedge fund. And there is my original Morgan Stanley ID card from 1983. And yes, the years have been cruel. And that's me losing the All Japan Karate Championships. I never enter a karate final with a broken wrist, which I did. I rapidly became the top performing hedge fund of the 1990s, eventually bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. You get to do things like buy the latest hot car, collect vintage Rolls Royces, fly your own private plane, and go marlin fishing in Mexico. I sold my hedge fund in 2000, retired to go into the oil and gas industry. After making a killing there, I missed the stock market and started the Diary of a Mad Hedge Fund Trader in 2008. I now spend my days pursuing my first love, which is finding winning trade alerts. But I now do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There's far more job satisfaction, leveling the playing field for the average guy and teaching them how to trade. And that includes you. If I can take a $50,000 account and turn it into $500,000, that is more job satisfaction than I could get anywhere else. However, every silver lining has a cloud. In 2020, I had to pay $8.2 million in taxes on $20 million in trading income. Ouch. I just thank goodness that I can make that payment to Uncle Sam and not cut back my lifestyle. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco or London these days, it's probably me. Ultimate luxury, of course, is to give those who need it. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to Wounded Warriors. When wildfires hit California, I visited main evacuation centers and handed out $10,000 worth of Target gift cards. And there you can see I'm visiting my in-laws' house. There's a SIF box where they were looking for a wedding ring, which they eventually found because it was made out of platinum. Platinum has a far higher melting point than gold, and that's one of the little tidbits you learn trading commodities for 50 years. So there is a method to my madness. We're now in a trader's paradise. Bear market is now in full force, taking out the double bottom, but we only got a marginal new low of 800 Dow points in 4 months, meaning the end is approaching. We are now 9 months into a 12 to 15 month bear market. A major trading rally launched with the onset of Q4 and the passing of the midterm elections. And we may be discounting the end of interest rate rises as early as December. US dollar has peaked with 10-year bonds bottoming at a 4.46% yield. Q4 could be the best entry point for stocks in a decade. Time to look at those leaps. And we do offer all leaps portfolios for our concierge clients. Oil prices just suffered a 40% fall and will decline further in a recession. Inflation is plunging, dropping a full 1% this morning to a 7.7% inflation rate year on year. Gold is bottom, and we'll see a major bull market begin next year. Global economy is unstable at the least. We've just got a 75 basis point rate hike, and we'll get another one in December, followed by 50 basis points, then 25 basis points, and then falling interest rates for 5 years. All points to a mild recession in 2023, followed by a new bull market in stocks. Consumer sentiment is at a record low. 2021 GDP was revised up from 5.7 to 5.9. The post-COVID recovery was much stronger than expected. Money supply is in free fall, showing the sharpest 5-month decline in M2 in history. We literally went from a 30% growth rate to a negative growth rate year on year. And if you think inflation is bad here, it's worse in Europe, where it's at 9.6%. Yes, prices are higher on the continent than here because they have to pay an ever more expensive dollars for their imports, as well as premium prices for marginal energy. Some power bills in Europe are up 500% in a year. Stocks crawled back from the dead. All the negatives have gone. Seasonals, earnings reports, strong dollar, and now the election. Put call spread is the biggest in history, about 1 to 4, showing that investors are piling in, or at least covering their shorts as fast as they can. Stock buybacks will hit a total of $1.25 trillion in 2022. Yes, companies are smart. They like buying their stocks when they are cheap. Old value industrials have been the overwhelmingly trouncing big tech. Banks are leading on the updates, suggesting they may be the new lead sector in a rising market. The golden age of banking is just beginning. No surprise that investors sold what was expensive, tech stocks, and are buying what are cheap, banks. It's basic investing 101. In fact, the value of tech is more than double the value of banks. Tech is still trading at a big premium to the market and double the price earnings multiples of banks. Look for a terrible first half, strong second half scenario to continue. So this is the bull case going forward. This is what's in the market right now. High inflation, oil shock, COVID spike, labor shortage, supply chain headaches, Fed interest rate rises, quantitative tightening, and poor earnings. This is what stocks will discount next. Plunging gas prices, plunging commodity prices, stabilizing supply chain, record low unemployment, better than expected earnings, 1.25 trillion in stock buybacks, soon to fall interest rates, and a weak dollar. This all sets up a massive bull market, which will continue for the rest of the decade. This is our short-term market timing algorithm, and it operates at about a 95% accuracy rate. And it shows that we hit the bottom in this bull market at 350. We were overdue for a 17% rally, which we're getting, which really started weeks ago and is continuing today. We look for an interim top in the S&P 500 at 410 for the SPYs. And then we may go back down one more time to test again, see if that low was a good low. And then after that, it's up for 10 years. So the barbell portfolio is what we run. Half of that is in big tech, where you have 2% of the workforce creating 27% of the market cap and 38% of U.S. earnings. The other half is domestic recovery, including railroads, airlines, cruise lines, couriers, steel companies, banks, commodities, construction, credit card companies, hotels, casinos, and online ticket sales. Boeing has just had a tremendous month, up about 30%, reaching short-term resistance. We think the bottom is in. This qualifies as a long-term double bottom here. And the longer the double bottom, the longer it goes up. We're targeting $250 in 2023 for Boeing. JP Morgan, also major move underway that will continue. We're looking for $200 a share in 2023 for JP Morgan. Banks love rising interest rates, falling default rates, and are hugely overcapitalized. Visa is another financial play. One way to capture inflation is to buy credit card companies because they automatically benefit with the higher fees from higher prices. And right now, we're seeing the fastest sales growth for Visa in history. We're looking for $300 a share in 2023. Union Pacific, any economic recovery, you have to move a lot of big stuff. No one is better at that than railroads. Union Pacific is the largest railroad in the U.S. And it's also a play on the recovery of China because Union Pacific is the predominant east-west railroad. So you're moving commodities out to China and manufacturing goods back in from China, especially clothes, electronics. Looking for $300 in Union Pacific. Federal Express, you also move a lot of small stuff overnight. The stock just got hammered on an earnings disappointment, putting in a bottom now. We're looking for $300 a share in Federal Express. That's a double from here next year. Berkshire Hathaway is your one-stop barbell portfolio. They're the largest outside owner of Apple, and they have major exposure to banks. We're targeting $400 a share in Berkshire, or about 35% from here in 2023. Second half of the barbell bets on a massive global recovery to begin in 2023. Upside potential for recovery stocks upside potential for recovery stocks in 2023 is far greater than it is for tech. Some of these have not moved for 5 or 10 years. Focuses on economically sensitive cyclical industries. makes a great counterweight to high growth technology. We could spend all of the next 2 years flip-flopping back and forth between these two groups. So, of course, NASDAQ is the bellwether for tech stocks. We've been playing it mostly on the short side this year, selling every rally and buying the big dips. We're looking for NASDAQ to recover to at least the 13,000 high in 2023. That's up substantially from here. Microsoft looking for $3.20 a share in 2023. And the big question on when tech stocks will move is when the Fed starts to cut interest rates. That could be in as soon as 6 months. So the basic idea here is you go long your domestic stocks and financials now, and then you go back into tech in about 6 months when we start getting these big interest rate declines and also a falling US dollar. All of the big techs have major exposure to international sales. Those have been shrinking dramatically all year as the currencies hit 20-year lows. That all reverses in 2023. Weak dollar, strong foreign currencies mean you get ballistic growth in technology earnings next year just from the weak dollar. Apple is another one of these. Again, trying to put in a double bottom here. We still have 1 billion iPhones that need to be upgraded so they can use 5G. We're targeting $200 a share for Apple, up from $137 today. Amazon, also we're looking for a potential double in shares next year, making it the first $3 trillion company. Again, earnings disappointment, slowing Christmas prospects have absolutely hammered the stock. Plus they had their 20-to-1 split. So we're targeting 185 for Amazon, up from 89. And Alphabet is another potential winner for us. They have 92% share of all search, and 15% of all search is for travel, which is booming right now. We think Alphabet could hit 150 next year, up from 88 today. And what's the first thing you cancel going into a recession? Advertising. What's the first thing you buy back on a recovery? Advertising. You want to start picking up all of these advertising plays after they've been completely slaughtered this year. So another great upside opportunity for Google. Salesforce, also major exposure to international earnings, which dropped 20% just on the currency this year. Looking for a potential double in Salesforce, also targeting $250 a share, up from $140 now. So what is the big trade of 2023? Well, amazingly, it's not going to be a stock. It's going to be in bonds. We hit 4.46 yield a couple weeks ago. That is going to be the best trade of 2023, buying bonds on a leverage basis. And you can get bonds with leverage of 10 or 20 to 1. With the TLT down 48% in 2.5 years, bond longs will be the big trade of 2023. 30% of upside is within easy reach. If you use any kind of leverage, you can make that into 300 or 400%. We actually have several 400% returning trades for 2023 in the bond area through LEAPs or long-term equity participation securities, which you can buy in the options market. Fed will raise interest rates too far too fast, and then lower rates too far too fast, as has been their pattern for the last 10 years. Apply those losses to $150 trillion global bond market, and something like $67 trillion was lost this year, much of that will be made back next year. Anybody who used leverage in the bond market is now gone. What does that mean? It's time to start adding leverage in the bond market. Do the opposite of what the losers have been doing. And we find out how many investors have been swimming without a swimsuit when the tide goes out. U.S. Treasury bond fund plunged from 180 to 92. We were short the entire way. We started shorting bonds at 180, and we rode it all the way down to 92. And we had many people following us this year who earned more than 100% returns just by concentrating in short bond plays. Government loves inflation, even if you hate it, for the purchasing power of bonds issued now is shrinking at a 7.7% annual rate. Yes, government can borrow like crazy because in the end of the day, it always goes to money heaven. The purchasing power of the government bonds drops by about 90% by the end of their 30-year life. So with a long trade setting up now, and bonds were up 3 points this morning, we can see the yield go from a 4.46% from weeks ago on its way down to 2.5%. That means there's a hell of a lot of money to be made buying bonds right here. So here's the TLT. That's the end of our short play here. We think now you need to buy bonds and write them at least up to 120. And with leverage, that 20% or 25% return can easily be made into 250 or even 400%. And here's the yield. We think the yield's peaked out at 446. We're going down to 250. So major upside move in bonds is just beginning to unfold. Foreign currencies, we think the dollar has peaked. Sharply falling interest rates will bring a crashing US dollar. All foreign currencies will rally strongly. Oops. Let me unplug this. Goodbye phone.
Call from spam name.
Yeah, and it's of course it's a spam call that I'm getting. Weak Chinese economy will keep the yuan relatively weak as long as pandemic lockdowns continue. Strong currencies will also deliver a major bull market in emerging market stocks, which you can get through the EEM for the stock markets and the CEW for emerging market currencies. You can kind of look for a 40% increase in emerging market currencies next year. So what are the best ways to play a collapsing dollar? Well, how about the Australian dollar? Major long-term bottom is in. The next move for the Aussie will be from 62 to 1 to 1. That is about a 60% potential gain in the Australian dollar. And this will go on for years. This is not just a one-hit wonder. So buy Aussie on dips. You also want to buy the Japanese yen, the weakest foreign currency this year. That's because the Bank of Japan refused to raise interest rates. And you want to buy the euro. Not only is the U.S. going to be cutting its interest rate sharply, but a Russian defeat in the Ukraine war is likely in 2023, and that will also lead to a major recovery in the euro. We're looking for a 25% gain in the euro next year. So if you think about buying a second home in Paris or Florence, now is the time to do it because it will gain 25% just on the currencies. British pound will recover, but not as much as the other because they have a major drag with Brexit. Uncoupling from the European economy will be a disaster for Britain, and I expect a long-term decline in British standards of living by about half because of Brexit. But even the pound will recover, and by the way, that's the new British pound with King Charles III on there, which just came out last week. Emerging market currencies. Yeah, you could get a 40% return on emerging currencies. They have been the most beaten up foreign currency category in the world for the last 3 years. going forward, they will be the best performer on the upside. Energy and commodities. If you're looking for a recession, you don't want to be anywhere near oil. It could drop a lot. And I mean a whole lot from here. 60 ships are now offshore in Europe waiting to unload. They can't because they don't have the facilities to unload so much natural gas. And the shipping companies are having to pay $500,000 a day per ship in what they call demurrage, which is ships tied up on leases but aren't being used. Biden attacks the oil companies on price gouging, proposes a windfall profit tax, which may actually get if the Democrats get control of Congress. Russia loses the ability to ensure oil cargoes by year end. Germany is fighting the energy cutoff from Russia by reviving their coal industry for the next couple of years. Void all energy plays like the plague. It's the new buggy whip industry as the U.S. decarbonizes. And all of the energy stocks are peaking out right around here. I'm not recommending energy because there is no long-term growth story. Who wants to make a 30-year investment in energy if it's going to go out of use in 10 years? That is why oil companies will not increase drilling. All of their past business plans were based on 30-year investments, and that they are not making themselves. Here's oil. We've already hit the $132 a barrel peak all the way back in February with the Russian invasion. Eventually, we go down to $10 a barrel. 50% of the use of oil in the United States is for transportation. That will be illegal in 10 years in many U.S. states where sale of gasoline engines are banned. So there is no great long-term play here. The time to buy oil is when it was negative 37 2.5 years ago, which is where the futures traded down to at the pandemic low. And this is one of the greatest double tops of all time. We peaked in 2008 at $150 a barrel, made it up to 132 in February. We're going back down to test these old lows at around $10. And too many other better trades to do, like buying technology stocks down 70 or 80%, buying bonds down 48%, and selling the dollar at 20-year highs. By the way, we also get a new bull market in gold. I know a lot of you gold bugs have been sitting on your hands for years. Your time to shine will be 2023. Collapsing interest rates next year will be the big story. Destruction of crypto is bringing back gold as a non-correlated asset. Gold is more of a commodity play now than a risk hedge. Recently, rising interest rates delivered a terrible 2022 for gold and a great 2023. Silver is still the bigger and better play. You can expect silver to go up twice as fast as gold, as it usually does, except this time you have absolutely gigantic demand from electric vehicles and solar panels. So we're looking for a 30% move in gold from the current levels, and actually we already got the first 2% of that today. I just checked the gold price this morning, and it's at $17.10. So we're up $30 or 2% just this morning. And we're looking for $2,200 an ounce in gold by the end of next year. Barrick Gold is the world's largest gold miners. We think we could hit $50 next year, possible triple there. And silver will also do as well. It'll go from $19 to $50, up 220% next year. So major buying opportunity, options play, and leads play all in silver. So don't play with matches. You could probably do okay just buying all the stocks I mentioned above and forgetting about them. However, the reality is that conditions for these stocks change every day. They're all viciously competing, trying to put each other out of business. If you don't get daily updates on the fundamentals, you could easily get wiped out, as many people did this year. Today's big winner could instantly become tomorrow's loser. That's why you need somebody like me to guide you through the thicket to avoid an out of the blue blow up. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. And that's me sending out a trade alert from the coast of North Africa. I'm struggling as hard as I can to smile because it's 120 degrees in that picture. The harsh truth is you really need my help. The majority of individual traders lose money. They lack the correct trading and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easiest solution to that is to get educated yourself. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why do dead people do so well? Because they never sell. And in a market that goes up 80% of the time, that's a great skill to have. This is the last broker I talked to. I ran into him in Northern Italy. His name was Pinocchio. You need a real pro to guide you through the market maze. The market is not monolithic. 95% of it can be completely ignored. There are a few great sectors out there and a lot of awful ones. You can earn a 10 times return on the great ones, but get wiped out by the losers. Let a 50-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. This is my secret weapon, the Mad Hedge Profit Predictor. It's an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators all day long. It took 1,000 hours of calculations by a team of mathematicians to create this, and it's worth its weight in gold. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algos have become so dominant in the market, you should never trade without one. It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy that upgrades itself 1,000 times a day like this one. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your trading profits. And I'm not the only one using algorithms. I was walking on the waterfront in Miami a few years ago, and I saw this mega yacht, and look what it's called, Algorithm. Obviously, it's working for more than just me. This is 3 years of algo performance, and you can see we get lots of buys at market bottoms, sells at market tops, buy, sell, buy, sell. It's like owning a printing press for $100 bills. 49.51% is our average annualized return for the last 14 years. That is 2.86 times the S&P 500. Richard made millions religiously following my trade alerts. He now spends his retirement restoring vintage aircraft and flying them over the California coast. Greg turned $100,000 into $1.5 million solely on my trade alerts. He bought a new home in Orange County, California, with Tesla solar panels, a Tesla Powerwalls, and a Tesla Model 3, and still had enough money to send 3 kids to college. And here is another testimonial from one of our followers. Oops. Let's see if we can get there.
Hi, this is Bob. I live in Colorado and hiking on top of the Continental Divide. 9 months ago, I joined John's Global Dispatch Service and was so impressed with the profits I made that 2 weeks ago, while hiking in the Dolomites, I joined his concierge service. And in 2 weeks, it is 100% paid for it, and I couldn't be happier. Life is good. John really helps. The other day, I had a text message exchange with him regarding some concerns I had with TLT. Put spreads, he encouraged me to stay in. I did, and today they went out at 95% of maximum potential profits. And that's the way it works for me. I hope you all do well trading yourselves. Thank you.
All right. And by the way, we get these in almost every week, these kinds of testimonials. So what do we do about all this? Well, stocks, you want to buy the next crash or the next major dip. Bonds, you want to buy dips. Commodities, buy dips. Energy, stand aside. Foreign currencies, buy the next currency dip. Precious metals, buy dips. So yeah, it's a complete reversal of what we had this year. So if you're not up 75.73% in the past 12 months as I was, you are reading the wrong newsletter or following the wrong trade mentoring service. 75.53% trailing 1 year return, and that is daily audited. 49.51% average annualized return. You get those kind of returns, you get to do things that other people can't do, like take the owner's suite on the Queen Mary from New York to London. When you get to London, you can then take the Orient Express to Venice. Warning, every dinner is black tie, so I bring an extra tux for that part of the trip. And when you get to Venice, you can go island hopping by helicopter. Saves a heck of a lot of time. This is the very long view and where the big money will be really made. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones as a global demographic wave brings on a new golden age. 85 million millennials will become the next big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That'll create an economic boom that could last another decade starting in 2023. And that's me watching climbers come down from the Matterhorn from my chalet in Switzerland. And this has all happened before. From 1982 to 2000, the Dow average went up 20 times in 18 years. Are you ready for a replay? This is what happened the last time we had a demographic tail end like the one that's starting right now. So if we get that same trend, assuming the bottom was in 2009, that means if we get a 20 times return from the 2009 bottom, that takes us up to Dow 120,000 by 2030. And if you think this is impossible, we are in fact already 2/3 of the way there. We're actually here right now on a relative basis, assuming we get the same price movement that we did from 83 to 2000. Except this time it's different. Technology is hyper accelerating on all fronts simultaneously, and the pandemic greatly sped up the rate of change. The development of functional quantum computers means that computational ability is about to increase 1 trillion-fold at no cost. The world's major computational challenges will be shortly solved, like weather forecasting and cancer cures. All major human diseases will be cured within 10 years. Live another decade and you'll have a shot at living to 150. Needless to say, barbell stocks dominate in this scenario, will account for the bulk of stock market gains in our lifetimes. The 90s had cheaper computers, cheap operating software, and a new internet. The 2020s will have 10 times this number of new technology drivers. So who'll show you how to play the next 90,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 75.53% in a year. Follow my research and market-beating trade alerts, and you will rake the profits in. Let Marine combat pilots steer you to big trading profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. This is a typical trade history for a month for us. You can see we bought the S&P 500, made 16%, sold short treasuries, made 8%, bought the Russell, bought Amazon, bought Apple, bought Biogen, but then stopped out very quickly. We always stop out of losers very fast. It's easier to dig yourself out of a small hole than a big hole. And we bought Palo Alto Networks, shorted the yen, shorted treasuries again, bought the SPYs, and bought gold. Just a matter of time for barbell stocks break out to new all-time highs. Watch this space going up into the end of 2023. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. This is how our service works. Our algorithm predicted an imminent upside breakout in Tesla a few years ago. So we sent out a trade alert like this. It said buy Tesla at 67 or best. It was an opening trade, portfolio weighting 10%. That meant you had to buy 149 shares for a $10,000 exposure in Tesla. What happened? Well, it went up 63% in 20 trading days. So did we just sit around and pat ourselves on the back? No, we sent out a trade alert. It said take profits. Sell Tesla at 109 or best. On this particular trade, we made $6,258 in only 20 trading days. Did we give up on Tesla after that? No, we kept buying every dip, bought it here, bought it here, bought it here. And in fact, we chased it up to a split adjusted price of $400. So this is a record of our 10 baggers that we had last year. Zoom, we got a 10 times return, buying it at 60. Lam Research, we got a 10.6 times return. NVIDIA, we got a 16 times return on that one. Square, we got a 25 times return. Moderna, we bought before the pandemic, got a 40 times return on that. And of course, Tesla, the granddaddy of them all, up 400 times from our original cost of $2. So with my Mad Hedge Global Trading Dispatch service, you get instant trade alerts sent out at market sweet spots, about 200 of them a year, and all the reasons to execute them. Live bi-weekly strategy webinars like this one with an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world, more educational videos and webinars than you could consume in a lifetime, and access to a 14-year database on investment ideas. I'll even give you a tip on a great surfing school in North Africa. Warning, it's a lot harder than it looks. I think I broke my nose a few minutes after we took that picture. This is a one-stop shop. It's for individuals who want to understand what is happening with their retirement funds. It's for people who want to learn how to trade for a living, get the financial education of a lifetime. It's for smaller institutions and financial advisors who can't afford an in-house research department. Get in before the next melt-up begins. With this, you get my Global Trading Dispatch in your inbox every morning. You also get Mad Hedge Hot Tips showing the 5 most important things that happened today and what to do about them. This is what I'm not going to charge for my service. I'm not going to charge $100,000. And that's what I charge my big hedge fund clients. And they're happy to pay because I make them millions of dollars. And I'm not going to charge you $10,000. That's what I charge my concierge clients who get my personal cell phone number. And I'm not going to charge $3,000. That's the cheapest site for this service on our website. This is the real deal. Creating this product cost me millions of dollars. With the best customer service in the industry, running it cost me millions more. Here's the offer you can't refuse. 6 months for just $997. That's a 66% discount to our regular price. It's a limited time offer. We only take 25 new subscribers at a time, so it's first come, first serve. I can't wait to make you a top door trader. And Jeff, if you have that link, put it in the chat box on the right so people can click on it. That'll take you to a dedicated sales page. Only available today through this webinar. Let me make the money for you to pay for your subscription. You make the trades. Discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Just click on the chat box on the right. Here's the offer you can't refuse. Just 6 months for just $997. Buy now and you'll instantly receive a trade alert with a very high probability of success that you can execute immediately and make some of the most serious money in your life. Don't leave good money on the table. 95% of these trade alerts make money immediately. So I'll even give you a tease here. This is the chart for the trade alert that I'm going to send you as soon as you buy the service. What I'm not going to tell you is if this is a buy or sell. You have to go through 1,000 charts to find one this good. Let me do the heavy lifting for you. This is my friend Peter in England, who does the maintenance on the Spitfire. And let's go flying again, and I'll tell you the story about it. When you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. So it was in this spirit that I traveled to the famed World War II fighter station at Biggin Hill in England to meet Mad Hedge concierge member Peter. Peter was a poorly paid pilot for Ryanair when he first signed up for my global trading dispatch. After double his money in the first year, Peter upgraded to my concierge service. Then the money really started to pour in. Peter plowed his Mad Hedge trading profits into restoring a 1940 Battle of Britain veteran, a Supermarine Spitfire Mark IX, in his backyard, begging, borrowing, and trading for parts all over the world. He eventually built his fleet up to 16 flying aircraft today, which are worth over $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild and blustery day when we took off and headed for the English Channel. Even though the plane was 82 years old, we managed to brisk 250 miles an hour over the English countryside. The Spitfire could outmaneuver any plane the German Air Force threw up against it. This particular plane, as cred, was shooting down 2 Messerschmitt 109s, and it's easy to see how. We found a clear piece of sky over the white cliffs of Dover between 2 big fluffy cumulus clouds and commenced a full-on aerobatic flight test. Pilots always want to see what I can do with these old planes, and this time was no different. I executed multiple loops, barrel rolls, chandelles, lazy eights, Immelman turns, and wing overs, careful never to exceed the 1G limitation, or the wings might fall off. Spitfires can dive like crazy. We dropped from 8,000 feet to 2,000 feet in seconds. Then it was back to Biggin Hill for a perfect 3-point landing and a pint of beer. Let me make millions of dollars for you as well, as I have done for thousands of other followers over the last 14 years. I look forward to working with all of you. Okay, so let's find this again and go there. So 6 months for just $997. Here is the link that'll take you to the sales page. And Jeff, were you able to find that link?
Yeah, we pasted it up there in YouTube and GoToWebinar for you.
Okay, and just let me take a quick look and see if the link is working. And the answer is yes, it is working. In fact, we just had William from Billings, Montana sign up for the service. Thank you very much, William. Please check your inbox. The trade alert should be in the box, and the underlying stock is having a great day. We just got Nigel from Hong Kong just signed up. Thank you very much, Nigel. And if you can't find the trade alert in your inbox, please check in your junk folder. If you don't have our email address in your address book, sometimes it will go to junk. We also had Eric from Flagstaff, Arizona come in. Eric, and I can see right now we're going to hit our 25 limitation pretty soon. So if you're sitting on the fence just thinking of buying, act now, because the store shuts off the second we hit a sale of 25. Okay, here's another one come in. Let me open this up.
John, we do have a couple questions if you don't mind.
Fire away.
All right. AJ wants to know if you still like copper for the next couple of years.
Well, let me give you a couple of facts, and you tell me if I like copper. Every electric vehicle requires 200 pounds of copper. It goes into all four wheels because the wheels are rotors, which are made out of copper. So that's why they weigh about 60 or 70 pounds each. And the number of electric cars sold will go from 1.5 million a year this year to 20 million by 2030. So you can do the math. That's going to be 19 million times 200 pounds, and that's the amount of copper demand just from the EV industry. On top of that, we need 100,000 miles of long-distance transmission lines and all the copper you need to hook houses up to those transmission lines. So the bottom line on all of this is that the annual production of copper is going to have to triple to accommodate this growth in demand, and that's impossible. So what happens when you can't meet the supply? Answer, the price goes up. So we're looking for copper prices to rise to, or our favorite copper stock, the share price will go from 32 to 100 in the next 2 years. And to find out what that stock is, sign up for Global Trading Dispatch, and you'll learn more about copper than you ever wanted to know. Does that answer your question?
Yeah, that's perfect. 2 questions for very similar questions. Baum and Dugan both wants to know what the rate will be on renewal after 6 months.
You're grandfathered in. It's
So
$9.97 for life for every 6 months. So yeah, we haven't raised prices in ages, even though salaries have been rising quite rapidly lately. Okay, we just had another person come in, James from Castle Hayne, North Carolina. James, check your inbox and do that trade alert now, because I think stocks are going to keep going up for the rest of the year just on this one trading rally. And then we had Michael come in from Charlotte, North Carolina. I guess I'm hot in North Carolina right now. Maybe the words got out. Okay, and then another one from Norman from Odessa, Texas. Just came in. Thank you very much, Norman. And then another one, let me read here. Peter from Sturbridge, Massachusetts. Okay. Any more questions?
Let's see. Walter says, how are they going to generate all the electricity for EVs without natural gas, oil, or coal?
Solar. I have 72 solar panels on my roof, and not only do I power all the heat and light for the building, because we have electric heat pumps, it also powers 2 Teslas. And we still generate enough extra electricity to get paid $1,000 a month by PG&E, our local utility. So there are a million other houses like this in California. And since we started the construction project, the cost of solar panels has dropped by 80%, and the productivity of the panels has doubled. So you keep these trends going forward, eventually electricity becomes free. So that's cool. How you do it, is with free energy. And if you think free energy is good for the stock market, then you should buy my service, and we'll tell you where the big money will be made for the next 10 years.
It's not good for all of the stocks, though.
No, it's particularly bad for energy stocks, which is why we aren't buying them.
All right, John, we're out of time. Go and get that Med Hedge Fund Trader. It's in the link, -1122.
Yeah, just click in the chat box on the right. That'll take you to the dedicated link. We know it's working because we already had most of our 25 in sales already has happened. So look forward to working with you all in the future.
Thanks, John. I always enjoy kind of like what you have to say. So thank you for coming in and spending some time with us. All right. Thank you very much. Yes. Okay. Let me go ahead and make myself the presenter again for real quick. And let's go ahead and figure out where we're at. Oh, there we go. Okay. The big picture of John. All right. Let's do this actually. We are moving right up to time. I did promise a prize. We're going to deliver a prize. I have been promising though all week that we're going to have Tyler Wood and he's going to talk about CMT and technical trading and the CMT Association. It was eye-opening to me, the information that he had in terms of how much a CMT designation could be helpful for you. And before we kind of more get into CMT and what they're doing and kind of introducing Tyler, let's do a prize, Kelly. Let's do it.
I'm ready.
All right, let's see. Let me figure out let's figure out what prize we're giving away. Sheet. I don't have the prize list open, but it won't take me too long to find it. All right. Let's do this. Mark Leibovitz, he's going to talk tomorrow. He's got a book called The Trader's Book of Volume. It's normally $40. You can buy it on Amazon. Mark Leibovitz is a top market timer according to Market Digest, and this is his book. We're going to give it away right now. Kelly, are you ready? Good. Okay. Give me a number between 1 and 11,493. And that would be Jose A with a Gmail account. Everybody seems to have a Gmail account nowadays, USA. So let me go ahead and mark down that prize. So that was the Mark Leibovitz volume book. We'll go ahead and Jose, we'll make sure we have the correct information for you. But congratulations on winning. Kelly, thank you for the assist. All right. For everybody else, again, we're MetaStock. If you want to take advantage of any of the specials that we've talked about today, or get an extended trial on our software that I might have mentioned a few times, has been rated #1 in its price category for 29 years in a row. Scanning, testing, forecasting future probable price movements, get real-time alerts, commentary. Pricing starts $69 per month if you're in the US, $59 if you're not in the US. Depending on the market, you need metastock.com/conf promo. You can get that set up. Metastock.com/sales chat and 800-882-3040. So that is not, that's not Tyler. Okay. CMT again, great sponsors. They've been sponsoring their events, all of them, for about a year now. I love working with Tyler. Tyler's such a nice guy. So easy to work with, always has a big old smile and some really cool new glasses if you haven't spoken for a couple times. But Tyler's going to talk about the CMT as an organization. He's going to be talking about technical trading quite a bit. And he always does such a good job. And we always love to have him. So Tyler, how are you?
I'm doing great. Jeff, how are you doing? Thanks for the nod on these special glasses. I appreciate it.
Oh, yeah. Yeah, those are new. I like them, though.
Well, as one gets older, you need more and more assistance from medical devices or things that just make getting around a little easier. Thanks so much for having me back to the event again, Jeff. It's a total pleasure, and honestly, our organization, small nonprofit, we've really seen the edge of the envelope get pushed by folks like MetaStock, who have just incredibly powerful charting tools. And so for this next hour, we're going to talk about how those powerful charting tools can be put to use responsibly. And I'm going to give you a little background about the CMT Association. How's that sound for the next hour, Jeff?
I'm excited. You always do a great job. I always find everything. It's all your turn. Go.
Sweet. Slides coming through okay? You can see what's on my screen? Awesome. Yep. Well, congratulations already to everybody who is on this MetaStock event. This whole week has been full of really sound educators, folks who've been doing this for a very long time. And so if you've been paying tuition to Mr. Market here in 2022, hopefully what you're doing right now is pulling out a pencil and paper, taking notes from all of these great lectures that Jeff and the team at MetaStock have put together, because you can shorten your learning curve And I can tell you that trial and error in the markets can be a very painful way to learn how to do this. I myself found the greatest group of educators, mentors, folks who could coach me through this through an organization called the CMT Association, Chartered Market Technicians Association. It's been around for a very long time. In fact, turns officially 50 next year in 2023. But it exists for two reasons. One is to improve investment performance and decision making, right? We do a lot of educational activities. We have a credential, chartered market technician. You'll see that behind a lot of institutional money managers. You'll see it on CNBC or Bloomberg News or wherever you get your financial news media. You'll see chartered market technicians talking about what's going on in the markets using these tools in a responsible approach. The second thing that we do as an organization is open career opportunities. So we are an advocacy body for and on behalf of all technical analysts. And we're not talking just about our chartered market technicians. Those charter holders are near and dear to our hearts, but we want the entire financial services industry to understand what it is that we all do, you included, to understand and respect these tools, to understand these tools in terms of regulatory authority, what folks like FINRA in the US or SEBI in India or IROC in Canada, what they're looking at in terms of their regulatory code. And then, of course, advocates for technical analysis with all sorts of great partners like Metastock who are pushing the envelope on charting tools. So I'm here as the representative for this organization that is beloved by many, near and dear to my own heart, and represented all over the world. 137 different countries, you'll find CMT members. Again, it's been around for more than 50 years. It was our founders who were getting these things started in the late 1960s. So it was just a very small group of sell-side equity research analysts at the big banks and brokerage houses in lower Manhattan that decided they needed to stand up and get some professional recognition for this toolkit. Because in the go-go years of the 1960s, there was a lot of shenanigans taking place. Charlatans, get-rich-quick schemes, snip and clip clubs is what they used to call them. I think now we talk about that as the advent of the crypto bros, and certainly Sam Bankman-Fried is in some hot water this week. These are the kinds of market manipulations and things that have masqueraded under the name technical analysis that we really try to fight against. We try to bust some myths about what our toolkit does and does not do. And through the CMT program, we have brought on more than 10,000 new candidates all over the world who are just looking to learn these tools to establish their own credibility and careers in finance. And so for everybody who's on this line, if you're trading your own account, but you have aspirations to become a professional money manager, you've got a strategy or something that you've implemented on a personal level, but you'd like to take that out to outside investors, the CMT charter and the program is really a great first step in that direction. All right, beyond the CMT program, we are a member services organization. So I talked about opening those career opportunities through advocacy. We also do a ton of events and networking within our member community to help develop people's careers, right? So we focus on making sure that there's a collegial discourse. People are sharing ideas about what's working, what's not working, how they can help improve each other's knowledge and ideas. And then, of course, we do a lot of educational activity, learning resources like our weekly educational web series or publications like our monthly magazine, Technically Speaking, or twice a year we publish a double-blind, peer-reviewed academic journal. That's a real mouthful, but a really well-respected journal of technical analysis in the academic community. And then, of course, closer to even my own heart is our new podcast. Coming to the end of season 2, I get to host an interview, hour-long, once a month, with David Lundgren, who is a CMT CFA charter holder, 30-year veteran, trend-following money manager, has had an illustrious career at firms like Fidelity and Wellington and elsewhere. But he and I get to sit down with the men and women of Wall Street who actually developed, innovated, created the tools that you and I get to enjoy on great platforms like Metastock. So the great John Bollinger explaining to us how he came to the idea of volatility not just being a fixed figure, which I can't believe. This is like the earth was flat before John Bollinger came along and said, no, volatility can move for any given security. Those episodes are free no matter where you get your podcasts. I encourage all of you after this conference ends to make sure you jump up onto Apple, iTunes, Spotify, wherever you get your podcasts, and check that out. Fill the Gap is the official podcast of the CMT Association. And our next episode, episode 23, is coming out. And it was actually recorded live in India 3 days ago. I just got back from the CMT Asia Pacific Regional Summit that took place in Mumbai, India. And really the whole of last week was just an incredible educational exercise. We brought several of our board members over to speak at the conference, but we had a week's worth of meetings with the National Stock Exchange, the Bombay Stock Exchange. If you're one of those millennials and sit on Twitter all day, I'm sure you've seen more pictures of the CMT Association's trip through India than you care to. But there's a lot of great exchange happening on a global basis through our member network. We learned a ton from both SEBI, the Indian regulator, as well as the exchanges, National Stock Exchange and Bombay Stock Exchange, just about the growth of investors in India, how their markets have maintained a pretty flat position here in 2022, showing a lot of relative strength to the rest of the world. And of course, incredible demographics and tailwinds for the Indian equities markets that I hope to talk to you about on many Metastock events in the future. If you missed that India summit, the Asia Pacific Summit, I invite you all to join us in New York City, April 26th, 7th, and 8th for the 50th anniversary symposium of the CMT Association. This is going to be one for the record books. We're pulling out all the stops. We have an incredible lineup of speakers over 3 days, and I've got a few surprises to announce over the coming weeks. But for more information about those conferences, those events, learning activities, even if you're not ready to sit for a series of exams in the CMT charter, you can certainly benefit a lot from the CMT Association. You can always shoot me an email, tyler@cmt.org, or you can go to our website, cmtassociation.org, and find out a whole lot more about the organization. So that was kind of a long intro. I apologize, but that's a lot of background, and I represent a lot of really wonderful people who have done a lot of hard work before I even got to the association about 11 years ago. And what I want to do with you all today is define technical analysis. First of all, we got to have a shared language about what we mean by technical analysis. And the second is, we're going to dive into a few of these tools, just high level, that you could use to improve your own decision making. And it's not, one indicator to rule them all. This isn't Lord of the Rings. There is no silver bullet. I hate to break it to you. If you are still in search of that, I bet your charts have a lot of lines on them. Unfortunately, there is no one answer to these markets. It's not a math equation to be solved because we're dealing with human emotion. But we'll talk about some process and some of those tools that can help you in your own decision making. And then we'll wrap up. I'll tell you a little bit more about the CMT program and just open it up for questions. So that's our roadmap for the next 41 minutes. How do we define technical analysis? Well, hopefully, this is looking pretty familiar to all of you. Technical analysis always starts with a chart, at least for most folks. We're going to go back to the Bible of technical analysis, written by these wonderful gentlemen, Edwards and McGee, in the 1940s. And they said that it is about the study of the action of the market itself. That's a very succinct summary of technical analysis. And it's basically all of the information, all of the data and the statistics that the market itself generates. So not the fundamentals, right? Not what the companies are doing in an equity sense, not the macro picture. We're not talking about people's views or opinions on politicians or geopolitical events, or people's opinions about the fundamentals of any given company. Instead, we're looking specifically at what the market is generating in terms of information. We also know that technical analysis is about the supply and demand relationships for any shares, any security, across all asset classes. We know that in publicly traded markets where there is liquidity, price is established where a buyer meets a seller, right? Where the bid meets the ask. And that is a really important first principle of the markets, to borrow a phrase from John Bollinger, that's going to guide us through today's session and hopefully guide you through your trading for years to come. Very simple idea, but really powerful. Supply and demand. We highly cite Perry Kaufman throughout the curriculum in all three levels of the books. Perry Kaufman's work is featured prominently. And he talks about the systematic evaluation of price and volume and all of those statistics. And that term systematic, meaning rules-based, using some logic, having a checklist. We're going to go through that as well today. So as an association, as the leading authority on the subject matter of technical analysis, we define it by saying that technical analysis provides the tools to successfully navigate the gap between intrinsic value and market price, two different things, across all asset classes through a disciplined, systematic approach to market behavior and the law of supply and demand. I know, that's a mouthful. Our wonderful marketing team created these great infographics about bridging the gap, filling the gap, navigating the gap. We've got a lot of nautical metaphors going on. Big nod to Charles Dow, the original technical analyst of the West. But really what we're talking about is that intrinsic value being driven by accounting estimates and valuation is very separate from, but tied to, market price, which is driven by investor sentiment, behavior of investors, and those supply and demand relationships. And it was the great Ralph Acampora, CMT charter holder, and the founder of our organization that said, Tyler, if you're ever talking to people about technical analysis, use this chart of mine. And he taught for over 40 years at the New York Institute of Finance. And he used IBM, that was the mega cap stock of the day. We're going to talk about Apple. And I want you to just stick with me for a second. To have a complete analytical approach to any investment, CMT Association is not here to tell you to throw out all fundamental information. In fact, all long-term trends are driven by fundamentals. But stick with me in this graphic for a second. If you're going to analyze the company, right, the company Apple, there's a PE ratio, right? They have competitors in their field that are producing products that might be better or worse than Apple's products. They have a management team that might be very efficient or very inefficient at allocating capital throughout the firm, being very strategic in their approach to growth. Those companies might pay a dividend. That's important to know on a fundamental basis. They have products that are going to generate those future cash flows that we use to derive our estimates of intrinsic value that get baked into things like PE ratios. Now that's the company. And when I went through my MBA program, understanding managerial accounting and corporate finance was really everything that we studied. Technical analysis was really not covered in my master's program because fundamentals are really the driving force of most academic approaches to finance. So that's theory, but in practice, right? We can't just know about the company unless we're a huge private equity firm and we're going to buy the whole company. No. You and I and everybody else are just buying shares of that company. So we've got to understand something about the stock, not just the company, but the stock. And that stock trades at a price. And at every given price, there are volumes of shares traded, right? And we can understand the appetite of the market by looking at price and volume. We might look at other statistics like open interest. We can look at commitment of traders reports from the CME. We can look at all sorts of market internals, breadth. We can look at volatility. We can understand a lot more about how this stock is trading from the data that's provided by the market. And that tells us a thing or two about the supply and demand relationships that are happening for shares of Apple. And then we have to understand the psychology of the market participants at any given time. So the fundamentals are critical to any long-term trend, right? We don't see big, broad, secular bull markets when GDP is contracting. When we're in a recession, we don't see the markets topping to new highs. No, we see markets topping to new highs when we're in an expansionary economy. And we see long-term trends of most stocks. Those are driven by sound fundamentals. They have an edge in the marketplace. They're solving a problem that other companies didn't do. So the fundamentals matter. The problem is we don't know which of the fundamentals matter and at what time. And I can't tell you how many analysts have wasted so much breath and spilled so much ink over the last few weeks trying to anticipate the outcomes of the midterm elections here in the United States and then predict upon their models and what might happen within the House and the Senate, how that's going to affect the stock market. Well, I'm here to tell you that you could take a big sigh of relief, okay? We don't have to know what's going to happen tomorrow. And in fact, even if we did know exactly what was going to happen tomorrow on a fundamental basis, or if we really understood the narrative inside and out, that wouldn't tell us necessarily how all of the other market participants are going to react to that news. So case in point, third quarter earnings coming in from a number of companies a few weeks ago where they beat analyst expectations, right? So on a fundamental basis, that is an incredibly great story. And they traded down 5%, right? So even with a crystal ball that would tell us the fundamental information ahead of time, we don't know how market participants are going to react to that news. Maybe they beat analyst estimates, but they didn't beat by far enough, right? The market is pricing things in all the time. This slide here that I'm bringing up is really just to talk about the advent of behavioral economics. Behavioral finance experts and Nobel laureates, like 2002 Nobel Prize winner Daniel Kahneman. He was awarded for his work, not in economics, but in psychology. Daniel Kahneman and Amos Tversky wrote some groundbreaking research in the 1970s called prospect theory. And it has everything to do with our evolutionary psychology and the human mind, some of these behavioral shortcuts and biases that we all fall victim to. I just wrote the word herding principle on here, and I have some very entertaining clips about how that takes shape in various aspects of our life. But the important point here to take away is that these behavioral economists, these cognitive psychologists that have given us terms like the herding principle, what they are doing is applying great analysis and theory and giving new names to things that we as technical analysts have understood for hundreds of years. Charles Dow didn't talk about the herding principle. He talked about price trends, right? They talk about the anchoring bias. We talk about areas of support and resistance. Same exact concept. And it all boils down to this idea of supply and demand. All right, take you back to Econ 101. I'm sorry for anybody who had my experience in school. Econ was a little bit of a challenge. But this chart here, right, at a fixed rate of supply, an increase in demand is going to move us up that equilibrium, up that curve, and it's going to end up with a higher point of price, right? We're going to see increases in price as demand increases upon a fixed supply. Well, what's a more fixed supply than shares of a company's stock? And in fact, these days, the corporations are buying back so much of their stock, we're actually decreasing the supply curve, also increasing price. So demand for shares or reduction in the supply of those shares through buybacks is all going to end up with an increase in price. That's what drives this herding behavior. We see some demand, we see some increase in price, more investors notice the increasing price, and there's more demand, and it's this virtuous cycle that usually ends in a bubble. Let's talk a little bit about this supply and demand in real time. Okay, AMC, on a fundamental basis, this is a $5 stock, right? Yes, pandemic will end, we'll go back to movie theaters, and maybe that was the impetus for this first leg higher in AMC shares. What happened after that, right, is purely driven by investor irrationality. The behavior of the Reddit subgroups that drove prices, that had their short squeeze, that crushed Melvin Capital. That is a case study for the record books. And anybody who will tell you that markets are purely efficient or that prices are purely random, you can tell them to go take a long walk off a short pier. We know that fundamentals are important, but markets are driven by investors, and investors do not behave perfectly rational. Just a few more examples. GameStop was one of my favorites, right? If anybody ever visited a GameStop, I'm almost young enough to remember renting video games. That's not a business model that's changing the future. That's not a stock worth 5,000% gains. We've also seen this in the cryptocurrency space. Now, the point to be made here is that as a technical analyst, as a trend follower, you can invest in securities for which you don't have to understand everything that's going on under the surface. Could I tell you what all these lower level protocols are doing, what blockchain ledgers are going to do, how they are disruptive to the current banking and financial systems that we have? I couldn't begin to explore those concepts. And there are folks who are light years ahead of me in understanding the blockchain technology that is driving cryptocurrencies. I don't need to know, right? That's the relief, right? I can see a price trend and I can participate and I can control risk just by using the toolkit of technical analysis. And so can you. You don't have to understand how AMD is making microchips, but you can see the trends and participate. All right. nobody has said this better than Mark Abraham, right? Again, a phenomenal trend following investor. And he said that ultimately it's the dollar-weighted collective opinion of all market participants that determines whether a stock goes up or down. And that consensus is revealed by analyzing price. So what the market does is it knows everything that we know, and it's priced all of that in. And it knows everything that we know that we don't know, and it's priced all that in. But the market also knows all of those things that we're not even aware we don't know, right? The market spotted Enron long before any financial analyst was saying we ought to sell this thing. The market knew that something was off. And the market will always sniff out. It's a discounting mechanism. It's going to sniff out what will take place in the economy 6 to 10 months in the future. And so it's a very powerful thing to have a grasp on price analysis, because you can discount all of that fundamental information into a single variable, reducing complexity, simplifying your life. All right. Let's move on to section 2. Thanks for sticking with me, everybody. We're going to cruise through some tools here that hopefully will impact your own trading and your use of these incredible tools on Metastock. First, we're going to talk about relative strength. We're going to cover the concept of market breadth. And no, I'm not just talking about anybody needing a mint. We're going to talk about the concept of divergence, all right, and some limitations therein. So starting with relative strength. Our good friend Martin Pring, a highly cited author in the CMT curriculum, says relative strength is a simple technical concept that measures the relationship between two securities. And actually, you can use relative strength to measure the relationship between a number of securities against a benchmark. But one is simply divided by another, right? So we're dividing one series of price data by another. And relative strength can be used to understand intermarket relationships. Can also be used to compare any investable asset against others, right? We can use technical analysis to compare the landscape and try to fish where the fish are, right? We can look at relative strength charts or ratio charts to give us a leg up in finding those that are leading the market higher. So let's dive into this concept. Right now we're looking at weekly bars and candles. The top panel is growth equities, right? The bottom panel are value shares. Now, if we were to just eyeball these two charts, looks like growth was going up. We came to the COVID pandemic and we crashed, and we rallied out of that and headed higher. If we look at value shares, well, let's see, we were headed higher. We got to the COVID collapse, and then we recovered and continued on. If we were just eyeballing, they look like they're the same chart, right? So which one outperformed the other? I really couldn't tell you just by looking and comparing the charts side by side. Instead, we use a relative strength line. We divide growth by value, and we start to see some really interesting trends, right? Growth is outperforming value all through the COVID pandemic crash and the recovery afterwards. We see these spots here where it underperformed. The relative strength line is trending downward, where value shares are outperforming their growth counterparts, right? So when this relative strength line is trending down, we know that value is outperforming growth and vice versa. But what's fascinating to me in this chart is that the outperformance, right? So important to note, relative strength will show you what is leading or lagging, but it's not an absolute trend. So growth equities are outperforming value, meaning they are going down less through the pandemic crash, right? They are outperforming by simply not being as bad as the value shares, which makes sense, right? Our growth equities are things like information technology, communications. These are part of the stay-at-home trade. And the real economy, the industrials and financials and energy sector, they got pounded in the COVID collapse. What's also fascinating to me is that we saw the relative outperformance of growth over value going into the COVID collapse. The outperformance started well before, at the index level, we saw any kind of contraction in price action. So relative strength is a really powerful tool if you are just looking to do some tactical asset allocation. In my other role as co-founder of Go No Go Charts, my partner Alex and I do a lot of work at the sector level, looking at relative outperformance of one sector over the others. And we just compare each of those sectors to the S&P 500 as a benchmark. You can do the exact same. If you're looking at, oh gosh, should I buy Microsoft or should I buy Google? Microsoft or Apple? Well, you pull up a relative strength line and it'll tell you who is outperforming and by how much. All right, so that's a really powerful concept that can be used in a lot of different ways. So that's relative strength. Let's move on and let's talk about breadth. Now, what I want you to think about is the bench strength. How good is the whole team? Not just a star player, but the whole team. And Perry Kaufman defines breadth as the measuring of the imbalance between advancing and declining stocks. So a net increase in the index with more of the shares, more participants in that index are declining, will generate concern that the upward move is poorly supported. Okay, in English language, please. If we have a stock index, at the index level, it's going up. But that final move is supported by fewer and fewer stocks in the index still making new highs. And we know that we're coming to perhaps an intermediate end of that trend at the index level. A lot of technical analysts look to market internals like breadth to understand the health of a market and to understand inflection points, right? Where we are bottoming or where we are topping out. So breadth, if we think about the Chicago Bulls of the 1990s, yes, Michael Jordan, incredible player. But so was Scottie Pippen, so was the entire team. Everybody had a job to do and they did it perfectly well. So when we look at the US equities markets in 2021, we saw narrower and narrower leadership as those markets made their penultimate highs. And what that means to us is that it was fewer and fewer stocks supporting that rally. The degradation that was happening or the destruction of the market on underneath the hood could be seen long before the index actually topped out. Now, as technicians, we would ask, is it a stock market or is it a market of stocks? And what I want to press upon everybody who's watching this conference is that in this new regime that we are in, right, 40-year downtrend of US interest rates and yields being broken to the upside, we're in a new shifted economy right now. It's not the stuff that was working before that's going to continue to lead. So when we look at market breadth, what are the shares that are participating in this new uptrend that we're seeing in the S&P 500? Well, it's not the growth equities. It's not communications and information technology that are leading us higher. It's cyclical sectors like industrials and materials, the financials and energy sectors. That's where we're seeing much more upside participation, more of those shares above their 50-day moving average, more of those shares making new highs. And that's a really encouraging sign when we see breadth increasing, right? More participation in the marketplace broadly. And in a cap-weighted index like the S&P 500, what we got to in late 21 was just the FANG stocks. There were 9 names that were holding the whole index higher as we came to that end. So let's look at this in a chart, all right? Again, case study, the COVID collapse of 2020. Right here, we're looking at weekly bars of the Russell 2000, the IWM, and of course, we crashed through the lows February and March, and then rally out, and then we had stagnated in the Russell 2000. We actually saw a brief fake out, broke above that channel, and then downward into 2022. But let's take a look at the advanced decline line. That's just one type of market breadth measure. What we saw was increasing market breadth through 2019 and into 2020 before the collapse. But weeks, months before the COVID collapse, we saw market breadth begin to dry up and really decelerate, right? You can see these 2 red arrows. This is the point at which the market actually began to show signs of weakness and then plummet into the COVID collapse. But we saw the breadth dry up into that COVID crash, meaning many shares of the Russell 2000 ahead of the COVID collapse were already showing a lot of signs of destruction. Now we see breadth improving, but at the index, right, we're off to the races, right? V bottom, fastest ever recorded recovery, fastest decline of 30% or more, and the fastest recovery. So history in the making here in 2020, but we didn't see a whole lot of improvement in market breadth. What we saw going on up here in this sideways range-bound market was much broader participation of shares within the Russell 2000. So the point that I'm getting at, if you are just a passive index holder, if you simply buy into the Vanguard complex of passive investing and you hold the whole index, you could go for a long time and see zero return, right? The market can stay flat or even down. Meanwhile, under the surface of the hood, we've got a raging bull market going. More and more shares participating to the upside. Are you capturing that volatility to the upside? Are you capturing those new breakouts? Right? As individual investors, we have to take ownership of our own self-directed trading, and we have to make sure that we're not just looking at the stock market. We have to understand that it's a market of stocks, and we got to participate where that is trending higher. So there's a lot of information in market breadth, a lot of different tools like the advanced decline line that you can use to get a better understanding of what's happening under the hood. All right, third and final tool here that I want to talk about from the toolkit. We're going to talk about divergence, right? And now this applies to every indicator under the sun, right? Our first and most important indicator is price. That's the only thing that pays. We got to keep our eye focused, as Mark Abraham said. That's the consensus of the market is revealed by analyzing price. Price is first and foremost. However, we look to a lot of derivative indicators to give us confirmation or divergence of what we're seeing in price trends. So these indicators, these calculations that are made from price, volume, breadth, etc., can be used to identify important market action and separate the signal from the noise. So we want to know if the indicator is confirming the price action that we're seeing. Now, let's take a look at an example. This is, again, I believe the Russell 2000, and we're seeing higher highs being made in price. Well, a divergence in our indicator panel, so down here we're looking at RSI, very simple classical momentum indicator created by Wells Wilder. The classical form of using a momentum oscillator would be to spot areas of overbought and oversold, so the extreme highs and lows. But then we can also look for divergence, meaning that as price advances and we see more and more new highs, we see momentum making lower highs. So as Ralph explained momentum to me when I first joined the CMT Association over a decade ago, he said, Tyler, picture a baseball in your hand, right? Everything's baseball with Ralph. He's from the Bronx. He's Italian. Everything's baseball. He says if you throw a baseball up in the air, the fastest point is going to be when it leaves your glove, right? It's going to rise to the apex, the highest point at which you threw it, and it's going to get slower and slower and slower, and then it's going to come back down to your glove. Okay, and then you could throw it again, super fast. It surges, and then it comes back down. So think about our momentum oscillators. When we see price rally up to this high, we've got very enthusiastic buying, high momentum, right? And then it cools off, right? Price trends don't move in a very straight line. They zigzag all around as we're making higher highs and higher lows. That's how we define trend. So the momentum oscillator comes back down to about its neutral zero level and then shoots back up concurrent with this new price range. But it didn't quite get as high this time. Okay, it comes back down to neutral, shoots up again, and again, not as high. And what we're seeing is trend exhaustion. And that's what this divergence is telling us as analysts. Every time price surges up to make a new higher high, we're seeing fewer and fewer buyers participating in that move. We're seeing lower momentum. Now, divergence is not a perfect tool, meaning if you saw these first 2 points and you saw these first 2 points, right, that's a divergence. It didn't confirm. Did price continue to make new highs? Yes. Did the divergence continue? Yes. Ultimately, it became the end of the price trend. And what I'm pointing out here with divergence is that it's not a perfect signal, meaning you could spot divergences all the way up in a very durable trend move higher. The point is that we can look for these and we can look to our risk management. Where are our stops set? How do we define the break of this trend line? When we know that this is over and we've seen this divergence, maybe we have an earlier exit because we have noticed this divergence coming in. Same thing in reverse. A bullish divergence takes place where we've got a lower low in price, but a higher low in our momentum oscillator or any other indicator that you're looking at in lower panels. That's how we would use divergence analysis to give us a leading indicator of what might be taking place in terms of trend. Again, the primary, most important tool we all have in our toolbox is price. All right. And why are those price trends so important? Okay. John Henry, Guy might be familiar to many of you. If you've ever read the book or seen the movie Moneyball, this gentleman was the creator of sabermetrics and that winning Boston Red Sox team. And what they did was they took all the lessons that John Henry learned as a soybean farmer and then getting into the commodities trade in the 1980s and just trying to be more objective in his approach to trend following, right? So if we just look at the statistics, we look at the evidence, the weight of the evidence before us, we have a huge advantage over others who are trying to forecast and prognosticate and try to develop the narrative that fits what's happening. No, forget all of that. We can simply watch what the market is telling us and react responsibly. And that's really the secret sauce of every trend following investor and what we believe in at the CMT Association in terms of the utility of technical analysis. This should be the most objective approach to investing possible. Right? Fundamental analysis, while the fundamentals always matter to long-term trends, the concoction of estimates and assumptions built in to models of intrinsic value, there's so much room for error. It's so subjective. And I'm not disparaging our friends on the fundamental side. I think understanding both can really help you. But when it's time to make a buy or sell decision for any security in your portfolio, you have to look objectively at what's happening in the market. Now, the reason that we have to be simple and objective in our approach comes down to the expectancy formula. And there's incredible data compiled by Terence Odian and other academics who have looked into the behavior of retail traders and taken a stockpile of data over very long periods to see just how difficult it is to remain profitable over time. And the big detriment to all of us is that our behavior is going to limit our gains. Meaning that prospect theory I referenced earlier from Clement and Tversky tells us, they know, they have quantified that human beings experience much more pain in recognizing a loss than we experience joy in recognizing a gain. So we place a trade, it works to our advantage, maybe we capture 10% move, we lock that in. Are we patient enough to stay for the 100% move? Not at all, right? We want to lock that gain in quickly, recognize the win. What about the losses? Has anybody ever had a trade that became an investment, right? You put a trade on, it didn't work in your advantage, but you had such high conviction in this stock that you were just going to hold on. It was going to come back in your favor. And you held on to it as it dropped 15, 20, 30, 40%, 50%. I mean, we've all been there. Bad things have occurred when we hold on to our losers. Now, these behaviors of ours, it's not your fault. You were given them, they evolved with us as human beings over tens of thousands of years. But what I want to show you in this expectancy formula is that this is the efficient frontier. This curve right here is all of the trading systems that will be break even. Everything to the right of the curve is profitable. Everything to the left of the curve is where we're losing money. All right, let's look at a data point. Right here, the percentage of winners is 50%, right? Flip a coin. Pick a stock, flip a coin. Should you buy it? Should you not? Flip a coin, right? No edge in the market, no discipline, no analysis, just flip a coin. Buy it or don't. You can still be profitable with a 50% win ratio. And in fact, most of the experts, most of the folks who've been doing this for a very long time will tell you that they are pleased as can be to be right 60% of the time, maybe 65 or 70. With the best tools out there, might get you to 70%. Think about Major League Baseball. If you bat 300 throughout your career, you go to the Hall of Fame. That means you're striking out 70% of the time. All right? These are the best in the business, and they're striking out 70% of the time. We're building statues, bronze busts of these baseball players. Okay, that's the good news. You don't have to be right all the time. The bad news is you have to recognize that you're not going to be right all the time, and you have to implement risk management. That's job 1, 2, and 3. Let's go over here and look at the profit ratio. So we can be profitable as investors and traders if we simply flip a coin on our trades, as long as our winners outpace our losers 2 to 1, meaning the profit ratio on the trades that work out, right? Let your winners run, cut your losers short. That's what David Ricardo said in his maxims in the 1600s. These are very simple concepts. They're very difficult to execute. Simple, but not easy. And right over here, this blue dot is somewhere that Paul Tudor Jones likes to play. He's fine to be wrong 4 out of 5 times, as long as when he has a winning trade, he can be sure to press his bets, to play aggressively, to lean into those positions that are working so that he can capture those big outsized gains. So this is all about your trading discipline. How do you control risk? How do you capture reward? Are you patient enough as an investor to stick with trends that are working? And are you able to recognize that you're just not going to be right all the time? And love those losers. Capture them quickly. Get out early. Cut your losers short. That's the name of the game when it comes to risk management. All right. How do we do that? How do we objectively, as John Henry told us, right? We got to quantify. We got to control risk. We got to stay with the winners and let them run. Well, we can do that through a routine. Now, when I first joined the CMT Association over a decade ago, David Keller was the president, and he was also managing director of technical research at a little firm in Boston called Fidelity Investments. At the same time, Dave was learning to fly a plane, and he compared investing and running a portfolio to flying a plane. There were a lot of similarities. One was that he spent so much time down on the tarmac, on the runway with the flight instructor, going over checklist after checklist after checklist. He said that little clipboard had so many pages on it because you have to go through a rigorous rules-based approach to make sure that when you're up in the air, 10,000 feet, and the flight instructor just kills the engine, you have your checklist and the steps that you go through to control the risk of crashing into the ground. And Dave Keller will tell you that when the plane nose is down, it's a panic-inducing moment. And when you feel that for the first time, there is no checklist in the world that you're ready to adhere to. Instead, your lizard brain takes over. You're in panic mode. You've got adrenaline pumping, and you make really stupid decisions. Has anybody ever experienced this as a trader? Is it terrifying when the market rolls over, or when your single security, right? Heaven forbid, you're Sam Bankman-Fried and your exchange just went bankrupt overnight, right? How about all of the volatility that we have experienced in this market? For a lot of investors that got involved in 2020 when everything was smooth sailing and going up in a pretty steady straight line, that's not the game of investing. It is full of engine cutouts. And so, as technical analysts, the way that we can control risk, the way that we can capture reward, is to have a technical checklist that involves a myriad of indicators that includes those tools we just talked about, where if it is abiding by our rules, we stay with that trend, right? If it breaks our rules, we get out. And it is that very rules-based approach that we emphasize over and over and over again in the CMT curriculum, because your technical checklist is your system. That is how you are going to trade the markets, no matter what they bring to you. All right. The other piece that we have to talk about is that technical analysis works across all time frames. We know this because the father of Western technical analysis himself, Mr. Charles H. Dow, the OG technician and founder of the Wall Street Journal and the Dow Jones Indices, told us that the market moves over multiple time frames. He was observing 130 years ago this idea of multiple time frame analysis. Now, he was an accomplished nautical man, and he compared the complexity of the markets to the complexity of the seas. And he said that the primary trend, which is largely unflappable, it's driven by the gross domestic product, the expanding or recessionary economy, the underlying fundamentals of the firms that we are investing in. That is like the tide of the oceans. Right? It does not change on a dime. It does not care about your opinion, and it doesn't have an opinion of its own. But along that primary trend, you can have a secondary trend, right? Above or below the primary. And that's going to be the fundamental information, the reactions to it, the stories, the news of the day, that's going to drive investor behavior either above or below that primary trend, right? So we have mean reversion. A tendency to move back to the average, move back to that primary trend. Now, technicians have made hay on this secondary time frame because we can understand the human emotion that's driving investors to become very depressed or very excited along that primary trend. And the last is the minor period, or that tertiary trend. I'm sorry, the secondary was waves. So we've got tides, we've got waves on the surface of the ocean, and then that minor period is the ripples on the surface of the water. And this is really all behavioral. This is day-to-day, the news, the emotional reactions, even to price moves themselves. But again, if you're trading this shorter period, God bless you. That's fantastic. And you can see how it will shift above and below that secondary period. So what I would encourage all of us to do is that we step out a time period or two, right? So if you're trading the daily chart, right, look at the weekly, look at the monthlies. What is the primary trend that we are in right now? So that when you see bullish activity on a short period within a longer term downtrend, we can treat that as the relief rally that it might be. It might be a little short-lived, it might be a high volatility move to the upside, but we're going to have really tight risk management. In the same way that if you are trading a 5-minute chart, maybe step out to the hourly and the daily to get a secondary and a primary trend, so that you know that you're trading within the underlying direction of the market, towards that market bias. All right. Third and final piece of today's presentation is going to be about the CMT program and why anybody would consider giving up all their nights and weekends to study this academically very rigorous approach to technical analysis. Well, ladies and gentlemen, first and foremost, we need to make sure that we understand these major knowledge domains. The way that we create the CMT exams and the CMT curriculum is by going out to the industry and surveying the hiring managers, the heads of trading desks, the portfolio managers, and our members about what the knowledge, skills, and abilities are that they are looking to hire in their very next role. So as a career-driven aspirant, if you want to make sure that you're equipped for what Wall Street is looking for, the CMT program is derived directly from their input. And they told us, people got to understand risk management. We want our new hires to know quantitative systems. We want them to know how to do signal testing and back testing. We want them to know Monte Carlo simulations. They need to be able to calculate a Sharpe ratio. They have to understand what the objective of any given system is and what the portfolio returns should look like over multiple market cycles. We know that it's all centered around portfolio management, not single security trading alone, but to think about that in context. What are the correlations between different holdings in the portfolio? Is it diversified? What does diversification mean? How does that relate to your risk appetite? And then, of course, applied behavioral finance. So we've talked a lot about how behavioral aspects deliver results in the market, right? Drive trends or in both directions. But we also do a lot of applied behavioral finance to ourselves as the trader, as the portfolio manager or analyst. What are some of the assumptions that we're going to fall victim to as technical analysts, right? Do we lean too heavily on our indicators? Did we react too quickly to that first divergence that we saw? Those are some of the behavioral pitfalls that are going to be called out in the CMT program. All right, what is the CMT program, right? We should talk about that. It is a series of 3 exams. It is also the preeminent global credential in technical analysis. Nobody else in the world recognizes the mastery of a body of knowledge more than chartered market technicians, CMT charter holders. And it's awarded to everybody who has passed all 3 levels of the exam process and meets our professional requirements that are actually handed to us by FINRA. You can take all 3 levels, but you have to take them in sequence, and you can only take 1 per cycle. We offer these exams twice a year in June and December. Sorry, I've got some old dates on here. December 1st through the 11th, 2022. So we're coming right up on it. If you have been studying, if you're watching this presentation and you are a candidate enrolled in the program, I want to wish you every success. I want to let you know that you can reach out to the CMT member community with questions. You can find us on Discord and chat with other chartered market technicians and other candidates in the program. If you're not registered yet for December 1st through the 11th, but you've been studying, I encourage you to go directly to cmtassociation.org, sign up right now. There is literally no risk in taking the exam. In fact, it's the greatest study tool out there, and you don't have to be afraid. We don't publicize all the names. If you don't pass this time around, no problem. Statistically speaking, everybody's going to not pass at least 1 level of the exam. All right, why do people do this? It's so difficult, right? Pass rates are 55%. Why would anybody put themselves through such a gauntlet? Well, it is because it's such a gauntlet that it has this great credibility in the industry. And the CMT program, of course, offers a structured approach to studying all of these tools, certainly much more than I covered today. But it also provides this differentiated value in the industry. We know that folks seek education so that in the financial services industry, they can avail themselves of promotions and a greater bonus and increases in salary. But the one that I want to pull out, so this little infographic on the right, also created by our wonderful marketing team, is the result of survey data. So we asked a lot of chartered market technicians 1 year after gaining their CMT charter, what sort of career benefits did they experience? And over 60% said that after 1 year, they had increased responsibility, meaning as portfolio managers, they had increased their assets under management, their AUM. Now, what that tells us, the increase in AUM for CMT charter holders, was that their firm or their clients or a mixture of both see the credential as a representation of competence, ethics, integrity, and the fact that they've got really great tools to manage risk and capture reward. And that faith that clients and firms have in CMT charter holders as their money manager is really a testament to us that the CMT program is gaining notoriety worldwide, that people are understanding technical analysis for its true validity and universality across all asset classes. So I encourage everybody who's out there, if you're a CFA charter holder or a certified financial planner, or maybe you went to school for accounting, if you are interested in the public markets and interested in trading professionally, the CMT program is your next step. What can you do with a CMT charter? What can't you do with a CMT charter after your name? We did a lot of demographic work around our membership, and frankly, they're in every role in the business, and actually even more that aren't even pictured here. We've got software developers, systems engineers, quantitative analysts. We've got folks who are leading the software development game. We've got folks who are running pension funds, sovereign wealth funds, buy-side traders, commercial hedgers, you name it. Bitcoin exchange operators, although not for long, I don't think. And so for anybody who is thinking about a career path in the public markets, the CMT program is applicable, and that charter will help you in your career path. In my last few minutes, I want to talk about some major changes that have happened to the CMT program. First and foremost, we simplified the prerequisite requirements to sit for the CMT exams. There are none. Anyone who is a current or aspiring professional in the field can join the CMT program, can enroll right through our website, pick up the curriculum, begin their studies, and go through that CMT program. We also introduced remote proctoring through the pandemic, and that's going to stick around, actually. We're not doing away with that. It's been a great success anywhere in the world. Whether you're in Wichita or Warsaw, you can sit for the CMT program anywhere that you've got an internet connection. We also have consolidated the curriculum. We publish that through John Wiley & Sons. You can buy those books directly at efficientlearning.com. That's the Wiley website for their test prep. Excuse me. They also asked me to give you all a discount code CMTTW30 to take 30% off that curriculum. And my goodness, I've got a tickle in my throat. The last thing that I wanted to say is that we have a lot of dual charter holders, CFAs, who have come to the CMT program and understand how this adds value. And for all those technicians out there, I want you to know buying breakouts is still alive. And here in the CMT program, we have got an upside pennant breaking out to new highs. And so you're going to capture a great trend taking place worldwide. And with that, Jeff, I'm going to invite you back up before I cough myself to death here.
Yeah, hopefully you didn't catch something while you were on your travels. But I do like the there.
That's probably just a little dust.
All right, very cool. Michael, I just wanted to verify this. I think you already answered it, but Michael wants to know if you can be a retail candidate and get a CMT designation now.
So the answer is that you can enroll in the CMT program. You can go through these exams. To earn the charter, you do need to meet a professional work experience requirement. And our admissions committee is actually helping us redefine sort of the standards for professional conduct. In fact, when I first joined the organization, David Keller, Managing Director of Research, wouldn't have even qualified to be a CMT charter holder under the stringent definitions. So, Michael, I'd be happy to take a question from you offline. If you want to shoot me an email, tyler@cmtassociation.org, and we can talk about sort of your work experience, what you're doing with your trading account, and maybe where you might be publishing research or advising other clients. So happy to take that offline.
Flavio asked if he could just buy the curriculum books, and I think we already got that. The efficientlearning.com.
Efficientlearning.com is the Wiley website. All 3 levels of our curriculum, and I'm so sorry, that says 2021. Soon to be released the 2023 editions, but yes, efficientlearning.com/CMT, and you can enter this promo code to take 30% off those textbooks. It's a great compendium of some of the classic works in technical analysis, and I highly recommend that level 1 book for anybody who's looking to just get started in technical analysis.
All right, no more questions, but a couple comments. Great presentation, Tyler, from Neil. And
thanks,
Michael
Neil.
says thanks.
Awesome. Jeff, as always, you and the team at Metastock are doing such a great job, and investor education is definitely where our missions align, and it's just a great honor to be a part of this. Thank you so much for having me, and looking forward to doing it many more in 2023 and beyond.
Thanks for all the help and the sponsorship, and we really enjoy working with you guys. And Kelly and I always talk about how we should raise the level of our presentations to match yours. So.
Well, it's nothing a little strong coffee can't do for a human being, right?
Yeah. All right. Thanks a lot, Tyler.
Awesome.
We'll see you.
Thanks,
we'll see you again soon.
See you again soon. Be well, everybody.
All right. Very cool. We go ahead and let's transition again. Getting better at this. And we did just talk about CMT. So I'm going to thank our other sponsor, Stocks and Commodities Magazine. They won't be speaking today, but they will be providing anybody that wants to take advantage of our extended subscription offer, a 5-month subscription to their magazine. If you spend $300 or more, you'll get a 2-year subscription. So I'm going to come over here and I'm going to get ready to give away a prize. And stretch out those prize giving fingers. Kelly, are you ready?
I'm here. Let's do it.
First, let's decide on a prize.
I think I'm getting better at anticipating when you're going to ask me to log in and give away a prize.
Yeah. Oh, here, I usually do it on this screen so people can read how good our software is while we do it. So this is going to be the second and final prize of its type. And I need you to pick a number that's in the U.S. for this one because it's very, very U.S. specific.
Oh.
Do you care to guess what it is?
I have no idea.
No idea? Okay.
No idea.
This is going to be a tax return of your choosing.
Oh.
Both federal and state by Traders Tax Accounting. And it's a value of about $745. So they're going to go ahead and yeah, right. I could use help with that.
I could use help with that too.
So what I'm going to say here is just so that we don't draw a whole bunch of numbers. We have people all over the place. I'm going to have you give me a number, and I'm going to pick the closest one that is U.S. So give me any number between 1 and, let's see, what number? 11,493.
3,367.
Okay.
I have a feeling it's going to be in the U.S.
Well, it wasn't, but the closest one was one down, and it's in the U.S. So, David D. in the U.S. And guess what kind of an email address he has? You'll never guess.
Gmail.
Gmail address. Everybody has a Gmail address these days. Okay, so David D., congrats, you won. We're going to hook you up with Traders Accounting, and they'll send you some information on how to get that. So really, congratulations on that. We'll be reaching out to you with that. So there you go. Thank you very much for the assist, Kelly. And if you haven't had a chance to read this screen yet, it talks about how our software has been rated #1 in its price category 29 years in a row. I can help you scan find the best trades at the best times, or I should say the good trades, because the best, it refers to there's no other good trades, and there's always good trades. So find good trades, test trading ideas, find and forecast probable price movements, get real-time alerts, commentaries, signal breakdowns, all kinds of stuff. Normally starting at $59 a month. If you're in the US, that's actually $69 a month. If you do an extended trial today, you'll pay for the month of November. We'll give you December and January for free. We'll also give you Unleash the Power of MetaStock, which is a training book to help you get started. We'll give you unlimited access to our awesome support staff. We'll also give you a one-on-one consult. We call it a white glove installation support, where they'll help you make sure everything's installed properly, walk you through the program, ask any questions you have. They do a really, really good job. It's been, we started doing it about 2 or 3 years ago, and people love it. And the big goal that we have is we want you to trade more successfully using our programs. It's really good for business. So whatever we can do to help you with that is going to be beneficial for everybody. So you can sign up for that extended trial if you go to metastock.com/conf-promo. You can go to metastock.com/sales-chat if you have any questions that we haven't answered already, or if you have any questions that you just want to ask, or you can give us a call. If you're in the US, it's 800-882-3040. So again, I want to say thanks for coming. I hope you're enjoying the event. I want to thank all of our great speakers. And let's get on to another one. So the next speaker that we have is the Trader Chick. She's going to be talking to us. Marina, and I had to be careful about the way I said her name because I always have a tendency, Villatoro. I think I nailed it. She's going to be talking to us about kind of the trading that she does. She's a frequent guest at our conferences. I think she's been to 3 or 4 of them now. We love having her. She's so much fun to be and be with. So Marina, how are you doing today?
Hi, I'm doing great. Can you hear me?
I can hear you. And
awesome. Hi, everybody. Hi, Jeffrey. Yes, I love coming here. Thank you.
Absolutely. Let's see. Okay, I just made you the presenter. I'll let you know when you can see me, or when we can see your screen.
Okay,
perfect.
You're able to see my screen. Oops. But you know what? I just lost the question thing here. Hang on a second. Okay. Let me organize the question thing. That's kind of strange.
Well, I know why that happened.
There. Wait, that is so weird.
So you could see the questions, but it might have changed your view a little bit.
No, I can't open my. There we go. There we go. There we go. I think I got. Oh my goodness. Are you guys able to see my presentation?
Yes.
Okay, cool. That was a little bit weird. Okay, well, thank you so much, everybody, for being here. I'm so excited to be here again. And I would love to know, where are you guys coming from? Who am I talking to? So if you guys could just say a quick hello to me in the chat box, I would love that. Let me just organize the chat box so I could see all of you guys. Okay, go for it, guys. I want to see who's here, who is with me, who is still online. And hi, okay. Hi there. You're from Utah. Jeffrey, did you just write that you're from Utah?
Yeah, that was me.
Oh, okay. So I'm looking at 2 different question boxes then.
Yeah. So the one,
okay, I got one here. I got one there. All right, cool. I got it. We were just in Utah. I think I told you, right? Me and my kids went to Utah. It was super fun. Oh my God, it was so fun. We totally fell in love with Utah. My kids went to Utah. We went to Salt Lake and Joe's Canyon, I think it was called, or Joe's Valley.
Nice.
Yeah, so pretty, so pretty. Okay, I got Steve is from Kansas, Raul from New York City. I was raised in New York City. And Trey from North Carolina, David from Flooding, Florida. I'm not sure if that's a joking thing And from Charlotte, North Carolina. Nice. Edmonton. Hi, Jerry. Hi, Michael. Well, I'm so excited to have you guys all here. Thank you so much for taking that time. Hi, Deepak from Chicago. Super, super cool. Okay. Well, let's jump in. Look, I know that you guys have been sitting and listening to many different presentations, and I think that is so great. And I'm excited to be able to share with you. One thing I do want to say is that trading and financial markets, this is not a spectator sport. So even though I will be presenting and I know that you will learn something from my presentation, but if you ask me questions and the more questions you guys ask, the more fun we could have, right? Interactivity. And this way I could also answer your questions because I'm 100% sure that you guys being here, that everybody has something that they have a question about. So there's no such thing as a bad question. A lot of times we can ask a question that we think is a little bit weird, but it's amazing how other people wanted to ask that same question or didn't even realize that that is a question they could ask. So it's helping everybody. Okay. And hi, Manu from Fort Worth. Oh, I went to the stockyards of Fort Worth. That was a really, really fun experience. I loved it. I had so much fun there. Okay, so let's dive in. This is me, Marina, the Trader Chick. And today I want to talk about stuff that we don't really focus on as much, but I believe it is literally the most important part about all financial markets and about trading and everything you need to know. And that's a lot of times busting a lot of the myths. What I believe in the myths as much as is that we have a lot of limiting beliefs and limiting ideas about financial markets, about day trading in general. And I want to bust them because once we get past those, all of a sudden we start to be a lot more freer and be able to move a lot more in our own capabilities. Basically, I want to talk about the lingo. I want to talk about brokers and really just dive into really important stuff like the core about financial markets and how to really succeed. But before we do that, I just want to jump in and give you a quick intro of who I am. And this is me. I am Marina, the Trader Chick. I'm actually coming to you guys from Antigua, Guatemala. I am an expat. I've been living here for over almost 14 years, actually. Before that, I lived in Costa Rica. So I've been an expat for quite some time. Absolutely love it. It's probably one of the greatest decisions of my life. Before I became a day trader, I was actually a fitness instructor. And the main reason I bring this up is because a lot of people believe or have this limiting belief or this myth that they have to be in economics or financial markets, have a financial background, have a math background. None of that is true. Anyone could be a day trader, and that is the coolest thing of all. And I'm trilingual. And the main reason I bring up that I'm trilingual is because one thing I noticed with a lot of trial and error is that the market has its own language and it speaks to us. And I think I was able to understand that because I do speak multiple languages. I was born in the Soviet Union, so my mother tongue is Russian. However, I was raised in the United States since I was really small. And English is my main language, but I didn't really learn English as far as learning a new language. I kind of just learned because I was so young, it was just like a continuation of my learning process. And I mean, within like 3 or 4 months after moving to the United States, I was fluent. However, Spanish, I did learn in my later years. And there's a whole process when you learn a new language in your later years. You have to commit, you have to be disciplined, you have to practice, but it's also this process, right? Like you would never walk into a room with all Spanish speakers and pretend to jump into the conversation when you can't even say, hola, mi nombre es Marina, right? You need to learn the very, very beginnings, the basics. And that's understandable when you're learning a new language. However, what I'm noticing a lot, especially in the financial markets, because there's absolutely no barrier to entry. People are literally just jumping into these hardcore conversations without even understanding how to speak the language. And that's what I really want to talk to you guys about is simplifying that so that you can understand what's going on. Basically, what's happening with the financial markets is, oh, I have a little bit of money. Let me go and, put it in. I'll be rich. I mean, if it was that easy, we'd all be rich, right? That's why so many people fail. So I want to be able to get past that and for us to really understand. And the cool thing about day trading is that you could do it from anywhere. That's the coolest thing of all. And before COVID, I was actually doing quite a lot of in-person shows and presentations. I don't know if anybody has ever been to like the Money Show, Traders Expo. And then once COVID hit, obviously everything went online. And I now prefer it, to be honest with you. I get to reach a lot more people from a lot more parts of the world, right? And that's the coolest thing today is our reach, that we can do it from everywhere. So before I jump into the actual presentation, I have a worksheet for you, completely free, that you could follow along with a presentation. So make sure you go to makingoфадaytrader.com. Go to makingoфадaytrader.com. You can get your presentation, this whole thing, the worksheet completely for free. Go to makingoфадaytrader.com, and this way you'll be able to follow along and you'll have it. It's like my own cheat sheet for trading. All right, so let's dive in. Before anything, first and foremost, what in the world is day trading and why is it not investing? I actually always say we day trade to invest. Why? First of all, unlike investing, you do not want to diversify with day trading. You do not want to diversify in day trading. If you guys could get anything out of this presentation, let's begin here. Okay, why? Here's a good example. Imagine your child coming up to you and saying, hey, mama, I want to play a musical instrument. And you're like, oh, super. Which one? I want to play the guitar, the flute, the drums, and the piano. And you look at your child and you're like, you know what? Maybe it's a good idea to just focus on the one so that you could really master that particular one before you go and learn the other instruments, right? Financial markets, that is what we do. We focus on instruments. You cannot be doing many different instruments because they are so different, okay? And what I do recommend people who do want to learn how to learn different instruments to trade and be in, first master the one. Think of Liberace. I don't care if you love him, hate him, all whatever you're thinking of him. The point is the man mastered the piano. He was brilliant at it, right? I'm sure if he picked up a guitar, he'd probably be pretty great at that as well. However, he knew what he loved the most and what he mastered. It's the same thing with the financial markets. Master the one, and then you can really grow and make money. And a lot of times, a lot of people come to me and they're like, okay, I want to trade this, 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 and this. And I'm like, all right, let's focus on just the one. And then once you get it, you'll be able to move on. And a lot of times they just don't because they are making a lot of money from that particular one. Other part, investors really care about the companies they are investing in, right? For instance, if you are investing, let's say in Apple, you care about their iPhone 14, iPhone 15, about their smart cars or whatever, right? And that's okay for you to be able to see the market go up and down and through the growing pains. But when you're day trading, we don't care at all about their iPhone 15 because that's in the future. We're day trading for today, right now. So what we're looking at is technical analysis, and we don't care if the market is going up or if it's going down because we make money from either end, okay? That's the most important thing about understanding the difference between investing and day trading. Now, let's bust these myths about day trading. First and foremost, day trading is gambling. Look, guys, if you want to drive a car, if you want to learn how to drive a car and you jump into a car, you have no idea where anything is and miraculously turn on the ignition and just rev it up and ends up on a highway, and then you get completely demolished because you don't know how to stop properly, you don't know how to turn lanes or even anything. What happens? You're going to get into a massive accident. Does that mean that driving is really risky and dangerous? Well, if you've never learned how to drive, it does. However, with trading, it's the exact same thing. Like I said, there's no barrier to entry. So people just jump into the markets having absolutely no idea, having zero strategy, not understanding if the market is going up, going down, nothing, and they're losing money. And of course, 95% of these people who don't put in that effort, that don't learn, are going to say, oh, it's too risky, it's gambling. But it's not. If you are learning, if you are giving that chance. My son just learned how to drive a car. First of all, me and my husband, we first taught him. Then we hired a driver. He had driver's ed. Then he had to take a test before taking before getting the license. There's a process. This is the exact same thing for trading, right? But a lot of people, they don't go through that process. They just get right into the market, lose their money because they have absolutely no idea what's going on, and then say that it's risky and gambling. The other myth is that you need $25,000 to get started. That is such a myth. Why? First of all, the only time you need $25,000 is if you're going to be doing equities and you're going to open up a margin account. I am going to talk about margin accounts a little bit more in a little bit further on. But here's the one thing you need to know about margin accounts. Two things you should know. One, they are not obligatory. You do not need one. And two, margin accounts are like a loan sharking. Okay. And I will explain why. You can literally start with $500, $1,000, depending on your market. You do not need $25,000. Like I said before, a big myth is that you have to have a math or a financial background. No way. I don't ever even look at the numbers when I trade. I don't care because that's not what I'm looking at. I'm looking at the technical analysis. And if I need to know how much I actually made or lost, I get a calculator. You don't need to know anything about math at all. The other thing is that it's too stressful and too chaotic. Well, if you've got this going on, for sure, this is so unsustainable. This is actually impossible. There is no human being that could watch all these charts at once. It's not a possibility, right? So whenever we see people doing this, it's first of all, it's a show. It's not real because think of it like this. NASA hires hundreds of people to look at all the different charts and all the different things going on. Why would NASA be extra special? And why do people think that they could do this when they're trading? It's not possible, right? So don't even go there. I personally trade with one chart. One chart, that's all I have. Simplify it. Make it easy on yourself. And the other big, huge myth is that you need to buy softwares, indicators, algorithms. No, you know what that is? It's called the shiny object syndrome. It's a real thing, guys. And I hear it all the time. Well, if I just buy this, I will do better. Oh, I just bought this, but I'm not doing any better. You know what? Let me break this myth to you. The only people making money from these software indicators and algorithms are the ones selling the software indicators and algorithms. You do not need that. Yes, you do need a platform because you cannot be a Formula One driver in a minivan. So you need to have the proper vehicle, which is usually a strong charting platform like Metastocks. Metastocks is a fantastic platform. And guess what? They have universal indicators that you can access. That's part of the service. Okay, you have everything you need right there. You do not need to spend extra money on top of that. Okay, research and news. Look, guys, I call this the telenovelas and the melodramas of the world. Buy on the rumor, sell on the news is really how a lot of it works. However, the majority of the times it's just all of these, hot-headed experts spewing their own agenda. You guys do not need that. What you do need is to avoid this. You could do your own market research and you need to understand the technicals, right? Technical analysis is the key to professional, successful trading. And I will get a little bit more into exactly what that is in a few minutes. But first, I want to break these myths. This is such a huge myth. Non-stop being in and out of trades. This is called trigger happiness, and it is a thing. And I would say that pretty much 100% of the people that first begin have gone through this. I personally have done it, and I pretty much know everybody else who has done it, because we have this misconception that we need to be in and out of trades all the time. When I first began, I took like 60 trades within 2 hours. So ludicrous. I mean, just the commissions alone was making me broke. This is the thing, guys. Real pro traders, I like to compare them to big game hunters. Why? I do not condone hunting, but it's the best analogy I can give. When a big game hunter goes out to hunt for the day, do they shoot at every little rat and little cockroach that runs in front of them? No. They patiently sit and wait for the big game. Professional traders, we sit and we wait for the high probability trades. And the hardest thing to do is the doing nothing. And a lot of people think like, oh, when there's no trades, I'm doing nothing, I'm not doing anything. But you're sitting there and you are being patient and disciplined and waiting for the correct trade to set up. That's the key. Okay. I always say the most radical way to trade is conservatively. Being a conservative trader is what is going to be sustainable. We hear about all these huge aggressive moves, but guess what? A lot of times we don't hear about their huge aggressive losses. Okay. Small profits daily bring you big profits yearly. This is the sustainability. And FOMAT. How many of you guys go through FOMAT? Or FOMO, as a lot of people know, fear of missing out. I coined the term FOMAT, fear of missing a trade. This is another really huge misconception. Oh my goodness, I see a trade. I didn't have a chance to get into it right when I saw it. You start to chase the trade. It becomes super emotional. You end up losing a lot of money. Here's the thing, guys. Here's the secret. There is always another trade coming. If you miss that one, don't worry about it. There are hundreds of others coming. There's always another trade coming. So if you miss a trade or you fear that you missed a trade, that is an emotional state of mind. And that is usually a state of mind that will bring you to losses. And you don't want to be there. Okay. So let's talk about what to trade. What to trade. Because as I brought up in the beginning, one instrument, right? We want to focus on the one instrument. So let's talk about what to trade. There are technically 5 markets out there. Okay. There's 5 markets out there. We all know about FOREX, right? We've all heard about FOREX. FOREX is foreign exchange, right? It's currencies. And normally the way it works is that you trade pairs, right? You put 2 pairs and you see how they work. The majority of FOREX professional traders probably only have 1 or 2 pairs they really focus on. Because if you're focusing on too many pairs, you're again too scattered, right? Even though FOREX is a market, you want to really get deep into it and maybe only take 1 or 2 pairs at most so that you could really, really master it. Equities. I love this. Whenever I ask people, what do you trade? Oh, I trade stocks. What does that mean? There are over 5,000 stocks in the US market alone. 5,000. So what are you trading? All of them? So you need to break that down. You could break it down with sectors, okay? Sectors, pharmaceuticals, entertainment, technology, whatever. But when you focus on that, again, you're already starting to niche it down and you're able to really focus. Or if you want to go for the big caps, the small caps, okay, penny stocks. I'm not a fan of penny stocks. I totally believe they're one of the most manipulated markets out there. But if you're going to do it, then go full in on it, right? Don't just like maybe a scatter here or there. Really focus. And honestly, guys, there are some people that are killing it out there with just individual stocks. Amazon, Tesla, Facebook, Microsoft, okay? So again, the more focused you are, the more laser focused you are, the better you will be. Futures. That's another thing. When I hear people say, oh, I trade futures. What does that mean? Are you trading wheat and are you also trading crude? Because they are such different markets that you can't have the same strategy. You can't watch them at the same time, right? And there's also an entire sector of futures that are the indexes, right? you have the ES, you have the NASDAQ, you have the Russell. So again, like I personally only trade the E-minis, which is the ES, which is the S&P 500 on the futures market, right? It's an amazing market. It's incredibly volatile and moves super well, but I mastered it because that's what I focus on. That's what I've been watching. So you really, that's where you become a successful trader. The more you master something. Options, great. What are you doing with the options? Which markets are you focusing on? Again, you really need to niche it down. Crypto, that's another thing. Oh, I trade crypto. There's over 6,000 projects in altcoins. And when you're saying crypto and then say Bitcoin, it's kind of like saying, oh, I trade equities and I trade Amazon. Amazon is one equity of, of the whole market. Bitcoin is one coin out of crypto altogether, okay? So again, find out what are you really, really into, okay? And that's where you will start to really master. Okay. Now, let's talk about brokers and margin accounts because this is huge. I get so many people that contact me. Okay, I just opened up a brokerage account. I'm ready to trade. The broker account should be one of the last things that you should be doing. Why? First of all, what are you trading? So if you're going to be trading crypto, do you want to open up an Ameritrade account? They don't deal with crypto. What if you want to do futures? Are you going to open up a Kraken account? Kraken is crypto. You want to be with a futures broker. So once you understand what you want to do, then you can look for the broker, because if you're going to be going with a broker that specializes in what you're doing, you're first of all going to get a much better broker. Secondly, you're also going to get much better commissions. You can be eaten alive with commissions, okay? So the more you really focus in, the better you will be, because then the commissions will be lower. I trade futures, so I have a broker that specializes in futures. So I pay a lot less than if I was to go with a broker that dabbles with futures, but is, more specialized in equities. I have to pay a much higher broker fee for that. Now, let's talk about margin accounts, because this is huge. Margin accounts are loan sharking. This is not a feature. This is not a perk, guys. It's not. If your broker is going to say to you, all right, I'm going to give you access to a margin account, it is not a good thing. Why? What they're telling you is, if you want to buy whatever it is, let's say equities, and you don't have any more money, we are lending you this amount of money, let's say $10,000, that you can buy on margin. But guess what? You have to pay us back, and with interest. And if you lose it, guess what? We're going after your house. We're going after all this stuff. You do not need a margins account. You do not. It is not mandatory. It's not obligatory. And you can say to the broker, I don't want it. Guys, don't trade more than you have. Okay? It's hard enough already to be able to lose money that you have. You don't want to be even more in debt. And that's exactly what a margin account is. All right. Back to understanding commissions. Like I said before, if you are going to be trading crypto, go with a strong crypto exchange. Kraken, Coinbase, Binance, right? You don't want to be with Tastyworks. I know that they also permit you to do some crypto. They're going to be charging you a much higher fee. The other thing is, we need feed. What is feed? Feed is literally the gas of our charts. If you are going to be a professional trader, you cannot have delayed feed, right? You need to be in the moment right there. And a lot of times it is a little bit extra to pay for it. It could be anywhere between $4 to $12 per month, depending on the software that you are using. But you need to be on top of that, okay? Super, super important. And I'm going to go back to platforms. You cannot be without one, okay? Like, for instance, Metastock, that's exactly what they do. They offer all these amazing services. This is what it's about. You need a platform, and good, strong platforms, that's the most important thing. All right, let's talk about day trading lingo. Let's go back to my analogy about me entering a room when I don't have a single word in Spanish and wanting to make conversation with 6 fluent native Spanish speakers who can't speak a word of English. Do you think I'm going to get anywhere with them, especially if they're in a really, philosophical conversation? Chances are absolutely not. Yet, that's what people are doing every single day, jumping into the market, and they don't even understand the basic lingo. A lot of people are going along when they wanted to short and then wondering why they're getting stopped out because they don't have any idea what any of that means. So we need to get the lingo. And I guarantee you, if you guys have the lingo down, it will completely move you to that next level. So let's just go over the basic words, the basics, because that alone will be amazing. First of all, intraday trading. What does that mean? Day trading, what is that? It literally means you are in and out of positions on a daily basis. That's it. If yours overnight, you're not day trading anymore. You might be swing trading. You might be long term. Why does that matter? Because if you're going to be day trading, do you want to be looking at a chart that's telling you 5 days? If you're going to be swing trading, do you really want to be looking at a chart that's 1 minute? So you have to understand what you are doing, and you have to have the proportion of the time frame so that you are able to trade properly. Bull market going up. That's really what it is. A market trending up. Bear market going down. Market trending down. That's it. There are 3 trends in the market. 3. Upward trend, downward trend, and the sideways trend. The sideways trend is probably the most important. Why? Because this is usually where the majority of the traders end up losing all of their profits and most likely even their savings, because this is that exhaustion pattern, that chop, the indecision, the channeling market. You need to understand it. All right, guys, this is so important for being a professional trader. You need to understand what a profit target is and what a risk management is. Why? Because we are ego-driven beings. When you are going for, let's say, a specific target and you're seeing that the market is going in your direction, and then you remove your target profit because your ego is telling you it's going to continue, and then of course it turns on you, and guess what? Greed always loses. Don't get greedy. Put in your profit target. Get that money out. If you want to go for a split target, great. But you need to have a profit target. Risk management, what is that? That is your stop. That is literally you telling the market, this is all I am willing to risk on this particular trade. You cannot do a mental stop, okay? Because it is as stupid and ludicrous as putting a mental seatbelt on your child and thinking you're going to be able to save them in a car crash, okay? You need to put in that risk management, and you need to commit to it. Again, I'm going to go back to the charts. Holy grail for traders. This is something you guys have to understand. You need to have a charting software. Indicators. Again, good charting softwares, they all give you universal indicators, and the majority of times you don't need more than that. You are okay with just those indicators. Learn how to use those indicators. I personally use 2 indicators. This is my chart right here. This is it. I use 2 indicators. I use the EMA, which is the exponential moving average, and I use the MACDs. I live for the MACDs. That is my holy grail of trading. Now, a lot of times I get people like, oh, I have this indicator and that indicator. Oh, and how come you don't use this one and that one? I'm like, they're like, oh, but this guru, this YouTuber said to use that and that. I'm like, that's great. But are they working for you? When I first began, I had 10 indicators and 3 monitors. I was in constant analysis paralysis to the point where I was always stressed, losing money, until I ended up losing a ton of money. And then when I came back, I completely cleared my chart altogether. I donated pretty much my 2 monitors, and I started to put each indicator in one at a time to realize that a lot of the indicators I had didn't do me any good. If anything, they just added a lot of stress to my way of trading. So you guys need to do that as well. It's really, really important. Okay, so now we're going to talk about the technical analysis, right? We're going to get more into understanding. like I mentioned earlier, the trending markets, right? You need to understand, obviously, the upward trend and the downward trend, they're pretty self-explanatory, but understanding that sideways trend will completely change everything that you do. Now, let's talk about buying, going long. What is buying and going long? To make it super simple, you are literally entering at a lower price point, exiting at a higher price point. That's it. Don't overthink that one. The opposite of that is selling, going short. What does that mean? It literally means you are entering at a higher price point, exiting at a lower price point, and you're taking the profit in between. Okay? This is technical analysis. And if you're sitting here saying, oh, but I'll never short, I don't ever do that, I only go long, you are cutting yourself off from ton of profit, because the majority of day traders make more money on the shorts than they do on the longs. Okay. And if you're going to go even more into this emotional baggage stuff, oh, but when you're shorting, that means somebody is losing. Who are those somebodies? We don't care. Look, the technical analysis is saying you need to enter a short because the market is about to go further. Take it up, go with it. Make that money, and that's all. You are here to work, and that's all you need to focus on. All right. So let's talk about market entry versus a limit order. Why is this important? So what is a market entry? Basically, this is what goes on with a market entry. Oh, wait, the market is looking good. Oh my gosh, this is a strong candle. I'm going in, right? So what are you telling the market? That you really don't know what's going on. You don't have a strategy, and the market penalizes you for that. It penalizes you with slippage. I don't know if any of you guys have ever heard of that term. Slippage literally means when you enter, let's say you want to enter a certain stock at $100, immediately you will be entered at like 101. So you already lost that dollar, right? Sometimes it could be up to 25% slippage. Obviously not with $100, it won't be $25 difference. But if you only want to make, 1 point, you would already lose 25% of it. You're telling the market that you really don't have any idea. So when you're putting in a limit order, you're actually telling the market, this is where I want to enter. And if I don't get filled there, that's okay. But I control where I'm going to enter the market. That is also telling the market that you know what you're doing. Okay, super important. The same with a stop limit. You can't just, oh my gosh, the market is going, it's out of control. Your ego is always going to be telling you that it's going to turn around. You need to tell the market where you want to get out, where that risk management is, and that's the stop limit. You need to have that in place. You need to be in control of what you are doing. Technical analysis. Guys, this is the most important thing of all. It's literally like getting into a car, driving, and not knowing when there's a red light, when there's a yield, when there's 30 miles per hour versus 60 miles per hour. That's the technical analysis of when you're driving, right? Otherwise, you just be all chaotic all over the place and everybody will be crashing into one another. Technical analysis is our green lights, our red lights, our yields, our slowdowns, all of that. You need to understand that. And the coolest part about the technical analysis is that it's really simple to understand, and you could do it on any instrument, any price action. All right, so let's dig into it. First and foremost, areas, so important. What are areas? Resistance and support areas. If you don't know what those areas are, stop trading live right now. You literally do not understand how to accelerate or brake in your car. That's how important it is. What is a resistance area? It is literally the ceiling of the market. This is when the market's been going up and all of a sudden starting to hit this ceiling. Okay, and a lot of times the market will revisit that area, and you want to be completely in control of it and not enter where you already see the resistance area. Because when you see the resistance area, that means there is a ceiling and the market can hit it over and over and over again. You have to wait until it changes that direction. What is a support area? It is the floor of the market. All right, this is where the market hits over and over and over again, and you have to understand it and you have to respect it. Okay, it's literally, I call this like the seatbelts of trading, right? It's like a Formula One driver. They know that 25% of Formula One drivers during racing season will either have a car accident or a fatality. Will they ever just get to their car and hop in and go? No. They have their helmet on, they have their fireproof uniform on, and they put on seatbelts, probably multiple. This is us, support resistance areas. We need to draw them in. You cannot have mental support and resistance areas. You need to have them drawn in, because when you're in the live market, like Formula One, it's interesting because your adrenaline levels are probably as high when your money is in there. And you're going to be looking to the left and wondering, am I making the right decision? Because trading is all about making the right decision. And you don't have your support and resistance area and you're stopped out, and all you had to do was just draw that in, you would be saving yourself so much money. Reversal patterns. These are the telltale signs of the market, and they are free and they are so simple. What are reversal patterns? The double tops, triple tops, double bottoms, triple bottoms, head and shoulders. This is the market screaming at you, telling you, stop trading. There is a very high potential that the market is going to reverse, and for sure it is losing its steam. So when you understand this, you can work with the market. Okay, divergence. Divergence is probably my absolute favorite thing to use. So simple, so simple. Price action. You're seeing that the price action is moving in one direction. Meanwhile, my MACDs are telling me that it's going in the opposite direction. What is that telling me? It's telling me that the market is losing its strength. You never ever want to be putting your money into a market that is losing its strength, right? You always want to have that edge. And that edge is you usually want to get in when the market is strong. And that means they're both the MACDs and the price action is going in the same direction. All right, so let's put all of this together. Like I mentioned earlier, if you have any questions, please let me know. But as I mentioned earlier, you get my free cheat sheet right here of the presentation. Go to makingofadaytrader.com. Makingofadaytrader.com. Go here right now. Now, I want to talk about breaking out of areas. Breakouts. All right, guys, what is a breakout? If you do not have your resistance or support areas drawn in, you could miss out on the most powerful trades out there. Okay, so what is that? Basically, it's when when the market is going in one direction, and then there's this massive slowdown, which is usually easy to understand when you draw in your either support or resistance area, depending where you are, and then it breaks through that area and continues in the same direction. Okay, so this is how we are able to see when these trades happen, and that is all through technical analysis. Okay, that is understanding where there's that resistance area, where there's that strength with the MACDs, where you could enter the market. Okay, so remember, makingofadaytrader.com. I have all of this for you. It's like the cheat sheet of trading. And I just want to go in really quickly and show you what I do. Okay, so for instance, right here, this is my chart right here. This is a perfect example of a resistance area that is broken through. Right now, the market is not really moving because it's right after the market's closed. Although the E-minis, they get a little bit slower after hours. But I would be setting myself up for a breakout trade. The market's been going up absolutely beautifully, right? And then we have a very, very strong resistance area. As a matter of fact, we have a really strong channel here, right? And I would be looking to see if it transitions into a new trend, or it completely goes out and breaks through entirely. This is how I do it. Guys, these are free. Everything, drawing tools, indicators, these are free. You don't have to put in extra money. And every single platform offers you drawing tools. Okay. All right, so let's continue on. This is how I apply all of my technical analysis to the market to be able to really understand everything that is going on. Because here's the thing, guys. We have absolutely everything we need to take action. We have everything we need to take action. But the real question is, how do you know you're doing it right? How do you know you're doing it right? Who is there to help you understand if you're doing it right? Look, we can watch all the YouTube channels and videos forever. We could participate in all these presentations. We could read a bunch of books, listen to podcasts. But at the end of the day, how do you know you're doing it right? And all of this is really great. But the real question is, how do I really get started? And this isn't from beginners only. This is seasoned traders who have been trading for ages and are still losing money, and that are constantly asking, how do I turn this around? How do I become consistently profitable? So a lot of times, guys, it literally is just lacking understanding of the basics. I find that so many people are putting in their windows before they have their walls built in, because they don't have a strategy. They don't understand what is happening directly in the market. And once you can read the market, understand reversal patterns, understand when there's a resistance area, support areas, what the market is doing, and that is literally the basics, right? It's like literally getting into a car and not having any idea where is the brake, where is the clutch, how do you shift gears? And today, because we've done this so much, it's so automatic for us that we forget that we actually learned this at one point. We didn't know this either. And it's the same thing with day trading. You can learn all of this and have that foundation right there for you to be able to move and take it to that next level of truly being successful, right? You cannot imagine somebody got into the car and you're like, all right, put on your seatbelt, it's going to save your life. But they have never been in a car. They have no idea what you're talking about. And there they are stressing out so much, like, oh my goodness, I know I have to put on the seatbelt, it's going to save my life, but I don't know what a seatbelt is. And that's a lot of times what people are doing when they're entering the markets. They have no idea what's really happening. And that's why they become stressed and say that it's gambling and that it's risky. But all you have to do is just learn the basics, learn a foundation, and you'll be able to get it. And this was my sad truth for years. And I spent over $20,000 on my own trainings, literally. So what I was doing was, and I actually see the majority of trading academies and schools that they do this, right? Imagine, again, we're going to go back to the music instrument. Imagine your child says they want to play the flute and they arrive to the academy. And instead of learning how to hold the flute, how to blow into the flute, they are literally thrown into the symphonic pit and are expected to keep up with the professional musicians. They're going to be freaked out. They're not going to be able to keep up with it. They're going to totally stress out and most likely not want to come back. And that's what happens a lot of times, right? And that's exactly what happened to me. And I struggled for years. Whenever I asked, can somebody please explain to me, what is the divergence? Can somebody explain to me, what is a reversal pattern? I was either ignored or treated as if though I was born with that information. And I wasn't, right? And that's what happened. I was in a chat room. Somebody was like, oh, there's a great trade. And I had no idea why. But at this point, I was struggling so long that I was like, okay, if they're seeing it, that must be true. I got in and I ended up losing all that money because I had no idea what I was doing. I was just following somebody else. And it turns out that a lot of these moderators they're not even traders. They're just hired to moderate the room and they don't even know what they're saying. And I ended up losing all this money and I ended up quitting. I totally quit because at this point I was just losing money. I was so stressed out. I wasn't really sure what I was doing. And I quit. But here's the reality, guys. And I know for a fact that everybody in this room has had this, that we are all bit by the trading bug. We are bit by the trading bug. Why? Because it never ever stops itching, right? And the reason why is because deep down inside, we know that we could do this. We know that we could do this. Other people are doing it. That means it is a doable thing. We know we could do this. And that's exactly what happened to me. I knew that I could do this. So I came back. And I decided to get back into the basics. I literally stripped my charts and just went to the bare naked charts and slowly put in 2 indicators. And I just studied the basics for years. And then like a couple years back, one of my students says to me, they're like, Marina, your teaching strategy is very similar to Coach John Wooden. And I'm like, Coach John Wooden, who's that? I've never heard of this guy before. So of course I go and look him up. And this guy was legendary. I don't think anybody has lived up to his dynasty. He was a coach for basketball. And his entire philosophy and teaching strategy was, when in doubt, get back to the basics. And this man, I mean, he is incredible. His teams have won 88 championships in a row, 10 NCAAs. I mean, this man is a legend. To this day, he trained the best of the best, okay? But every time they started a new season with training, he would always go back to the basics. How to tie your shoe, how to roll up your sock, how to dribble the ball. Why? Because it doesn't matter what you know. If your shoe is untied and you're out on that court and your shoe falls off and you sprain your ankle, boom, you are out for the rest of the season. It doesn't matter all the algorithms and all of this that you know, because it's useless if you don't have your walls in place, okay? You cannot put in windows if you don't have your walls in place. So today, for you guys, only for you guys, I have a super special offer for participants only. It is my introductory course, Bootcamp for Day Trading. You could do this on any apparatus, iPads, tablets, phones, desktops, laptops, and all of this one-time price of $97. You could go right here, bootcampfordaytrading.com. You could go and put it in, bootcampfordaytrading.com right now, and you'll see everything that is part of what you are getting. So what can you get today? I just want to feel this out. What do you guys get for today for $97 that is going to bring you a similar return on investment? Do you guys like to golf? Because I live in Guatemala and there's a golf course here, and $97 isn't even enough for one person in Guatemala. I can't imagine what it is in the States or other parts of the world. Okay, how about taking your friends out or family out to dinner? Today, when we first moved to Guatemala 13 years ago, for $25, me and my husband could go out and have an amazing dinner with wine. We went out last night to a really beautiful restaurant, and it was $200. It wasn't even $97 per person anymore. Guys, $97 today does not get you much, and especially what I'm offering here for bootcampfordaytrading.com. So let me break it down for you. Okay, first and foremost, we're going to go through the simplification of day trading, breaking it down really easily. And I know that a lot of people really struggle with their platforms when they first get it. And a lot of people are like trying to figure out their platforms while putting their money in the live market and losing money. I have a 30-minute tutorial right there so that we get past that. It doesn't matter which platform you're going to be on, so that we can get to the good stuff, and that is the trading. Then we go on to the market anatomy, to really understanding the technical analysis, dissecting the markets, uptrends, sideways trends, downward trend, all of that, the reversals, divergences. We really, really break it down and really go over it. Then I get into the defensive zone strategies, understanding those reversal patterns, spotting those areas, support and resistance areas, and divergences, because this is the key, guys. This is what's going to totally take you to that next level. And how do you master the breakout if you don't understand how the areas are? So we're going to be talking about that, and how to avoid the fake out breakouts, because that is huge, and you could totally save a lot of money by avoiding the fake out breakouts and knowing when the breakout happens. Plus, you will get unlimited access to the curriculum. All of this is valued at $1,600, but today for you guys it's $97. $97, you get all of this. I have students from all over the world. So here's what some of them are saying. Just finished the boot camp. Best money I ever spent. You are the only mentor that truly checks all of the work. I am so enjoying your boot camp. I'm learning every day. But let me share something with you guys. Remember I asked you, how do you know you're doing it right? So having a mentor, a coach is life-changing. And that is exactly what I am here to do. I am offering inside that $97, no extra fee, one entire month of one-on-one feedback, mentorship, coaching with me, unlimited. That is included in that one-time fee because this can be the thing that will take you to the top. And I have an extra special bonus for you guys. I have a live trade chat room where it's me. I do not hire any moderators, any administrators. It's me. We go over everything that is in the course, plus what we do in the coaching live in the live market, taking the trades, and I'm giving you 30 days free membership as well. All of this is valued at $2,600. You guys get it for $97. Go here right now, bootcamp for daytrading.com. Bootcamp for daytrading.com. Hang on a second here. I have some questions. Oops. Why is this not working? Oops, there we go. Oh, why is this not working for me? Oh, here we go. Okay, how are they generating? This is not for me, I don't think. Okay. AFD, all your 20,000 spent on tradings with training offer the most help to you. Led the engagement. Lisa, believe it or not, it was this one guy who was like a guest speaker who kind of woke me up from all the stuff and was really realistic. And he focused on the basics. And he was just a guest speaker that changed everything. Think of my life story program interesting, but I believe I am more interested in short-term trading position. That's what I do, Lisa. It is 100% day trading. So short-term, I actually am a scalper, meaning that my trades are between 30 seconds to 3 minutes altogether. Okay, what is bootcamp? Even yesterday I asked, but my question was not answered. Dinesh, I don't know what yesterday was. I didn't.
Oh, I can help you. I can help you with this because there's a little bit of background that can help you with.
Oh, okay.
So yesterday, I think Dinesh is from India, but I could be wrong on that. But he was unfamiliar with what the term is for boot camp or what boot camp meant. And so I tried to explain to him that I went to boot camp and it was where the military trains you to be a soldier, right? And so in the context of boot camp, what you're doing is training him to be a better trader. But that's what I was trying to explain to him. And he.
Oh, okay, gotcha. Okay, Dinesh. So boot camp for what I teach is I get down to the basics, right? Even with military training, you can't go out into battle until you go through the boot camp, which is teaching you the basics, right? And it's one step layered on top of the other. So are you guys able to open because I just put in bootcamp for daytrading.com and it should be able to open to this. This is what you guys will see when you put in bootcamp for daytrading.com. Can you guys go and open bootcamp for daytrading.com? Let me know if you are able to open that up. That's interesting.
See, that isn't going to address for you. But if you give me the long address, I think we can definitely get something that will work.
Okay. Well, hang on just one second. Let me. I don't understand
it
why
might be
it's not
our firewall or something. I don't know. Can anybody else get to bootcamp for daytrading.com? Oh, it's working.
My gosh.
It is working.
Is it working?
Yeah.
It's working for you? Well, it's not working in my incognito window. I don't know why. It should be. Okay, there it is. So the long format is here. I'll put it here for you guys, but that's it right there. So it's a little bit long. That's why. Okay, you got it.
Yeah, it is actually working. I'm gonna so the other link will work. You can just click on it here. I'm gonna go ahead and post that again with the www. Maybe that'll help too. But yeah, it's redirecting properly.
Okay, cool. Yeah, I don't know why, but thank you for letting me know. Okay, guys. So go here, bootcampfordaytrading.com. Let me just go over. Hang on one second here. Oops. Okay, so here we are. Here's again what you guys get for that $97. Everything in the course. You'll get 30 days one-on-one mentorship. That alone is priceless. I am going to be here looking at your charts. You could ask me all those questions. 30 days live in the chat room. Honestly, guys, the reality is this is worth less than a trade that you do in one day, right? 97 bucks isn't even like the price of a trade. And you will get 10x on your return of your investment for that $97. You'll be able to take your friends out to 100 of these dinners just from that. But the thing is, guys, because of my mentorship, I could only take 25 students. Okay, because I really, really want to focus on you guys specifically. So I only have 25 spaces. So again, go to bootcampfortrading.com, bootcampfordaytrading.com. Okay, let me see here. Would I still benefit from the principles taught? So yes, absolutely, Adam. Bootcamp for day trading, it's all about understanding how to read the markets. And what I mentioned earlier, Adam, was it's understanding, for instance, you're a swing trader. That means you do not need to look at a 1-minute chart. You need to look at a 1-day chart, 3-day chart, 5-day chart. It's about the time frame. So yes, absolutely. This is something that you will benefit from 100%. And and you'll be working with me. So we will be able to talk about that as well, because I also swing trade as well. So I understand the concept, but it's about understanding what the charts are telling you, the market, what it's doing for you right there. You are applying for the US visa. Not really sure what that means. What is recommended?
Good luck.
Okay, it's a different question. It's funny because I'm actually applying for a Spain visa right now. We're planning on moving to Spain in 2 months. Tina, what is recommended starting capital? It depends on the market that you're going to be working with, but usually I recommend $1,000 to $2,000 is a really good place to start. All right, guys, let me know if there's any other questions, and I'm happy to help. And remember, go to bootcampfordaytrading.com. You should be able to access it. And I'm really, really excited to have been here with you guys. Thank you so much, Jeffrey, for having me and for allowing me to participate here.
Thanks for coming, Marina. We appreciate it. And so one last time, the address is bootcampfordaytrading.com. Oh, Tina, one real question. Are you still there? I think we've lost her. Oh, well. You can read. Oh, are you there? We had a question on whether it would work well for options.
Yes, absolutely.
Okay, perfect.
Absolutely.
Very good.
Thank you, everybody, so much.
Thank you. I appreciate it. We'll see you again soon. Thanks, Marina.
Bye.
Okay. Oh, that's a cute. Okay, let me go ahead and make me the presenter real quick. We'll go ahead and show my screen, and we'll go here. Okay. And my video is showing. All right. Let's talk about CMT. We wanted to say thank you to CMT. Tyler gave a great talk about the CMT Association, how it works, what it's designed to do, the accreditation program. We appreciate the sponsorship. They've been helping us for about a year with the marketing and getting people here. Great partners, easy to work with. If you're interested in CMT and a CMT designation, go to cmtassociation.org. Thank you, Fu. Thank you, Tina. Marina, appreciate that. Kelly, would you like to give away a prize?
Always.
All right, very cool. Well, let's go ahead and give away, let's see. We're giving away a lot of prizes today. Well, let's give away, let's see, I've got a Melissa Armo market review. So we had Melissa, she came in and spoke. And this is a weekly letter reviewing the market in a video link. So every week she's going to send you, for a month, she's going to send you her market picks, her market review, and this comes out once a week. I also believe it includes a list of, it does include a list of economic reports for the week, looks at where markets are gapping. If you remember, she was really, really into gap trading, and it's going to be looking at where those gaps are and kind of giving you kind of some recommendations for the week. Normally it's $50. It's going to be free for one lucky winner. And let's go ahead and draw a number, shall we, Kelly?
Yeah, let's go higher this time. We're gonna go. Well, how high can I go?
Well, you can go to 11,493.
We're gonna go for 10,987.
I just, every time I see that and it comes up so fast, I remember how many conferences I spent going just trying to get to the right number. So the winner is in the USA again. Again, they have a Gmail address, but it's Ira E. So Ira E, you've won that market report for a month, $50 dollar value. We're gonna have Marina. We're gonna have her reach out to you, Melissa, not Marina. Melissa reach out to you with that information on how to claim that prize. And congratulations for winning. There you go. All right, and then we are MetaStock. I hope you've been enjoying today's session and the session all week. I think it's been going amazing. If you forgot, I'd like to remind you, 29 years in a row, MetaStock's been rated #1 in its price category by the readers of Stocks and Commodities magazine. Helps you scan markets, test trading ideas, forecast probable price movements, get real-time alerts, commentary, signals. $59 a month is where the pricing starts. $69 if you're here in the US. If you pay for November, Kelly is feeling so generous that he's going to give you December and January for free. He'll be running this all the way through the holidays into February. You'll be able to test and scan and figure out, really, is MetaStock going to help me make better trades? And if it is, you're going to gladly pay for it. So let's go ahead and get that ball started here. We're going to do our best to make sure it works well for you by giving you unlimited access to our support, giving you our Unleash the Power of MetaStock trainings, and even sitting you down with one of our technicians and doing what we call a white glove install, where they make sure everything's installed. They help you answer questions that you've got and just make sure that you know how you're doing. So all that stuff's available here as part of the conference this week. It is literally, and I know I kind of take it with some levity, but I wouldn't trade without MetaStock. I love the scanning. It's been so helpful for me personally. I want you to try it. So metastock.com/conf promo. You can call us at 800-882-3040, or you can reach out to us at metastock.com/sales chat. All of those are good ways to get set up for that. So, and again, Devonda, I love how every time we give a prize away, you say congratulations to the winner. It's awesome. So in any case, let's go ahead and kind of move on. I hope you're enjoying today's event. I just think this conference is going so well, and all the speakers are doing a great job, and I hope you're enjoying it. So in any case, our next presenter is Jeff Kilian. He has a video on our YouTube that's one of our second most popular video that we've ever done. He's been a partner of MetaStock for years and years and years and years. He's going to talk to you today. He's also got a really cool first name. It's Jeff. I don't know if you noticed, but we started with Jeff Tompkins. We're finishing with Jeff Kilian, and I've been hosting all day. It's the day of Jeffs for you. So, but in any case, let's go ahead and bring him on here. Jeff, how are you doing? Oh, I just muted you. There, I'll unmute you, but then you have to unmute yourself again. I should be able to hear you, but I can't. Let's have you talk for just a minute. Yeah, let's see. Yeah, that microphone is not working. Can you hear me? Just nod your head maybe.
Okay, yes, I've got you now.
I can hear you now. Okay, perfect. Let's get you the presentation.
Okay, the first thing I want to say is hello, Jeff Regibby. The name Jeff.
Jeff.
And hello, Kelly Clement. How are you?
Good. We're doing well.
Good, good. Kelly, it's good to hear your voice. I haven't spoke with you for some time. Let me share screen number 4. Please confirm that you can hear me and you can see a daily chart, an end-of-day chart updated in real time for ES and your contract months 12/22. The initial text should be, how to identify with major market turning points.
Yeah. We can see it.
Okay, excellent. Okay, so let me minimize this portion here for a moment with my camera. We have an enormous amount of information to go through in a short period of time. So we're going to get right to it here and cut through most of what the average retail trader already knows and get into a higher level of education to get behind the prices. This is the key here, to get behind the prices, to determine what's really happening in the market. The price action is one thing, and it is very valuable, especially with the volume compared to that price action in the subgraph below, which you're seeing here right now. And so what we want to do, and what has been the original message when we were the Inside Technician 12 years ago and then morphed into the VTCtraders.com, is to provide full transparency to all of our clients, whether they're trading courses or mentorship programs, to be able to determine what is the smart money doing. This is the key here. Find, track, and trade with the smart money. If you're not a high volume trader, if you're not trading in the same direction as these people, then the profits that are coming across the table here are going to become markedly reduced, and you're never going to be able to reap what you could really get out of the market as a person who's a day trader, whether long or short. And I did hear some of those comments from the previous speaker about trading long or short. This is the key here. So every day, what we want to do is we want to identify with what is the current state of the US marketplace. And we'll use ES as a proxy. Although this methodology can trade NQ, YM, ETFs, any market that has enough liquidity, enough uniform price action, right, that actually measures up to a very strict methodology. You, as a retail trader, turning yourself into a high-end retail trader, need to understand very clearly that we're looking for major market turning points to begin with. Now, everything I'm going to teach you in this webinar has direct application to trading in real time. So please note that. And I would please, if you're able to stay till the end of the presentation so you can pick up and use immediately what I'm going to lay down. Okay? So here we are. We're going to fly these ellipses in and look at major market turning points that are based on either pivot point highs, pivot point lows, base formation highs, or base formation lows. Now, most traders know what a pivot point high or low is, so I'm not going to belabor that point. But I will get into something else, such as a base formation high or low. Now, for example, let's just say hypothetically for now that this particular area has an equal high, closing or open price at exactly the same level. So you need at least 2 days if you don't have a pivot point high established in order to be able to determine when or where the market could turn back around, because you're not always going to get pivot points. So a base formation high, right, 2 data points based on either open to open, open to close to close, or close to open, that have set a specific resistance or support level out when there is not pivot point high or low. And this is what we initially want to identify with, and then we're looking for the volume in the subgraph below as compared to the price action to determine when and where we may have a setup for a major market turning point. Why are we looking for this? This is the first thing we want to identify with, because we're going to look for the same thing in real time. When the 15-minute charts are clear, when the 5-minute time frame price charts are clear with short-term and long-term money flow confirming under negative divergence examples, for example, which we're going to get into in a few minutes here, then this is the time we really want to pay attention. You don't have to prove anything to the market, nothing. The market has to prove to you whether it's worth your money, your time, your emotional capital. And this is the way it has to be. And all the webinars, seminars, events I've ever presented, and by the way, one of the biggest, largest viewed webinars is on Metastock. It was many, many years ago. Hundreds of thousands of views. I think it was the guarded secret of the world's greatest traders. The point is this: you find, track, and trade with the smart money. And you find these major market turning points because every trader knows that the largest amount of money to be made is when the market turns around and moves back in the other direction. This is your window of 1, 3, 5, 7, 9 days, possibly, right? So this is what you've waited for. This is what you've worked for. Now you're geared up to take maybe 3, 4, 5 trades, maybe max in real time every single day and make the lion's share of the money. Does everybody understand that so far? You can raise your hands. Okay. So understanding what's happening behind the market is critical because most traders are looking at this and trying to figure out where's this market going to go next. So let's get this out of the way for a moment and move into the next example on a daily chart updated in real time that I want to talk about. Okay. For example, right now, we got major smart money, the largest institutions trading in today, early on, before open equity session, that drove the prices up to one of the biggest days, up days the market has seen in a long time. Obviously, look back, it's not there. Maybe you got some action here, but nothing like this. So again, proof of what you really need to look for in real time, end of day, is the higher contract sizing that's coming in on ES especially. It wouldn't matter to me whether I'm trading ETFs, I'm trading mirror funds, I'm trading mutual funds, I'm trading stocks, individual stocks, I'm going to the group sector rotation process, I'm trading YM, I'm trading NQ, whatever I'm trading, I'm looking at this first before anything happens. Because this is where we're going to extract the majority of its trading intelligence to be able to work off of any other market. If your primary is not ES, then you need to look at this first. So let's do this in more depth right now. You're looking at a POC here, an upside POC. There's actually 2 of them, but the major one came from 9/13/2022. Now, if you look below, 9/13/2022 is this volume spike right here, right? There's a total of 2,394 contracts traded, okay? On the sell-off. So anytime major volume is coming down to the downside here, right? You have a titanium ceiling, so to speak, a point of control where the largest amount of contracts are traded at the intersection of price and time right here that the market will find as resistance unless enough, example, in this particular situation, end of day volume comes in or tomorrow strong volume comes in to blow through it. But that is pretty much exactly where the price is tapped out today, and that's no coincidence. A professional would know this. A professional would have this laid out, no matter what he or she is trading. That number was 39.72, and again, this is ES near contract month 12/22, the correct contract month to analyze technically and trade off of in real time. So no coincidence here. What's going to happen tomorrow remains on the remainder of the end of day indicator formations when the new overnight session opens at 6 p.m. tonight, Eastern Standard Time. We are going through a lot of information, but you can play this back as many times as you need and learn from it and use what we're laying down almost immediately. So now the question becomes, after we've looked at the volumes compared to these prices to determine what the realities are of future directional price movement, let's take a look at when and where there may be substantial volume and when and where there may be a dry up before the market turns back around into the other direction. The thing that I want you to notice here as well is that the market tapped out on 10/13/2022, and it tapped out with a shakeout right below the strongest downside POC that existed from 11/9/2022. Now, as a professional, you'd want to go back and you'd want to look at all these back dates to find out where your POCs were, like here, major volume here, POC here, correct? So this is something that has to be dealt with, and you have to find these levels and broadcast them out into the future so that you know when and where. All right, you may have an opportunity for the market to turn back around and then go long. We'll get into that series of positive divergences that existed at this point, which would have proved to you that the market bias was changing from net neutral, where you can go long or short in real time, now to long per se level 6. And our camp over here, we first established a smart money bias market trading call that can be net neutral, where you can trade long or short off of resistance, right? And then as the market trends to the upside on increased volume And the short-term and the long-term money flow indicators say that we are confirming this volume is coming in is definitely accumulation. We can go right out of that into level 6. There is no 1 through 5. Level 6, and then maybe level 7, maybe level 8, maybe level 9, and a major bull market, right? Or if we're going short, we're at a net neutral, and we're going to go short level 6, maybe 7 and 8. Most of the time, when I'm trading in real time, I'm definitely going to go short because I know for sure that I can make a lot more money trading short than I can ever trade going long. Maybe it's because I want to be a short trader because I'm better at it, but I'm probably better at it because I do know. I mean, that's 30 years of experience speaking here, so we'll just let that go for now. In essence, once you have this squared away, the volume is compared to the prices, and you're pretty sure about your analysis, right? We want to move right into the divergence analysis. So let's take a good look at that for a minute here. The next chart that I'm going to show you depicts the short-term negative divergences that were set up here based on looking at the end-of-day charts. So here's the Chaikin money flow. This is a 21-period look-back computation of what the smart money is doing longer term. Basically, that is it. So when we look at how the prices fell off here, okay, and the question for the example date, the question and date is 8/19/2022, correct? Okay. Look at the major market sell-off that came in here for a series of legs, end of day, where an enormous amount of money could have been made, right? So here the prices are trading up, and we'll get to the volume back in a minute on inflated highs because you don't have any strong volume behind these prices trading up, okay? The volume is increasingly decreasing as the prices trade up. But the long-term money flow says that the strongest point of strength was 7/29/2022. And now the prices are here tapped out. And the second peak here at 8/16/2022 clearly says that there's definitely something going on in these prices, behind the prices, that predicts that a market sell-off can be in play. Now, this is one piece of the puzzle of the equation for the market turning back around. So we have long-term money signaling an entirely different showing as compared to what the market is saying. Here we are. This is exactly where we were on the close of 8/19. And also, if you look even closer, how far down the CMF led below this peak right here, excuse me, this through, which is associated with this price point. So the true value of any indicator, especially in this case, is its ability to lead future directional price movement. And there you have a stellar example of what this indicator said within this very short time frame. Basically, divergence analysis is where you have a lower price and a higher price, a higher peak and a lower peak on the indicator itself. This is the most basic concept behind divergence analysis. In this case, a negative divergence is compared to the higher prices. Does everybody copy that? You can raise your hands as best you can. All right, so after we have this squared away, we want to go right into the other indicators, and this is my actual workspace. This is exactly what I'm looking at on an end-of-day basis, come up with a smart money bias market trading call every single time before I get into real-time trading. So let's take a look at the MFI, and let's see if we can get an idea of what this indicator is saying behind the prices. Okay, in this case, you don't have a negative divergence as compared to the prices. Here's the upsloping trend line applied this way, your point of origin, connect point number one, broadcasted out into the future. And here's the trend line violation on the day in question, again, 8/19. So based on this in isolation, there you are. But look at how the MFI money flow index, a 14-period look back of what the smart money, the largest institutions are doing, right, has clearly stated again. So now we have two different indicators with two mathematical computations, long-term and short-term, saying the exactly same thing, drawing the same conclusion. The trendline violation on the MFI clearly states that it is leading the actual price movement and the close of that session on the 19th. Also, you're through the most recent peak, through, again, that's associated with this price point right here. So leading. So basically, at the end of the day, these two separate examples from two different indicators, long and short term, with two different mathematical computations, finding and tracking and trading the smart money, right, have clearly stated that this is where these guys are already going. They've already gone there. The prices have to catch up. You see, divergence analysis is geared to identify pent-up selling pressure, in this case, that has not yet taken place in the form of future directional price movement. The indicators compared to the prices are here. The prices are here. So we're looking for the opportunity for the pent-up selling pressure, in this case, to become greater and greater and greater until the rubber band has no choice. It has to snap. It can only be taken back so far, and things have to release. So this is the beauty. And I know of no company whatsoever training that has nailed divergence analysis like we do. In our course material and our mentorship programs, we go through this in a very exhaustive manner. Questions asked, answered, given. If it's not right, let's run it again, and let's run it and run it and run it until you get 100%. Because this is the key, not only to determining major market turning points, okay? It is the key to identify the true high probability trades in the making. This is key, definitely key. So here we have the market sell-off that appeared after here, okay? And the indicator keeps moving down and down and down and down like CMF. So what else do we have? In my camp, I'm looking for the CEO, the Chaikin oscillator, and then we're gonna move on, but I have to nail this down. Here's another negative divergence here. Now the CEO, the Chaikin oscillator, is an accumulation distribution mathematical computation that's pegged to the MACD indicator, right? So sometimes you're going to get intelligence out of this that you may not necessarily get from one or the other, or the additional confirmation in this case. And there you have it. So I'm not going to belabor that point. I just want you to know that when you look at this in this context, a looking glass view, three different indicators that are first after the volume is compared to the prices, specifically geared to determining what the largest institutions, what the deepest pockets, what the people that control price movement, manipulate everything from top to bottom are doing in the very near future. Anybody who says they can determine where the market's going to go in a week, 5 days, 4 days, next month, I'm sorry. With the correct application of technical analysis, it's definitely greater than 90% one day, your trading session that you're going to trade. If you have a market turning point like this one, 2-3 days, 3 days outside. If you get a continuation, then maybe you're looking at another 3-4 days, but that's after the fact. I mean, here's your break of the floor right here, right? Where you want to get through. Okay, you're out here somewhere around this level here. Now this is end of day stuff, right? Maybe at around this juncture right here, because here's the culmination of the data points here. But as you move down, there are many other levels like this, right? Like this. And then you have a readjustment here, right? And you're gonna have to wait until you get through this. Then you're in here, somewhere's around here, and you're writing this down, or here, and you're writing this down after these data points have been preached in real time. So this is the combination, the intertwining of all the analysis as we move forward to be able to determine when and where do we have the actual confirmation that we're looking for. And prices never got back above this break point right here on the floor, never, when the prices traded back up. We tested it, but this is the actual open of the down close. There you have it. So that's my point nailed home. So let's take a look at some of the most recent action on the market, then turning around and going long. Okay, let's get back to the volume here for a moment and send that home, because this is where, again, it's all got to start. Here's the shakeout level that I identified with yesterday that came from way back, okay, in 2020. And here you have the market turning back around to the upside. And here we have an opportunity where we might be able to go long based on you trained as a professional knowing where that level was, and it was a major POC to the downside that was shaken out, right? Okay. So here at this juncture, we have higher contract sizing that came in, an enormous amount of contracts traded here, right? And then the prices start to move up. So let's go back and look at some of these charts real quick, and we won't take a lot of time, but even on the MACD, you have a positive divergence as compared to these two areas right here. We'll firm it up. There we are. Higher price, lower price, based on open or closing prices. And here we are. Okay, and that's the last one you'd really want to take a look at. And we're not necessarily going in order, right? Okay, here we are. This, in this particular case, you don't have a positive divergence because this is after the fact way over here is a lower price and a higher price. But what you do have, I'll take this out of here for a moment, which we touched on earlier. Here's your first trend line violation for the early warning again, right? And then we have another one here. Okay. You're also through this level right here. And then you have 3 days of nonstop up. So the short-term money came in first in this particular case to identify with what the smart money was really up to. We take a look at the CMF right here. Okay. Here we have more trend line violations as compared to these prices. Okay, let's just do this. So there's another confirmation right there on this one. So short comes in first, long-term money comes in second. Now we have both long and short-term money coming back into the market on a daily basis. What more does a trader really need in order to be able to make a decision that, you know, it's time to get back in the market, time to start thinking about trading long, right? And short off of superior resistance levels in real time. And then here we are again, last but not least, on the shaken oscillator. In this case, we do have a positive divergence, what we didn't get out of the other two. So in conclusion, short or long, we're looking at multiple negative or positive divergences in multiple time frames based on the look back period of the individual indicators themselves, to be able to determine when and where do we have any real business trading, in this case, short here or long. Notice how the short produced a lot more profits than the long, which is why we want to focus on trading short. Does everybody understand that so far? How are we doing on time? 5:38, okay. Jeffrey, would you please remind me when we get to about 45 or 50, please? Appreciate it.
I can do that, sure.
Thank you. I appreciate that. So, what have we left out? Our tried and true price-based indicator, the SMI Stochastics Momentum Index. Here we have another indicator that is clearly saying an oversold territory, right? And getting up through our proprietary 50 level here that the market should be going long. And this is after you've gone through everything else. So the first thing is the volumes compared to the prices. Come to conclusion. Take that and put it in your folder. Go to the MFI. Come to that conclusion for the session. Put it in your folder. Go to the CMF. Analyze it. Extract as much intelligence out as humanly possible out of everything you've gone through so far. Put it in your folder. And then go to the SMI, then the MACD. This is the correct flow that you need to go through on a daily basis before you consider trading anything. It doesn't matter what it is. We have to know where we stand. Okay. So now that we have this squared away, right, and we understand that this is what we need to do first, I want to take a look at some of the strategies. In fact, the VTC model strategy that is taken close to 25 years to develop, including proprietary indicators, that decide exactly in the moment, in real time, on a 1 minute short, where to be in and where to not be in, and where to be out at a pre-existing price profit target that's laid out ahead of time. So when we look at the possibilities that exist, when you learn how to cross the bridge from your end of day analysis into real time, okay, this is something that is extremely powerful that most traders, they hardly have a clue about. So let's get into that, and let's see what we can accomplish here real quickly, because we do have a time constraint on our ES real-time workspace. Okay. So this is just yesterday, hot off of the press. We have a double top right here on a 1 minute chart. Copy me. We have a negative divergence. Let's blow it up on the SMI, not necessarily going in order, okay? But this time we're in the overbought zone and we're looking to go short, right? So almost a triple top outside of this, a few ticks away from this open and this open here at the 38.34.25 approximated area, and then the prices go short. One thing I want to mention is look at the price chart pattern uniformity on the way up with a dry up of the volume here, because the volume is lighter than what's come in when the prices started to trade down on the increase here. I mean, you need to blow this up and take a look at this. Here's your push up, right? Here's the dry up. Here's some on and off, and here is your sell that came in on the blow up to the upside, right? And after that, here's a continued volume that comes in on the down to drive the prices all the way down to here. This was an incredible move that produced an awful lot of money. And I'm getting into the performance numbers, which I don't think anybody else would do, but that's fine with me, because between today and yesterday, and we have fortunately arrived at the right time at the right place as far as numbers go, and as far as training goes, and as far as you all staying in this room, right, to be able to present something that is timeless. And I'm just going to say, as far as timeless goes, we're looking to be able to use the correct application of technical analysis, in this case, short-term, long-term money flow, not only in end of day, but in real time too, to be able to determine, again, when and where do we have any real business trading. So there's your number, 38.34, right? Take a look at this. This is a 5 minute chart. The prices, the MFI and the CMF. What is it saying before the price is sold off? Look at the strength of this negative divergence. The slope of the line here is compared to these prices on a near double top. Right? Look at how they confirm it. Look at how they continue to firm it. Confirm it. Down, 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 right? Okay. Right here where things tapped out, basically right about there. Extremely powerful, okay? And this is what we're looking at. Now the 15 time frame, both MFI and CMF were clear. This is the example that I want to present to you today, so you can see that what we're talking about is something that you absolutely positively need to learn how to use, interpret, not just follow, but interpret, right? Like you go to bed with it as if it's the only thing that you have to trade off of, right? You extract as much intelligence as humanly possible out of it until you can't get anything else. And basically, when you finish with all your analysis before you trade in anything, in any session, okay, everything is known. We know exactly where we're going to be in. We know exactly where we're going to be out ahead of time. We know exactly what we're looking for to have happen to produce a true high probability trade that better than 80% of the time will follow through. Why? Because this methodology is so strict that some days there is a lot, some days there's a little, maybe in certain cases you're fighting it out. But the good news is that you learn not only to identify with the high probability trades that will follow through, it's the ones that are going to produce shakeouts, because that's what they want. They want you to get in there and take your money at superior resistance and support levels and run those stops. And I've seen them run them. We've all seen them run them. We have a lot of experience, 4, 5, 6 times before they make their move. So you need to learn how to identify with these areas, because the key to risk mitigation, the key to longevity as a professional, it's not just identifying the true high probability trades that follow through, it's identifying with the trades that won't follow through, right? Your greatest positional advantage as a professional is waiting for the trade to come to you. Patience and discipline. And where what we're talking about here is so strict, you really don't have any choice because you know the rules. And if you break them, well, then you have to take ownership of that decision. And it's a hell of a lot easier to trade as a professional when you have this much information in front of you, because there's nothing left to chance anymore. Nothing. So let's take a look at some quick shots here, and then we'll get into a performance screen. I know we're just about there, 5:45. You just need a few more minutes. And I don't know if I can get these in order, but I'll do my best. These are some of the quick shots under the gun when I was trading in real time yesterday that I want you to see. Okay, maybe I have to get this down in order to take a look at this. Let's see. Yeah, here we are. All right. So here's one trade, right, on the long in real time with the SMI and the volume below it. Here's a short, right? Okay, and then we're going long again. After that, I got the short and I got the long. This is a long for approximately 6 contracts, $2,300 right there. Okay. And again, this is a little tough because we have to manage some screens here. Okay. And I think this is the short we were looking for at that point, right here. Okay, this number is about 2175 right there, based on everything that we have just gone through, right? And then I think we have time for maybe one more here. Let's take a look at this one. Okay. Yeah, and here's a continuation for the long. Now this is going to be a little tough to see because, you know, we're doing this on the fly. This profit is around 3,000 right there. 11 contracts traded long because additional volume came in real time to warrant taking a larger position. And this is important to know in real time too. When you're trading in real time, once you get this down under your belt, when you have the market behind you on an end-day basis and you have a great real-time trade setup, okay, and you're at a net neutral, you should be trading more contracts because this is what you're waiting for. So if your minimum is 3, when you get a change, you're going to 5, and then maybe to 7, maybe 9, maybe 11, depends on your account sizing, but there should never be more than 2% risk on any particular trade. That's in my opinion, one of the golden rules, so you don't blow yourself out. Okay, so let's take a look at some of the original numbers that came through early right here. This is right from my sheet here. Total net profit is $39.75. Okay, the loss was $900. Okay, and as we went through the day and there was more trading going on, and another trade that I didn't have time to shoot. Okay, this is where we wound up for the session. I haven't shown these numbers before. Okay, $13,500. Okay, with a $900 loss. There's basically 5 winning trades and 1 losing trade. Okay, all right. So let's get this back out of here. And I mean, those are strong numbers, but I've been trading almost 30 years. I can trade more contracts with confident conviction because I'm the creator of this methodology, right? Okay. So now, is there anything that I've left out before? Oh yeah. So those are the numbers that you just saw. Now today's action, where you had serious smart money come in right here, okay, which again is a perfect example of how they manipulate what they do. I mean, you're talking right here at around this juncture, right? Prices are trading in a neighborhood, right, of around on a closing price, 37.65. And all of a sudden, major contracts come in. Look at the sizing. You haven't seen that since the market sell-off that penetrated the downside POC, all right? You haven't seen it. It's not there. You can look for it, but you won't find it. There we are. It drove the prices up so quick, almost no traders could have caught that unless you were some of the best within my camp here. So that was yesterday's numbers. If you look at what we were able to catch today, including some in and outs, right? Some longs again, after we got some of this, and you add it all up, right? To where you're looking at the end result of 2 days work, right? Okay, one moment. I'm gonna get this right in here so everybody can see it. And then we'll talk about a special offer that we have that is gonna help you to cut through most of the chase, right? And get down to business about what it takes to really become a professional. So here's 88, 89. Here's the actual number coming from my workspace. Here it is. All right, not a screenshot. 13,562.50, right? And a $900 loss. And then we move into today, Thursday, and we hit it. Over $40,000. See that? One losing trade. You can't deny that. You can't jump from one day to the other and have consistent winning trades without the performance sheet showing what you've done. Now, nobody would expect that anybody new would come in and duplicate what I can do. There are people who can, and some are better than me on any given day. But the thing is to go through the steps. Everything in life is a process, people. Everything in life has to have a progressive nature, and we're talking about a structured, learnable, and repeatable process. So while we're on that note, I'd like to fly in. Here we are moving around on 4 monitors here. And I want to get a link in here right now to this area. Jeffrey, if you could let me know I've got this in the proper area, that'd be great. I think I do. There we are. This is a special page that was created, a promotional page that was created for Metastock people who are in this webinar today to be able to pick this course up. It has direct application, again, to trading any market. It has direct application to any trading program because the majority of the indicators are already included within those programs that 99% of the traders are using today. I know that we're working with Metastock right now with Jeffrey Gibby to take the proprietary indicators that we have written in another program and extrapolate it into Metastock and a few other things as well. And this is going to happen very soon. So this is something that is critical to long-term success as a trader in real time. If you want to be an expert market timer, then this is a course for you. This is a course that needs to be able to be taken in order to be able to master the expert market timing process, no matter what you're trading. Again, whether smear funds, here's a picture of it right here on my monitor. Jeffrey, can you see this okay?
Yes, and I did put the link into the entire chat for you.
Okay, well, thank you. I appreciate that. So again, you're looking at getting the information, the right information the first time. I'm not going to try to sell anything like maybe a lot of people would. My goal is to inform. The people that are supposed to come on board are the people who will. It's that simple. There's 7 hours of 30 years of accumulated trading intelligence within this course that nobody else will teach you on the web. We're confident of that. Module 1 is the critical nature of volume. Module 2 is the key indicators that you want to follow, most of what we covered today. Advanced trendline applications, excellent module. Fading the largest institutions, module 4. Module 5, divergence analysis, nailed. Number 6, module 6 is putting all the pieces of the puzzle together. And the trade example here, you can see for 5,100 outside of what you saw today, risk control. And module 7 is crossing the bridge into real time. Let's be honest, there's no one single trading course that can turn even a great retail trader into basically an institutional trader under a retail trader name, like a single lone trader or traders, partners, right? This comes about as close as you're ever going to get. The real-time training will come within an executive mentorship program, okay? And that's another level. My pricing is, I mean, as far as mentorship programs go, is way lower than most, and they don't give you half of what you're going to get here. You know, there's a certain process is followed here. It's like an hourglass. You turn it upside down. All the grains of the sand want to get to the apex at the same time, but that's impossible. So we have to go through a structured, learnable, and repeatable process, because this is something that grows and grows and grows and grows. So the original price of this course back in, wow, years ago, after the major market saw off in 2020, was $24.97 live. The website price is $14.97. The non-published special offer for here today, right, is $9.97. The testimonials are there. You know, everybody has those. Ours have been signed up by our clients. I work with Larry Jacobs for 8 hours because he wanted to make sure that I knew what I was doing before he introduces people to what we can offer. So, other than that, I think that's the majority of it. I'm probably forgetting a few things, but if we could please leave this room open for maybe another 10 or 15 minutes for the attendees to be able to get through this link, look at this course, and purchase it, I would really appreciate that. And the last thing I want to say is, not least, in a very big way, I want to thank Jeffrey Gibby very much for the opportunity to present to your people. I want to thank Kelly Clement as well. Thank you, Kelly, for the opportunity to present. I want you to know that in a world that has changed considerably since I was young, and we all know what those changes are, there's not many positive things coming across the table. Words like transparency, ethics, honesty, fairness, right? They still live here. They're still here. And they're not going anywhere, because this is, in my opinion, the most important thing to establish trust, to establish respect, to establish a direct line of communication that's based on those things, where a client can come in with a course or a mentorship program and say, okay, I have got the right people. I have it. Nobody's got 160 real-time trades in the moment as we're taking non-edited on YouTube. Nobody. Why? Because they can't do it. It's impossible for them, but it's possible here. So as far as the giveaway goes, we're rolling some of that around. Everybody's going to receive something worth quite a bit of money. And so we will tailor something to what we've done today that can augment, enhance what we have presented. And I think I'm just about done. Jeffrey, do we have questions? Anything you'd like to say?
Yeah, here we got some questions. Michael wants to know, the divergences on a higher time frame, are these more important to take into considerations than ones you might find on a lower time frame?
Okay, the longer time frame, like for me, I had to put divergences into categories. So 1 to 31 is short term, 31 to 91 is intermediate term, 91 and onward down the line, you know, maybe 181 and downwards is long term. So the longer term divergence, in this case, negative divergences, reflect a longer term perspective of pent up selling pressure or buying pressure that has not yet taken place in the form of future directional price movement. Intermediate term negative or positive divergences would be something that you want to pay more attention to, because in many cases you may get an intermediate term as a primary, and then you get a secondary out of the short term. So then we have multiple negative divergences as the prices continue to trade up, for example, Michael, on inflated highs, right? You get the intermediate and get short term. Every time you get two short terms before the market slams to the downside, like 2020 was so clear, you couldn't miss it. And by the way, this course goes through a complete walkthrough of that major market sell-off in 2020. This is something I forgot to mention, right? So when it happens again, and it will happen again, you'll know how to take advantage of it. I hope that answers your question. Ready?
I'm not. Let's see. I thought that's a very good answer. Lisa has had some really good questions today, but she says, did you say already, after you determine market direction due to smart money, do you prefer to day trade, swing trade, or short-term position trade?
Okay, good question. I day trade. like maybe 15 years ago, I think I was still trading stocks at that point, doing the sector rotation analysis, the sector, the group, the subgroup, the individual stocks, gaining stocks, so forth and so on. But what happened is that there was, I think it was a total of 3 occasions where I was way in the money. I was way up, and then the market gapped in the opposite direction. And I gave back about half of what I made, and I said, this doesn't work for me anymore. I have to find a better way to do this. So that's when I started to investigate ES, YM, and Q, whatever. And, I went with ES for many years. I got out and then got back into ES. And so to answer your question, specifically, go for the expert market timing model that this course will teach you, and use that as the proxy, as the most important information to trade ETFs, funds, individual stocks, whatever you want. And as a matter of fact, you could even create an individual workspace of every single stock. Let's use that for an example for now, and put all those end-of-day charts set up within that particular workspace of that chart. So you can know exactly where that chart is on any given day, the culmination of the analysis of those charts for that particular stock, right? Including the overall market, smart money bias market trading call. That's what I used to do. I hope that answers your question.
Yeah. Let's see. Michael wants to know if if the trading includes any recommendations, emails, or calls.
No, we don't have a recommendation service because we did that some years ago on a test, and the results are people who haven't been fully trained, so they don't know what they're trading off of. So there's an accountability portion to that I didn't even want to get into. We have people risking money on not enough information is bad karma. My life is good. Everybody's good over here. And that's why we don't do it. It's better to understand yourself, be trained yourself on exactly everything you need to do, so that when you're going to trade, you trade with confidence, conviction. Because if you're trading off of calls from other people and you don't know what you're looking at, you're going to blow yourself out and you're going to lose money. And then you're going to keep going through the same process. It's the latest system. It's the latest indicator. It's the latest this and the latest that. It doesn't last, especially in different market conditions.
Okay. Bill wants to know, is Jeff's training applicable to underlying securities other than E-mini? So does it work with stocks?
Absolutely.
ETFs, futures, FOREX?
Yeah, and I think I explained that before, but I'll run it down again. Let's say you're trading Apple, for example, right? You're going to create a workspace of Apple, and you're going to have all these end-of-day charts in it that I just went through for the end-of-day analysis, right? On Apple. So Apple has volumes compared to its prices. It has MFI, has CMF, it has CO, it has the SMI, and it has the MACD, right? All in one workspace just for Apple. And that's the end-of-day analysis. After you've looked at ES, you go ES first, go through the whole process like I explained, go into the individual workspace of Apple. After you have come to a conclusion on your end-of-day smart money bias market trading call, right? Because that's first. Then you get into your end-of-day workspace, hopefully updated in real time, which is what you really need if you want to separate yourself from the pack, right? And go with that. Then you create a real-time workspace, which will.
How about non-real-time trading? For those people that want to take more of a position approach, maybe they trade, maybe they work during the day, and want to be able to take a kind of a more relaxed approach. Would you say that it works for more position, non-real-time trading?
Absolutely, because I did the same thing when I was trading stocks, even though it was a sector rotation thing, right? So you could have stops in at certain price profit targets that are laid out ahead of time. You could have your ins and you could have your outs set up ahead of time, right? And so if it goes in your direction, you're good. If it doesn't, then you're out. If it keeps going, then you're out at an existing price profit, predetermined price profit target. So to answer your question 100%, absolutely yes for position trading, because I was a swing trader long before I ever got into real time, holding positions 3, 7, 9 days. Yep.
All right, last question. Michael wants to know, are normal divergences more important than hidden ones?
Normal divergences more important than hidden ones?
That's the question, yeah.
Wow. Well, technical analysis is visual analysis. So any divergence, there can't be hidden divergences in a nutshell. They have to be laid out on your charts, and you have to be able to see them so you can make the relative comparison of those divergences to the prices or vice versa. And this is the reason why we do it like this. So nothing is hidden. Everything should be fully displayed, fully transparent, so you can get the intelligence that you need out of it. I hope it answers your question.
All right. Thank you, Jeff. Appreciate your coming in. Any any final thoughts?
Final thoughts? Yeah.
I guess.
Do I have a couple minutes?
Sure.
Couple, two, something like that. Okay, listen. I guess the last thing that I'd like to say to everyone is, you know, I don't want to be the guy that harps on what everybody knows, but sometimes we have to face the truths about life, where we are, where we want to go, and what it takes to do that. You know, any person who's gotten to a really high level, they've gone through the gauntlet, and they have been mentored. I mean, it was Michael Jordan, if it's Tiger Woods, if it's Greg Norman, if it's anyone, right? They've all had somebody who's taken them under their wing. Unfortunately, for me, I didn't have a single mentor. When I was starting out almost 30 years ago, I was working with people like, you know, Murphy for a short time, John Murphy. I worked with Al Campora for a short time. I was talking to Jack Schwager. I was talking to all the greats, anybody who would listen to me. Tom Borovic, basically is where I started out with divergence analysis, studying with him. You know, I was back in the trade station days, Bill Cruz. A personal friend of mine to this day is Sam Tennis, who wrote the book on, you know, on coding for that. Even though I'm way past that now. You know, there was a certain mold, is my point, of people at that time who were willing to do what they had to do in order to change their lives. There's a sea of money to be made out here, people. A sea of money, as you've seen today. It depends on a decision. You're going to have to make a decision about your life and stick to it so that you're able to get into this business. Even if you're working full time, what do? You pick up a course, maybe you go through a program here, and you start studying, and you stay magnetized to your goal. I have a lot of developmental training, which may be shining through in this particular webinar, and I honestly care about people. I want people to be successful, especially good people, not greedy people. And when they get the information and they run with it and they make a lot of money, the only thing I ask of them is, when you get a chance, help somebody out who's down, right? Maybe in another way, and give it back. And so we have to take massive action for our life. I read Think and Grow Rich 100 times because the guy told me to, and I underlined every part, I highlighted every part. But you know, at the end of that book, what it was missing was Think and Grow Rich. No, think, take massive action and grow rich. Because without massive action, taking action for your life, it's not going to happen. It's always going to be a dream. And at the end of the day, when we're old and gray, so they say, regrets come in. Is this something you want to regret? I don't think so. I didn't want to. And it's easier now because we have webinars. You have people like me, not many of them. I know who they are. It's maybe a couple across the globe, right? Who are willing to disseminate the information for a lot less than most would. I mean, you got mentorship programs that are charging $15,000, $20,000, right? And trade a hell of a lot less than that here, a hell of a lot less, and you get a lot more. And I don't know what else to say. I wish all of you luck across the globe who've taken your time to come in here and stay with us for as long as you have. It's been my pleasure to present. And once again, you're going to get the right information the first time. That's it. So
awesome.
Thank you for the opportunity, Kelly, and thank you for the opportunity, Jeffrey.
You bet. Michael says, great session, great advice, excited about taking your course. So there you go.
Okay.
Want to say thanks for coming in and spending an hour with us, Jeff. We appreciate it.
You're welcome. And when we get the list of the registrants and the participants, we will get that offer out to you. Don't worry, it's going to be a good one. It'll be a slam dunk, and it'll help you right away with your trading. It'll be something you can use right away. Thank you again for everyone. Have a great night wherever you are.
All right. Thanks, Jeff.
You're welcome. Bye now.
All right, let's go ahead and hope everybody's doing well. Let me go ahead and we'll kind of switch over here, sharing. Let's go ahead and make me the presenter here. Okay. Tomorrow, let's see. You should be able to see my screen. I'm sure the control room will let me know if there's issues. Tomorrow, we're going to wrap it up with Daniel Sinek. He's going to come in at 8 a.m. Eastern. We've got Kevin Nelson, Mark Leibovit, Ed Downs, Norm Hallett, and Ken Calhoun. So another great lineup, another great day full of good presenters. I hope you've been enjoying everything. Thank you for coming in. Let's see. Let me go ahead and close this out. One last thank you to Stocks and Commodities, our sponsor, CMT Tyler, for his presentation today. And again, if you want to take advantage of any of the offers on Metastock or the products that we have, get in touch with us. Again, there's a reason Metastock's been rated #1 in its price category for 29 years in a row. That's because it can help you scan markets, test trading ideas, forecast the markets, give you real-time alerts, commentary, and signals. All of this starts at $59 per month. You can buy a month. We'll give you a second and third month for free. So get set up for it. Metastock.com/conf promo, metastock.com/sales-chat, or 800-882-3040. I want to say thank you for coming today. Hope to see you again tomorrow. Thanks, guys.
Hi, Kelly Clement here from Metastock. I hope you enjoyed today's video, and I hope you found it instructive and informative. If you did, what I'd like to invite you to do is go ahead and like and subscribe. Like the video, subscribe to the channel.
Hi there.
It helps
Greg
us
Lewis,
a great
Metastock
deal,
Software.
and it helps us bring
As the
you more
marketing director,
awesome
I get
content
asked
like
all the
today's
time,
video.
what is Metastock?
So go ahead and like and subscribe.
How can I help my trades?
And keep on
well,
watching.
Stick around for about 3 minutes, and I'll tell you.
Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like,